Chairman. My name is Sheila Weinberg. I'm the founder and CEO of Truth in Accounting. I anticipate my comments will go a little longer than 10 minutes and maybe a minute or two over. At Truth in Accounting, we were very pleased when GASB finally required state and local governments to report their pension and retiree healthcare liabilities on the face of their statement of net position. We felt this would allow the users of the governmental financial report to understand the financial consequences of their governments so they could be knowledgeable participants in tax and spending policies. But when we and our followers started to present the government-wide numbers to elected and other government officials, we were told that's not how government accounting works. We were told governments manage operations and prepare budgets at the fund level, the general fund being the most important one. One of our followers attempted to point out to her city council her government's unfunded pension liability as reported on the government-wide statement. The city's finance director countered that governments don't focus on those long-term liabilities, and she would never understand fund accounting. We were told in Colorado when the pension liabilities started to appear on government-wide statements, accounting firms who worked with local governmental entities were telling their clients to just ignore those numbers. We thought we could use the losses reported on the government-wide statement of net activities to counter government officials' claims of balanced budgets while debt was going up, including unfunded pension and retiree healthcare liabilities were increasing. We were told to look at the general fund statements, which reported the general fund balance had increased, so they had balanced the budget. We found that when government officials reported positive general fund balances, elected officials used those extra resources to provide compensation and other increases in spending, despite the fact that the government-wide statements indicated large unfunded pension and retiree healthcare liabilities and large negative unrestricted net positions. We found not just in Illinois, but in other states, the state sets minimum levels of reserves for local governments to maintain. Those reserves are based upon the general fund balance reported in the governmental fund statements. A local government can meet those minimum levels by just underfunding their pensions plans, and the vast majority of governments operate their retiree health care and systems as on a pay-as-you-go basis, because if they pre-funded those systems, their reserve level would go below the minimum. Our frustration over governmental officials and others using governmental fund statements to indicate their budgets were balanced, their financial condition was fine, they had reserves, was heightened on January 23rd, 2019, when we read in the Chicago Sun-Times headline about Chicago's public schools, quote, CPS finishes the year with budget surplus just in time for CTU contract negotiations, CTU being the Chicago Teachers Union. The article noted, quote, the district ended the 2018 fiscal year with a $342 million surplus left over in the CPS's general operating fund. The first time in 3 years the fund had concluded in the red. The CPS comptroller, Melissa Gilgard, told the board of director members at a committee meeting on Wednesday. Keep in mind this surplus existed only because CPS only funded 60% of their actuarially determined contribution. If they had fully funded the contributions, then the general fund would have shown a deficit of more than $400 million. The article quoted the Chicago Teachers Union president saying, quote, the district was clearly saying, we have more money, more resources. The CTU president emphasized, our expectations are that if there are resources, those need to find their way into the classrooms. Based upon this reported general fund balance, CPS and CTU negotiated a 5-year contract amounting to $1.5 billion, including salary increases. Evidently, no one paid attention to CPS's government-wide financial statements that reported a $12 billion net position and a negative net position of $14 billion. Another frustrating headline appeared on August 29, 2019, from a press release from the Illinois Comptroller, Susan Mendoza, which read, quote, Illinois cuts its deficit in half in 2018's annual CAFR shows. The general fund deficit reported on the governmental fund statements was reduced by $6.8 billion, but keep in mind $6 billion of that was from, quote, general operating bonds issued. The press release from the top financial officer in the state failed to mention the government-wide statement of activities that reported a $6.2 billion loss. You could say that Illinois is an outlier, but I would say that Illinois is a leading indicator. We found story after story from Colorado, California to Texas of governments claiming surpluses while their government-wide statements reported negative unrestricted net positions. In these hearings, GASB members and staff have highlighted that GASB doesn't set budget standards, but as noted on your website, quote, statements issued by GASB are designed to provide information that is useful to related decision-making. The budget processes are government's largest financial decision-making processes. I would think you'd want the information in the financial reports to be used during those processes. Because those processes focuses on budgeted funds, complete and reliable information must be provided at the fund level. 49 of the 50 states have balanced budget requirements, as do 75 of the most populated cities. As GASB Statement Concept 1 states, the board believes the intent of the balanced budget laws is that the current generation of citizens should not be able to shift the burden of paying for current services to future taxpayers. Concept Statement 1 also highlights, in short, financial reporting should help users assess whether current year revenues are sufficient to pay for services provided that year and whether future taxpayers will be required to assume burden for services previously provided. The short-term prospective financial statements do not provide information regarding whether the government lives up to the intent of the balanced budget laws. A user of the financial report cannot find financial statements that indicate whether the budgeted funds were balanced while current services were pushed on to future taxpayers. And keep also in mind, even though you don't set budget standards, some governments like Illinois and New York City think that those were the gold standards and use those for budgeting. In the board's misguided attempt to create another definition for accrual accounting, it is trying to find an arbitrary cutoff date to determine when a transaction should be recorded based upon when it is paid. This reminds me of someone saying they are a little bit pregnant. Either you are pregnant or you're not. It doesn't matter when you plan to deliver. The definition of accrual accounting is clear regarding when and how a transaction is recorded. It is at inception, when it occurs. This whole discussion is nonsensical. You can't decide when to recognize a transaction based upon when it's paid. This is simply not how accrual accounting works, and you should not be trying to make it work that way. By providing politicians who have short-sighted financial decisions help get them reelected, giving them short-term financial statements which they can point to indicate that they are making good decisions is a major problem. This is true, especially if you don't provide corresponding statements that provide a complete and full, reliable accrual financial picture at each fund level. During these hearings, GASB members and staff have asked people why people don't use the information provided in the government-wide statements, which show the long-term liabilities. To answer that question, I would ask the following questions. If you give someone two different financial measures and one makes them look good, guess which one they're going to use? If you provide them a balance sheet that indicates a positive general fund balance, it doesn't matter what the other statements report. Even if they're huge liabilities, guess which statements they're going to use. If you provide them with financial statements that indicate their general fund and other budgeted funds were balanced or ran a surplus, it doesn't matter if you provide a reconciliation to the government-wide statements that show the government lost money that year. Guess which statement they're going to use. What is so special about governmental funds that GASB can account for them, like the consolidated statements and like the business funds? Accounting should not be an a la carte system where you can pick and choose how to handle transactions depending on the type of entity you are and the outcome you want the numbers to present. You can't choose to use one set of rules for the government-wide statements, one set for the proprietary statements, and another set for the governmental fund statements. Accrual accounting should be accrual accounting. A balance sheet should be a balance sheet. Revenues should be revenues. Expenditures are not expenses. Keep in mind the proprietary funds don't have a reconciliation to the government-wide statements. Neither should the governmental fund statements, because there should only be one perspective used. I urge GASB to reduce cynicism and mistrust in government by bringing common sense accounting to the governmental fund statements so citizens understand the financial consequences of their elected officials' budget decisions. And Mr. Chairman, I welcome your questions.
Thank you, Sheila. We appreciate your comments and appreciate your passion for using accounting to better government. So Brian has the first question. Go ahead, Brian.
Sheila, thank you for being with us here today. You've testified before us previously and devoted a lot of time to this process of improving governmental accounting. In the interest of full disclosure, I'm a former Illinois government finance officer. Worked for 20 some years in local government finance. And as I think about your comments, first, I guess I would point out that our intent is that the financial statements be for the sophisticated or the educated user. The MD&A is for those that are not as knowledgeable. And as I was a finance officer, I felt that it was important to have both perspectives and explain that to the council that I was serving. Do you think at all that by taking away, so to speak, or getting rid of that short-term perspective, that in a sense we might be diminishing transparency? Because from a managerial standpoint, I personally found it helpful to have both perspectives. But you see that as harmful. Do you see any less transparency by taking away that shorter term perspective?
What I would recommend is to, again, go like the proprietary funds. The proprietary funds have a full accrual balance sheet. It has a full accrual, in essence, income statement of activities, and it has a cash flow. I would recommend that at the governmental funds level. If you want to, I would be willing to compromise and say, if you want an inflows and outflows statement in addition to a full accrual balance sheet, in addition to a full accrual income statement, then yeah, that would be complete full transparency. Again, I can't go to a government, our followers can't go to a government and say, nope, you really didn't balance your budget. Look, we have a statement here, your general fund was not balanced, because that is done only on the short-term basis. And they can balance that budget, as you know, by passing, promising pension, retiree healthcare liabilities, and pushing those on to future taxpayers, which is totally against the intent of their balanced budget requirements.
Maybe just a follow-up for your consideration. We make governmental accounting standards for all types of governments, very large to very small. And having done some work with small governments, I kind of wonder about their capacity to do some of the things that we're talking about here. Some of them have one finance professional, if even that. Do you have any thoughts about how these smaller governments might implement something like you're describing?
Well, I'm a little curious because they implement that with the business funds, the proprietary funds. It's no different than that accounting. Also, with the smaller governments, I've heard that they actually hire an accountant to prepare their financial statements. And the other thing is, I really think that it is kind of nonsensical to argue that the governments don't have the capacity to account for the transactions that they have incurred. Maybe we should promote that they shouldn't incur transactions that are difficult to understand. Don't incur pensions that are hard to, you have to get actuaries involved. Maybe handle things on a financial basis and plan. Years ago they didn't, and the reason all this got set up is because they didn't have these long-term transactions, and governments, instead of saying, no, we shouldn't have these transactions, we should go ahead and say, oh, hold it. I mean, instead of having these transactions that we can't report, maybe we just shouldn't even enter into those type of transactions.
Thank you so much for your insights, ma'am.
Thank you, Brian.
So Sheila, I want to explore a little bit more. You talked just a minute ago about the potential for, if we want to keep this short-term perspective and have an inflows and outflows statement, or even a cash flow statement for the governmental funds, maybe in addition to these full economic resources, long-term perspective fund level statements. If we went down that path, what would then prevent a government from saying, well, I'm going to budget, because they don't budget on a GAAP basis. And if they do, it's modified a little bit, but from using that flow statement or that cash flow statement as the GAAP that they use to budget, in which case we're really not changing. We've got now this additional set of statements, these governmental funds on the long-term perspective, that just like the government-wide long-term perspective statements, apparently nobody's using, right? So what would, if we did that, what would prevent that from happening? And it doesn't seem like it might solve your concern.
That again, as you say, you don't set budgeting standards. You do happen to accidentally set budgeting standards because some governments actually use those. But they, at least a user of the financial statements, would be able to go to those full accrual statements and say, well, hold it, you said you balance the budget, but this full accrual statement, which is done like most people understand financial accounting, shows a loss. Right now, we can't do that. They can just point to the governmental fund statement on a short-term perspective. There's no counter full accrual income statement that allows you to highlight that, no, you did pass in the general fund, in the budgeted funds, you pass current cost on to future taxpayers. Those budgets were not truly balanced.
I mean, they still would be able to. They would be able to say, look at this flows statement, it was balanced, or look at this cash flow statements, our inflows and outflows, whichever version of the statement you use, it is balanced. And that could be what their budgetary policy is. I guess I'm a little, I understand what you're saying about the government-wide statements, but I haven't given up hope that people will use them, right? And I see that some people do use them. And I still have the same concern, I guess, that if we created this governmental fund long-term perspective statement, it would just be one more thing that isn't used. If they don't care about the government-wide statements, they're not going to care about these if they still have something to hold on to, I guess. I'm following through with your logic. So I guess I'm not convinced that that's.
And then I would be happy to take on the mission, which I've been trying to take on, of going to the governments and saying, hey, yeah, you say that on a cash flow, inflows, outflows, you're balanced. That statement shows you are, but the intent of your balanced budget requirement, the reason you have it is so that you don't push current cost onto future taxpayers. So you live within your means. Here's a statement that shows all the cost, all the full accrual cost that you have incurred, and your statement is not balanced. And again, at Truth in Accounting, we would be happy to fight that fight, but we can't fight that fight now because there's no statement that I can point to that says your general fund on a full accrual basis was not balanced.
Well, accountability is part of our, goal for financial reporting. And so we appreciate anybody that's helping with education and trying to include that accountability and hold governments accountable, because that's what the financial information is meant to do. So we appreciate you working currently and in the future in doing this. Thank you. Jeff has a question. Jeff.
Good morning, Sheila. Thanks again for being with us today. I just wanted to follow up on a thought that you mentioned a couple of times in your letter, sort of this notion of comparing governments to business, and why full accrual is used in business, and what business could ever operate this way and stay afloat. But there are some pretty fundamental differences, right, between governments and business, right, in terms of the notion of full accrual. For example, their ability to maintain themselves in perpetuity, right? So when you're looking at full accrual and you're thinking about what those full accrual statements would look like, how would you handle a government's future tax raising capability, right? Because even a government that goes bankrupt, like Detroit, right, they're still collecting taxes. They still will be able to collect taxes. Will be able. So you're comparing their long-term liabilities, monies they'll have to pay many years in the future, but you're not reflecting the money they will collect in the future. So how would you want that to be included? Would you not want that to be included, and why?
And what I would say to that is governments, they can go out of business. It's not likely here in the U.S., but they can go bankrupt. They cannot provide, services and benefits that they should be providing. They can get rid of, pension liabilities. Also, I'm not saying include the long-term liabilities that we're going to incur in the future. I'm just saying include, which we do at the governmental wide statement, just include what we've incurred to date. And, in the federal financial statements, there is a comment which, you can put in that says, we do have the power to tax. But again, full accrual is a government's financial picture at one point in time. And to have a balance sheet that does not include, I can't even believe, my head just almost blows up when we have a balance sheet that does not include long-term assets, long-term liabilities. It just is nonsensical. And so, yeah, governments, you say are different, but, they shouldn't be in the business of, they may not make a profit, but they shouldn't be in the business of losing money. That's why they have balanced budget requirements. And again, for accountability, we want to understand how much, you mentioned it in your concept statement, how much costs have been pushed on to future taxpayers. We need to know that number. And in our financial state of the states and financial state of the cities, we call our unrestricted net position money needed or available to pay bills. And, people therefore could understand they can do, and I think we even mentioned in reports, they can do that two ways. They can either raise taxes or cut services and benefits. So, people know that option. Also, regarding, that these statements are for sophisticated users, then why are they addressed to the citizens? We need to make them so people can understand them. And that's what we try to do at Truth in Accounting, but it's almost impossible if we don't have a full accrual. General fund, the funds that they budget, these are the funds that they make the most decisions on.
Thank you.
Thank you.
Jim.
Good morning, Sheila. Thank you for being here. Thank you for fighting for what you believe in. My question is more of a philosophical one. Is at the root of what I hear you saying seems to be a fundamental difference in how you believe a government should be managed versus how governments traditionally have been managed. In other words, they have traditionally been managed on more of a short-term basis, fund by fund, instead of enterprise-wide. And if you were managing enterprise-wide, you probably would be focusing on longer-term impact, or if you didn't focus on it, it would become apparent, much more apparent over time. So I'm wondering if what you're really advocating for is a shift in the paradigm of how governments are managed, and accounting facilitating that shift in paradigm. Is that correct or not?
No, I just want the citizens to have the information they need to be knowledgeable participants in their government. They need to know if, when we budgeted, did we meet that balanced budget requirement? You know, did we pass current cost on to future taxpayers? You know, go ahead and budget any way you want to, but in the financial statements, we should have information that meets GASB 1's concept statements, you know, objective, which is to determine whether current costs have been passed on to future taxpayers. And, you know, you can, I'm just trying to, again, provide information to the citizens so they know that to be a fact or not. And to have financial statements without counter financial statements. And again, I would say don't provide these short-term prospective statements to elected officials. But if you do, give me at least a counter statement that I can say, no, you know, yeah, they might have budgeted that on a cash basis, but you have a balanced budget requirement for a good reason so that they don't incur current costs and pass it on to future taxpayers. Here is the amount of costs that they have incurred and pushed on to future taxpayers.
Thank you.
Alan.
Good morning, Sheila. Thank you for being here. And I'm going to ask a question that kind of, you may have just answered it, so I apologize if you feel like you did, because I don't mean that to be the case. But as you may not know, I spent the last 9 years as the state controller for Georgia. And one of the things I know that when we go through the budget process is, number one, we're not allowed to use GO bond money for operational expenses. They can only be for capital. One of the very first things we find when we do our budgets is we go find out what those pension contributions need to be, both for teachers and for employees. We go find out what our bond payments need to be. We go find out what our contributions to, let's say, our state employment benefit plan need to be. We put those on the table and we do not touch them. And then we figure out how we're going to budget the rest of the money. And we do that even without the, as you say, rightly so, even without those numbers being, let's say, on the fund statements. And Georgia did it that way, and they did it the way the whole time I was there. So I just wonder if this is a function of, and maybe you said, of people not wanting to really do it that way. So they're going to find ways to do it a different way, budget a different way, and they're going to find ways to not include those things in their budget, and then use maybe the reports as a way to justify that versus, so essentially they're not doing the conservative, prudent financial way of balancing their budget from day one of putting those things on the table. And they're just choosing not to do that. Because, I mean, in Georgia, again, we don't have those numbers in those statements, but they get those numbers. The very first thing to do is go get those numbers. And then those numbers are almost, you can't touch them. And so I just wonder why Georgia can do that and then use those numbers always and not touch them, still without those numbers in the financials, but then in Illinois or another city or county government who also doesn't have the financials, just chooses not to go get those numbers. Is that behavior or is that the report?
I think it's a combination of the two. If you provide, you know, if somebody's addicted to sugar and you provide, you know, keep on giving them cookies, they're going to eat the sugar, the cookies. If you provide them with only short-term perspective at the government fund level, and they're, you know, like Illinois politicians, I hate to say, they're going, and others in other states, they're going to use those. I commend you for doing your budgeting that way. But one thing that is detrimental to you when you do that is you have more cost. You have more, you know, you're fully funding, in essence, your pensions. You're not including loan proceeds as in essence, revenue. Illinois, on their budget documents, has under revenues loan proceeds. And you're not doing that, but your governmental wide statements out in, the expenditure section includes the contributions you're making, where other governments can choose not to do that. So your expenditures actually look more, higher than governments who choose not to do that. I don't think Illinois is an outlier. I think, OPEB, retiree healthcare benefits is a perfect example where governments, most of the governments we do our reports on do those as a pay-as-you-go basis. Those are not included in the budgets, and those should come up. We should have statements on how much retiree healthcare benefits you are not pre-funding. But again, because governments don't, and if you guys want to fight the fight and go out and tell governments to budget at the government-wide level, okay, we'll join you in that fight, but they don't do that. So we have to, as you say, we have to live within the fund structure that they have.
Thank you, ma'am.
Diane.
Thank you, Sheila, for being here, and I appreciate what you have to say. I was just wondering if there's something, so we have that reconciliation in the financial statements between the government-wide and then the fund. And so often that reconciliation is just passed over. And I'm wondering, is there something we could do with that reconciliation as far as changing the format, changing the way it's presented, that would provide you a mechanism that you could point to that and say, wait a minute, you may be following these fund statements, but look at this specifically and how it impacts the general fund. And it would tie that together for you. And I'm just wondering if that would be a way forward.
Again, ideally, I would like a full accrual statement of activities. If you continue to have a different perspective for the fund statements, which I would not recommend, or if you don't have this accrual, then if you go ahead and on the reconciliation on a fund by fund level, do a reconciliation. So I have it for the general fund, I have it for the road fund, I have it for the education fund. Then that would be helpful. And also, again, if ideally, you would do what we're recommending, but if not, then we would, go with the alternative view that was outlined in the, as short of that was outlined in the exposure draft.
Thank you.
We're at the end of our time, Sheila, but I wanted to ask one follow-up question. If we did something like Diane just described, we have this fund level, what about depreciation expense? So long-term assets, are we including depreciation expense in each of the funds? And as a result, are we having to budget taxpayer dollars to balance the budget to include depreciation expense? That's what they do in Australia, New Zealand. They do full accrual budgeting, full accrual accounting. They don't have government accountants and private sector accountants. They have accountants. And I don't think, unless we have a very good reason that we, a very good reason to not do the accounting on a full accrual basis, that we should do it that way. The problem, ideally on the government, if you didn't, what I'm looking for on the balance sheet, and again, please do not call it a balance sheet if it does not include the long-term assets and long-term liabilities. But if you have this, do not have a long-term balance sheet, full accrual balance sheet. If you had that, then I would have an unrestricted net position number, which again does not include that depreciation. And that is what I would educate people on. That's what I would focus on. It wouldn't be the bottom line net position. It would be the unrestricted net position. Again, similar to what we call our money asset, money available, or money needed to pay bills. All right, I used extra time for you, so I apologize for that last question, but I was interested. Sheila, thank you so much for your interest. Thank you so much for coming and presenting to us and preparing your letters. We really do appreciate your time.
Thank you for having us, and we appreciate your efforts, and Go full accrual accounting.
Right. Thank you.
Hi, Joel. Thanks. Nice to be here. I'm really happy to be here, especially because about 5 minutes ago, my computer started automatically updating, and I had to stop it all of a sudden. Thank God I saw it.
Always great timing with those updates.
That's what happens, I guess. Again, I'm Bill Bergman. I'm with Truth in Accounting in Chicago. We're a nonprofit dedicated to try to help citizens stay informed and understanding of government finance and financial reporting. I'm not a professional government accountant. I care about government, though, and public policy, mainly as a citizen and a taxpayer. My concerns relate and are motivated by how organized special interest groups can often hijack public policy and the public purse to their own ends and means. My lessons from the past and driving motivations include lessons from the savings and loan crisis back in the 1980s, and the lessons that were both learned and unlearned leading into the financial crisis in 2008, 2009. Among them, I think relevant today is the ways in which deceptive accounting allowed insolvent entities to stay afloat and allow them to gamble and subsequently feast on the public purse. We can talk if you want about in the 20 minutes or so about the lessons I learned from Edward Kane, a professor of finance at Boston College, a great guy who wrote 2 books about the S&L crisis before we knew it hit us, and his concerns about regulatory accounting principles and their role in keeping insolvent entities looking solvent. By way of background, I guess when analyzing companies in financial markets for some industries and questions, it's appropriate to stress one statement as the most important, depending on your question or industry. The balance sheet is, of course, a very important statement, especially in banking and insurance. What we have today and in history, it looks like in the state and local governments, apparently think the balance sheet is so important that they have 2 of them. And they get to pick and choose for their own decisions and desired communications, which one they get to choose. And I'm afraid that you're in your current proposals, as well as in history, you're helping them keep 2 sets of books in ways that aren't healthy for public communication. I guess my main request is please don't do this. Go back to the drawing board and establish a full accrual basis for governmental fund statements, perhaps along the lines suggested in the alternative view. I'm afraid that you're effectively reinforcing deceptive principles that have greased the wheels for misleading claims of surpluses and balanced budgets. And your short-term financial resources measurement focus and accrual basis of accounting can be viewed as an oxymoron, a contradiction in terms. I live in Chicago. Chicago, however, is not an outlier, but it's an example of, and a good example of what to avoid, I'm afraid. And one of those examples related to the proposals that you have today relate to statements made by the former Chicago mayor prior to his last re-election in late 2014. He claimed to balance our budget for the past 3 years without any increase in property sales or gas taxes was only possible by changing the way Chicago does its business. We have reduced our structural deficit by making city government smaller, smarter, and simpler. But in each of those 3 years where the mayor claimed to have balanced the city's budget, Chicago's accrual expenses were exceeding their revenue by about $1 billion a year or more in each of those years. I went up and asked a city council member, a member of the finance committee of the Chicago City Council, how that could happen. How could the city claim to balance its budget according to state law and yet have accrual expenses run $1 billion a year more than revenue? And he was proud almost in his response. We borrow the money, he said, to fill in the gaps, effectively treating revenue, the bond proceeds as revenue. Since the early 2000s in Chicago, total interest expenses nearly tripled and is running now about $1.4 billion a year in the city of Chicago. And that increase, that tripling in the interest expenses happened in a period when long-term interest rates dropped from 6% to 2%. Chicago, it may be an outlier, but it's not really an outlier. It's not alone. There's other governments, and I could share observations about New York City too, with you along with other entities. But for now, I'd like to try to finish up my 10 minutes, not talking about my own letter, but relating some of the language from other comment letters that I thought were valuable. My favorite single letter out of all those letters, and I read many of them, was by Martin Ives, the former member of GASB. And his observations included, some of the language used in the proposed concept statement could seriously mislead the reader. I refer specifically to references to the terms accrual basis of accounting and interperiod equity. In my opinion, stating that the board's proposal regarding fund reporting results in the accrual basis of accounting is grossly misleading and must be dropped. And I share that concern. Another comment letter from Richard Skiba stated to add short-term accrual accounting to the mix of what is certified, but what certified public accountants must attest for state and local government's financial report intentionally provides the smoke that politicians and professional preparers need to obscure the transparency the public must see reflected in the mirror. A brief observation from Lance Christensen at the California Policy Center. Under the proposal, governmental fund statements will still exclude some of the largest liabilities and therefore show inflated net positions that can be advertised as surpluses. A lengthier observation from Leslie Munger, former state comptroller in Illinois. It was asked why the budgeted funds calculations include loan proceeds and does not include the pension system's actuarially required contributions, but they were still considered balanced in concert with GAAP. The answer is that because the law specifically requires individual funds to be balanced, then the calculations are done using the accounting required to prepare the governmental fund statements. This loophole has allowed Illinois' budget to be, quote, balanced, unquote, by including loan proceeds as revenues and not including the full costs incurred. Illinois' poor financial conditions have been made possible by flaws in government GAAP at the governmental funds level. And farther away from Chicago, and an example, a good one of the fact that Chicago and New York City are not alone, here's an observation from Joe Kent at the Grassroots Institute of Hawaii. The proposed new accounting standard and accounting concept would both require the general and other budgeted funds to have a short-term focus, such as recognizing only long-term transactions when payments are due. But that would allow lawmakers to continue sweeping long-term liabilities off the books. For example, Hawaii's latest general fund budget proposal listed $750 million of borrowing as proceeds under other revenues being used to balance the budget. We would expect the state comprehensive annual report to highlight this fact, but instead the CAFR's governmental fund statements support the false claim that the budget has been balanced. And finally, a note from Andrew Abramchek at the Commonwealth Foundation. The proposed changes disfavor policy-oriented users of government accounting information in favor of liquidity-oriented users like internal planners and lenders. Worse, they cause financial statements to misrepresent a government's financial position by ignoring non-cash costs. We're puzzled by GASB's deliberate departure from the principles of accrual accounting. So that's, I guess, my observations. And if you want to talk, we can talk.
Thanks, Bill. I appreciate it, and we appreciate all your efforts to interest in improving governmental accounting and all your efforts to bring that to the public and to help educate the public on governmental accounting and what's going on, in the governments that you're, interested in. So we do appreciate that very much. Brian has the first question. Go ahead, Brian.
Well, thank you so much for being with us. Your organization and you being here means a lot to us. It's very helpful as we try to deal with these issues. If I didn't ask this question now, it certainly would be asked within a minute or so. So I guess I'll get it on. I'll get it on the table. I have to say that we do not establish budgetary standards. That's very clear. Individual jurisdictions establish their own budgetary standards, and this is the same question I've asked some prior testifiers, that there are really three sets of financial statements right now in a report. There's a budget basis, there's a short-term basis, and we're talking about how that might change, and then there's a full accrual basis. That's economic resources measurement focus. You can see all of the things that you're talking about right now, and that budgetary basis can be really whatever. Some mimic What's currently a short, our current financial resources measurement focus, some don't. Why is it that some jurisdictions seem to understand that and they look to the longer term statements, understand that we've got to fund our pensions and so on, and other jurisdictions don't, because we're struggling with how all of a sudden behavior will change if we were somehow to make the that middle piece full accrual and economic resources measurement focus. What would change?
I think the fact that this is available helps to legitimize or allow communications that are driven by less than forthright or honest intention to have a convenient tool by which to make their message. And the fact that the governmental fund statements are on this short-term basis historically and going forward under your proposals would help to grease the wheels for deceptive communications if it's available.
Okay, so if we were to change that middle piece or even take it away, what's to stop a government from saying, okay, now we've got government-wide, we've got budget in this other part of the report, let's look at the budget statements. What would preclude them from doing that?
They could do that if they wanted, but this would give them this would take away one of the bricks in their wall. And I think it would be helpful. It would be a productive move to move towards accrual basis fund statements.
Thank you very much, Bill.
Bill, I'd like to build on that just a little bit. And Brian kind of mentioned, what if we took that middle part away? And that middle part, these governmental funds that we're talking about, the idea behind them is that they are a shorter term perspective in some way to provide some accountability to citizens, really primarily to show, okay, we've got a government pooled together resources primarily through taxation, and we're going to spend them on the services that government has decided that its citizens need and that it should provide to its citizens. And so it's an accountability mechanism to show what resources came in primarily through taxes and what went out. And if we lost that, if that just went away and didn't show it on that short-term perspective, are we given that longer term perspective is somewhere else in the statements? It's 2 pages before, or 3 pages before, like Brian just described. Aren't we losing some transparency to citizens that should be beneficial?
In a sense, you might lose some of that. However, the individual jurisdictions could choose of their own accord under their own principles to provide that information. And I'm afraid with the mandate for all the governments to do it the way it's being proposed, the process has been abused, and it's certainly, in one sense, it's helped promote accountability for the current fiscal year. Unfortunately, it's undermined long-term accountability, and we're reaping the fruits of that today in more than one jurisdiction.
If it went away, do you think that we would need a cash flow statement, a pure cash flow statement for the governmental funds?
I personally think a statement of cash flows would be very helpful, and overall for the whole government as well as for the funds.
But couldn't then that be a gap basis statement that the officials are pointing to, just like they point to the kind of current governmental funds?
They could, and yet the statement of cash flows would also provide countervailing information if they were asserting that we were balancing our budget and directly with the investing and financing sections of the cash flow statement.
And you don't think we could create a governmental fund statement that does something similar and provides that same kind of warning label, or, hey, this is not full picture, go look here?
Yeah, I've heard some of those proposals, and short of a full accrual fund statement, it would be helpful at least to have that warning label at the bottom. But having said that, it's been too easy to game the system, and that's what bothers us at Truth in Accounting.
Thanks, Bill. Jim, I'll turn it over to Jim.
Good morning, Bill. Thank you for being here. I'm going to ask first, in your role, do you compare one government to another government?
Frequently.
Okay. So it's fairly important to you that the accounting be comparable between governments? Is that
Yes.
correct?
Yes, it is.
Okay. Let's assume for sake of this question that the board were to decide to go to economic resources, measurement focus, and accrual basis of accounting, recognizing all assets that are economic in nature and all liabilities that are economic in nature, which at this point financial in nature too, and recognizing all the flows related to those assets and liabilities through a flow statement, potentially through a statement of cash flows. When you do it by fund, are you concerned with trying to ascertain the revenues and costs? Now, I'll use that term broadly, say expenses if you want to, for each particular governmental activity, at least that's significant. For example, are you concerned about knowing what was spent, what was taken in, and what was spent on law enforcement, what's spent on streets, etc.?
Yes, we do, but historically, I haven't really used those fund statements because I don't trust them as a means to compare governments. They don't feel comparable. They're too easily gamed. And I do feel good about, for instance, taking the overall accrual-based revenue less net expenses, and I do feel confident. I feel more confident comparing governments with the statement of activities and the statement of net position, not with the fund statements.
Okay, appreciate that. Again, though, for purposes of this discussion, let's assume we go to that same type of information in the fund financial statements. Given that the ability to understand the revenues and the expenses for each activity that's significant, or how other resources are applied if the revenues from that activity are insufficient, and given that currently a number of governments account for a particular activity in more than one fund, do you believe that the GASB should prescribe which fund a particular activity should be reported in? Or do you believe that the GASB should prescribe allocation methods for expenses that benefit more than one activity so that the information at the fund level would be comparable?
I think both approaches are worthy of consideration. And if I were to choose, I would think the latter one might provide more discretion, which would have costs and benefits for the governments. That it sounded like you were more definite in the first proposal as a means for defining strictly what would or wouldn't count as. But having said that, this is a broader, I think it opens the door to a question that I have for allocating expenses to different activities. I see, broad public service, noble missions like education and public welfare and public safety. But at the end of the day, how much do these governments spend on lawyers and accountants? We don't have a number for legal expenses in the overall framework. So this opens the door to a broader set of questions I have about how to name expense categories.
Thank you.
Lisa.
Good morning, Bill. Thanks for joining us. It's nice to see you again. So I'm a small government gal. So my question for you focuses on small governments, because I'm assuming in the work that you do that, you do comparable research for small governments. Would that be an accurate statement?
Yes.
Excellent. Okay, so one of the things that we continually hear at the GASB is that smaller governments are actually moving away from GAAP because they feel like the standards don't really line up or reflect with how they operate. So if we change that fund structure away from something that's closer to their budget and move to something like what you're recommending with the economic resources measurement focus, Are you concerned that a result of that may actually be that more small governments move away from complying with GAAP?
Well, they might, and that may not necessarily be a strong issue. You might consider GAAP for small governments as an alternative, but more fundamentally, I'm afraid I'm not as sympathetic to those small government arguments. This is too much of a burden type of argument. I think the accounting expertise in government land is applicable both in large and small governments, and small governments can do this, and they should do it if it's well and soundly stipulated.
Thank you very much, Bill.
Brian. You're muted, Brian. Brian, you're muted.
Sorry about that. Clicked off the wrong item here. So I wanted to circle back to something else we talked about a little earlier with respect to the use of these statements and the decisions that are being made. We know of governments that seem to understand the difference between the government-wide financial statements, what the messages they're trying to convey, and the current financial resources, the governmental fund statements, and operate accordingly. They're able to balance their budgets. By trying to change that middle piece, would we be trying to accomplish through accounting what politics cannot accomplish?
I think moving to the full accrual basis is theoretically the right thing to do. And it's not a question of trying to do things politically. It's the right thing to do from an accounting statement perspective. The accrual accounting is one of the most important accomplishments and contributions of accounting industry to mankind in the last few centuries. And I think we need more of it at the government level, not less of it.
Okay. All right. Thank you, sir.
Alan.
It's interesting. And Bill, I very much appreciate you being here. And I was going to ask the question, and I was going to ask it from the standpoint of, Bill, me just spending the last 10, 12 years of my life in Georgia, but Brian more or less just asked it. And when he asked us, I stopped myself and said, well, because Brian did, because I was trying to get to the heart of, Bill, I was trying to get to the heart of, there are some folks, I mean, I don't mean this is not a brag thing, it's just it's to provide some relevance things. So I don't mean to say, look what Georgia did, but we don't, Georgia doesn't borrow for short-term activities. They only borrow for capital projects. Georgia doesn't automatically funds their pension contributions, automatically funds their OPEB stuff. And that's not to say good or bad. It's just, they don't use this. If I'm hearing you right, what you're articulating is some folks do understand it. Some folks do understand the differences like Brian was speaking to, but what you're really articulating is, but some folks, when they want to, are using that statement to provide answers that are contrary to what you would want them to say from a total perspective. In other words, they're purposely using that to show something that they know not to be true. In other words, Illinois knows there's a big pension liability out there. They know there's $138 million in a pension liability. They know there's $54 million or something like that in OPEB, but they're using that statement to not talk about it. Even though they know that, you're arguing they're using that statement to not have to talk about it. Am I following that right?
Yes, and I'm afraid that Georgia isn't a great example for the rest of the nation. Georgia may be doing things responsibly in the current framework, but that doesn't mean the current framework is worth keeping.
And I wasn't using, and Bill, I please didn't mean it for that example. I wasn't trying to imply that. I come from that framework, so I'm trying to put myself in, maybe like being a Chicago citizen like you are in that framework and just trying to translate.
The statements that you're proposing, the statements that have been used are available to people that use them in ways that are not honest. And that's what our concern is.
Diane.
Bill, thank you for being here and for sharing your opinions and your views with us. I do want to probe a little bit more, and I want to better understand. So is there a way we can get to pointing people to that government-wide statement that shows all of the liabilities and those pensions, the OPEB, all of that, and still have that middle ground that Brian and Joel have talked about, because that's beneficial for some governments. But I understand what you're saying. They're picking and choosing between what makes them look the best. But is there a way that we can direct them better to that information that already exists?
You could try, but I guess what's the old saying? You can lead a horse to water, but you can't make him drink, and I'm afraid it's just, we have examples that are really kind of sad. The ways in which organized special interest group hijack the governmental fund statement, take them to their reporters, and deliver messages to the public that are less than honest, talking about the financial condition of the government. Look, we have a surplus. The union is going into this negotiating session in a position of strength. And it's that type of messaging that's facilitated by the governmental fund statements. And it's got longer term consequences that are at odds with your goals for interperiod equity and fiscal accountability from a longer term perspective.
And so I'm going to come back to something that Joel asked, is that if we change it to full accrual, so what precludes them from pointing to that budget statement and saying, well, look at this instead? So it's kind of the same analogy.
I think if we move to full accrual on the governmental fund statement, you would immediately have a point of reference to say, no, your budget statement is what your budget statement is, but it's not necessarily, they're not being able to use the governmental funds and GAAP as a tool for giving them legitimacy. And that's what we care about.
And so why do you not have that point of reference now with the government-wide statements?
We do, and we try to point that out almost every day, that we like that statement of net position. And yet, the media and the special interest groups do what they want and do their best, including things like facilitating borrowing money as a source of revenue.
That's helpful. Thank you, Bill.
Sure.
And Bill, we appreciate you continuing to point out that the government-wide statements exist and are beneficial. That's very helpful. Chris has a question.
Hi, Bill. My question follows along the path that Diane laid. And I just want to better understand, and we talked about this a little bit in the public hearing yesterday. So if we have accrual basis fund financial statements as you requested, I understand completely how in one given year, in that first year, theoretically, it would show you what you needed from a budgeting perspective. But over time, right, over the course of several years, if someone was not funding the short-term portions of those liabilities, those accrued portions as they should, what you would end up with, right, is a fund financial statement that had these really big liabilities, but based on the revenues that a government would bring in any given year, those liabilities, they would far exceed what those revenues are. So the deficit would be huge. So I'm just trying to understand, how does that help a government manage on a year-to-year basis, where if in the first year or two they don't fund completely, you end up with an accrual by design, right? It's accrued, it increases this aggregate balance that is very significant, and that really doesn't help you manage or understand how to fund your government in the most appropriate way.
I'm a little confused by your question and comparing, and taking liabilities and revenues and coming to a deficit. I'm not quite. You've got a revenue and you got an income statement and
so if for instance, if let's take an example of your annual required contribution with a pension, right?
Okay.
And say your annual required contribution with a pension is $100, but from a pay-as-you-go perspective for your state, say you could only pay $30 and you're good for the year, right? Yep. So if every year over the course of 10 years, let's say they just stay completely the same, you paid your $30 instead of paying the ARC. Well, now on your accrual basis financials, what you're showing is that you should have paid that $100 every year, right?
Yes.
And you didn't, you paid 30. So how does that help you manage the government in the 1 year and in the 11th year any better than those accrual basis government-wide financials would? Because in the end, you have a big, huge liability that's sitting in your fund financial statements, as opposed to something that's just going to show you, which I think is what you're asking for, that your ARC, the amount that you should be paying is $100, but you don't get to see that amount that you should be paying. Instead, you see what's accumulated over 10 years or so, right?
In the what is called the balance sheet in the governmental funds under the proposals, yes, you would see the liability grow, but under the current system, the ability to not fund the ARC and just pay as let's say 30% of what you should have paid helps you, quote, balance the budget. And the current system and the proposed system, it's my understanding that's how it would operate, would facilitate kick the can down the road mechanisms like not fully funding your ARC.
I'll take Chris's example and not talk about pensions, but talk about accounts payable. In a year, I have in my governmental funds expenditures for supplies or whatever, right? And I accrue an accounts payable in the general fund, and I record the expenditure, but I don't pay it. And then the next year comes, and I do the same thing over and over again for a couple of years. So I'm accruing and accruing this big account payable, and the expenditures and costs have been in their prior years. At what point, kind of like what Chris is saying, at what point the number's there? I mean, we've seen this happen, right? The number is there, it's in accounts payable. I can still balance a budget because I don't have to expend all that money, but my cash flow is still off, right? I still am not paying down that liability, and I can balance a budget and have revenues equal expenditures and never pay down that liability. So if it can be there now for a general fund, and we see governments doing what I just described. So how would full accrual help that at all when it's not helping that situation?
Well, let's assume that full accrual wouldn't help the situation you're describing. It would help, however, on longer term transactions and the ways in which they can be, the fund statements can be gained by borrowing long, and that would be an improvement.
All right, Bill, we've kind of hit the end of our time, but our next responder isn't here yet. So if you don't mind sticking around for a couple of minutes, I have another question or two. Okay,
or if I could rant and rave about my lessons from the savings and loan crisis, I could do that too. It's actually kind of interesting. But
Jeff has his hand up. I'll let Jeff ask.
Okay,
if you don't mind.
May not be as interesting as the savings and loan, but we'll try to make it entertaining. So, Bill, thank you for being here. Appreciate it. I wanted to just follow up on something that I thought that Diane was going to go with her question, but I'll take it a little bit further. So this focus that you want to shine on governmental fund statements as not being the complete picture sort of exists in what we have today via the reconciliations, right? The reconciliations between the short-term statements and the long-term statements. So I wanted to get your views on perhaps those reconciliations aren't doing the job that they need to do, because, I haven't thought it through, it could be about prominence, it could be about presentation, how they're presented in the financial statements. But if there were a way, right, to give more prominence to those reconciliations, give more consistency to how those reconciliations are shown, so that you could tie more clearly to your constituency that you're talking to, like, hey, these fund statements are not covering pensions. They're not covering OPEB. Look at these big negatives, that exist in these line items. This is the tie. Would that would that satisfy you? In other words, would you be okay with a governmental fund's short-term perspective if you had that link between the short-term perspective and the longer-term perspective?
That would be helpful, but I guess I got a question why the reconciliations are needed in the first place. Why do we have to do this? And unfortunately, the average Joe and Jane taxpayer and citizen is already struggling with getting communications understood in the complex environment that we're in. This adds another layer of complexity that allows for, unfortunately, the scope for the media and the special interest groups to hijack the messaging and focus on simpler things that are deceptive.
Yeah, but I mean, there are those who find value in that short-term perspective, that link to the budget, that link for the financial statements to the budget that's viewed as important. So given that reality, right, you may not accept that reality, but if you work within that reality, what I'm trying to get a sense of is how would the reconciliations assist you? Because again, if the financial statements are going to be misused, they're going to be misused, right? And that is a governance issue. I don't necessarily view that as an accounting issue. But if given the proper information for groups such as yourself, that's important to have that proper information so that you can inform and educate as we try to inform and educate. I just want to get a sense of if those reconciliations were done a different way, could that serve as a vehicle to accomplish that?
That would be a helpful piece of the puzzle if we were going in this direction. But I'm afraid I got to stress that we care about full accrual, and the integrity of the governmental fund statements would be helped by full accrual at the funds level.
Okay, thank you.
Bill, I'm going to shift gears on you and ask a question that's not about the governmental funds, but to see if you have thoughts. The MD&A, Management Discussion Analysis, has been in our reporting model since GASB 34, and we're trying to make it better in this proposal. And your response letter didn't really discuss it, but I'm curious. I mean, we have kind of refocused our intent with that document as part of this project to be something kind of the place that people go, maybe the less sophisticated user, the average citizen who maybe doesn't know a lot about accounting, but they can go and read that, and that should help them understand what's going on with the government. Do you use the MD&A at all? Do you find it helpful? Do you think that's a worthy exercise? I'm just curious of your thoughts on the MD&A.
I haven't stressed it. Maybe I should be doing more work in that area. I think there are creative things you can do with the MD&A, including rhetoric analysis, which is a growing fascination of mine, both at the state and local, as well as the federal government level. So I think the MD&A isn't superfluous. I think it's a way in which you can help the leaders of organizations and government organizations provide information and their own spin on things. I'm cool with that. But as long as it's, we know that that's the MD&A, not the statements.
Thanks, Bill. I'm trying to figure out what we're doing with our next presenter, so I apologize for the pause.
I'll go ahead and talk a little bit about one of my heroes is this fellow Edward Kane, a professor of finance at Boston College. Emeritus professor at Boston College. He's still cooking in his late 80s. Ed, together with George Kaufman at Loyola University Chicago, started a group called the Shadow Financial Regulatory Committee. Ed's work, he wrote 2 books before we knew it hit us about the S&L crisis. And his work stressed his concern with regulatory accounting principles for failed, effectively insolvent institutions that were allowed to stay open by the regulators, facilitated by statements that kind of showed surpluses that didn't exist. And I'm afraid the echoes of that lesson, I'm afraid in the United States of America, we're facing many of what Ed Kane was the fellow who coined the term zombie bank back in the S&L crisis. His concern was that a lot of insolvent entities were allowed to stay open and, in his terms, gamble for resurrection and get out from behind their problem. And I'm afraid we may be faced with a similar set of circumstances for sponsoring governments and pension funds in many places in the United States. We may rue the day that we didn't address this sooner than later.
Thanks, Bill. I want to ask you one more question, and then we'll let you go, if that's okay.
Sure.
In the proposal, as it stands now, we changed the terminology on the flows statement of the governmental funds to inflows and outflows, away from revenues and expenditures. We've heard a lot of kind of differing views on that's a good idea to show the difference in perspectives versus you're losing people. They don't understand it. They're used to revenues and expenditures. You're kind of, it's not going to be, people aren't going to understand it. What's your view on assuming a short-term perspective changes, which I know you don't want, but if the short-term perspective is in some way, shape, or form part of us moving forward, do you like the change in terminology on that statement to inflows and outflows? Should it be something different? What do you think?
I'm afraid I can't agree with using those terms because I like revenue and expense, not inflows and outflows. I can't, but from history, I think I'm afraid that I'm also concerned about the deferred inflows and deferred outflows of resources that have entered into the statement of net position. We feel better about that statement of net position than the balance sheet and the fund statement, but we don't feel that good. We don't feel good about the deferred outflows and inflows. And I'm afraid that the 2010 introduction of that, it appears to be linked to the recognition of massive liabilities for interest rate swaps in a way that it helped the sponsoring governments avoid booking a loss on their hedges. It was not a healthy thing. We're concerned about the deferred outflows and inflows on the statement of net position as well.
All right. Well, Bill, you've gone over time and we appreciate it.
I apologize.
Oh, no. Our next person isn't ready. So
Okay.
I think we're going to probably just take a break until the next scheduled person at 11. But Bill, thank you so much for all your input, your efforts, your interest in our project. We really value your perspectives and your organization and your organization's perspective. So thank you for being here.
Thank you for this whole deliberative process and the chance to get together with you. I think it's productive and it's good for society. So nice going.
Thank you. Thank you.
Okay, thank you. And you can hear me okay?
Yes.
Okay, good. Thank you. And aloha from the beautiful state of Hawaii, everyone. I wish you could have your board meeting out here someday. But it is a beautiful day out here. Yes. Thank you so much for giving me the opportunity to testify today. My name is Joe Kent, and I'm the Executive Vice President of the Grassroots Institute of Hawaii, a nonprofit public policy research organization that educates about individual liberty, economic freedom, and accountable government. So we're essentially a taxpayer watchdog group that closely looks at government budgets, and we try to educate taxpayers about the financial burdens that governments place upon them. So I'm not a CPA. I'm not a deep financial expert. I'm just a humble user of government financial reports, and I try to glean information from financial documents in order to help taxpayers better understand their government in Hawaii. So I want to thank you all in your role in helping us hold the government accountable and to look at the government's books and to seek transparency. So thank you. That's an important role that you have. I do this because Hawaii has among the highest costs of living in the nation and among the highest rates of taxation in the nation. That trend has been worsened over the years by out of control government spending. In fact, in the past 10 years, Hawaii has a constitutional spending limit, and Hawaii lawmakers have exceeded that limit to the tune of $1.4 billion over the past decade. And so we're spending a lot. And of course, it's not GASB's job to set budgeting standards for governments. So if budgets are going to budget badly, then they'll budget badly, unfortunately. But we hope that GASB's standards in financial reporting can at least help us be a check against governments who use the rationale of a surplus budget to keep the spending spree going without having to account for the long-term liabilities. So take Hawaii, for example. Lawmakers regularly tout the general fund surplus to show that the budget is balanced with room to spare. And the newspapers splash this headline, a huge surplus. This concept of a surplus ignores often the concept of unfunded liabilities, for which lawmakers often choose to make the minimum payment, and long-term debt. So we're concerned that the current proposals to place a short-term focus on the government fund statement will continue to enable lawmakers to keep pointing at the surplus and without having to account for the long-term liabilities. And then lawmakers continue to spend money on pet projects while unfunded liabilities increase or go unpaid. And this has enabled a spending trend that has created a government in Hawaii that over the past decade spends faster than the growth of our economy, which, as you know, is an unsustainable trend. These financial burdens have raised the cost of living and pushed many residents out of the islands. In fact, since 2016, 22,000 residents on net have left the state. So people are fleeing the state's high taxes and high cost of living. We at the Grassroots Institute reached out to many of these residents who left in our series, Why We Left Hawaii. And one person, Nate Hara, told us, I lived in Hawaii until I was 26. The cost of living and continuous raising of taxes and fees and the state's need to control everything led to me and my family moving to Texas. We cataloged over 50 of these stories, and we tried to understand what was the main reason. And our survey showed that the main reason is because of the cost of living and the cost of job opportunities. But Hawaii lawmakers every year have gotten away with raising the cost of living by imposing more debt and taxes on the population, enabled partial by their ability to keep residents in the dark about the true financial picture. So, for example, when the pandemic hit last year, Hawaii lawmakers decided to take an OPEB holiday. And so they decided to skip the annually required contribution, pre-funded payments into the State Health Benefits Fund, and say that, and they created this huge surplus. We were actually amazed at the Grassroots Institute that right when the pandemic hit, right when all tourism fell and the state's finances collapsed, the lawmakers seemed to pull a rabbit out of the hat and say, look at this, we've got $1 billion surplus. And now lawmakers are attempting to keep that OPEB holiday going for the next 5 years, which we calculate will save $2 billion in the short term, but cost $8 billion in the long term. So lawmakers are saying, look, we have a windfall of $2 billion if you just look at the short-term budget. And that is concerning because as lawmakers tout that money, taxpayers need to be made aware that there's actually, we're going to see more debt in the system beyond anything we've ever seen in the state. Hawaii's state general fund statements, the budget, the budget statements that they create are good to look at, but they're unreliable solely in understanding the true liabilities and financial burdens. And that's why we look at the comprehensive annual financial report and why that's so important to us, because it provides an independent way of checking the books. Another confusing issue is that Hawaii, for the first time in history, is taking out general obligation bonds to pay for salaries. This is the first time we're doing this, $750 million that we're taking out in debt, and it's placed in the budget as revenues, and it's being used to balance the state budget. Now, with respect to the CAFR, or excuse me, the Comprehensive Annual Financial Report, I'm just confused as to whether this debt will be counted as revenue or inflows on the government fund statement, because in my view, that would skew the true picture of the state's financial health. And furthermore, it's unclear about how to account for bond swaps. And that's another thing lawmakers did. They spun up, they took out money from all the special funds and poured it into the general fund and replaced it with bond proceeds. These bond swaps helped enable lawmakers to shift money around to build the huge surplus that we see today. And now we have many special interest groups looking at that surplus and saying, we want the money. And so lawmakers are under enormous pressure to give the surplus away to favored groups. So we think that a true look at the finances using full accrual accounting and the governmental fund statement would show a budget, a truer picture of the budget, and it would enable me and many other residents to decide, do we want to stay here in Hawaii? Are my kids going to be burdened more in the future? And so we ask that GASB could reconsider these statements in light of this view. Thank you.
Thank you, Joe. I appreciate that. Brian has the first question. Go ahead, Brian.
Joe, thank you for being with us here today. I think that I might not be the only member of the GASB that would want to probably talk more about your environment there than Hawaii than the financial reporting model here, but I'll set that aside for the moment. So there are a number of reasons why we haven't approached the model with an economic resources measurement focus, but I want to set that aside for a moment. I'm going to ask you a question that I asked the prior testifier. That is that arguably with our current financial reporting model, we've got 3 sets of financial statements in the report. You've got a budgetary basis. We've got some form of short-term basis, currently called the current financial resources measurement focus, proposed short-term financial resources measurement focus, and we have the government-wide statements on the economic resources measurement focus full accrual. So the information is certainly there to show how the full financial condition of a government. If we were to take away that centerpiece that some governments use for budgeting, but some don't, that center portion, that's some form of short-term focus, and we're left with budget and economic resources measurement focus at the government-wide level, is that going to change anything? Or are governments still going to just turn to and legislators turn to the budget numbers and say, well, now we'll look at these?
Joe, you're muted, I think.
I'm sorry. Can you hear me now? Sorry.
Yeah, there you go.
Thank you. I think doing that would take away an opportunity of lawmakers to point at the Comprehensive Annual Financial Report and say, look at the surplus. If they only have to look at their own budget and laws, yes, you're right, they could still say that we have a huge surplus and keep selling that to the media and to special interest groups and so on. So, you know, there's no way to fix bad budgeting, like I said, but I do think that doing it this way would be a step in the right direction, and it would at least remove the ability for lawmakers to point at that at the government financial document and say, oh, look at the huge surplus, everyone.
Well, maybe one other question, and that is that if we did go with the economic resources measurement focus, we'd be backtracking a bit, but if we did do that at the fund level, one of the concerns with that is the cost that it would impose on small governments. Larger governments, like one of my last venues, probably could handle it. But with some of the smaller governments, aren't we going to be imposing some significant costs? And isn't that also going to drive up the cost to your government and make government more expensive in Hawaii?
Well, that's a good point. So we don't want wasteful spending, but I would argue that this would not be wasteful spending. In fact, if you spend $1 to save $1, or to save $2, then that's $1 well spent. And so if this increased the costs, but helped to provide taxpayers and groups like ours with a truer metric, then so be it. And I know it's sometimes things are difficult to count. They say not everything that counts can be counted, and not everything that can be counted counts. But you have to try your best, and I think governments can do that.
Thank you, sir.
Joe, I'd like to go back to Brian's point before we went to the small governments and go to the three bases and explore this middle one. You know, governments exist to provide, to take a group of people in an area and provide services to them that it couldn't or shouldn't maybe be provided by the private sector. Education, transportation, public safety, things like that, right? And so they do that by taxing those citizens and then spending the money on those services. And so that middle financial statement, that short-term perspective of one of its main purposes is to show how those tax resources came in during that year and how they were used, the sources coming in and the sources going out. Mm-hmm. If we lost that, if we took those to that full economic resources measurement focus, information that already exists at the government-wide statements, yes, we would be losing a place that a legislature could point to, right? But we would be also losing that benefit of a statement that gives taxpayers that inflows and outflows look at a government, thereby, you know, are we losing transparency, some of the transparency that exists in the financial statements just for the benefit of avoiding that pointing that a legislature might do? What are your thoughts on that?
Well, thank you for the question. I think that we all have our different lenses of how we view things. I view it the other way around. In fact, I think there are many government public services that could be provided by the private sector. I was a public school teacher for 8 years, and I do think that, you know, the private sector, it could be done where they provide public services too. And when and if they did, then they may not use the GASB standards. They might use the FASB standards as a private company. And in fact, there are many governments across the nation who provide public services, like Hawaii. We provide more public services than any state. We've got a public hospital system, a government-run airport system, and so on. And in other states, these are all provided by the private sector. So I don't know if there's anything special about governments that we have to do it this way. I see it the other way around, where we lose transparency by not having the full picture of all the liabilities and assets in the statements. So yeah, it's just a different view, I guess.
And right, the services could come and go. Maybe some would argue public safety is one that you might not want to privatize, but sure, right. But the idea still is that there's some accounting and also that kind of transparency of full picture liabilities and that stuff exists. It exists now and will continue to exist at that government-wide statement. So it's there, but I'll pass it on to the next question and let Jim go. He's been waiting patiently. Go ahead, Jim.
Joe, thank you very much for your participation in the hearing and in our process. I think this, at least in the 9 years I've been on the board, this is the first time that your group's actually participated. And I certainly appreciate that. And the more diverse viewpoints and more diverse geographic representation we can get, the better informed we are. A part of the proposal deals with the reporting of budgetary information, including differences between actual and budget and original budget, final budget, and so on. One of the pieces of the existing model requires explanation of significant budgetary variations in management's discussion and analysis. And the proposal would continue to require that discussion, but would move it to being a part of the presentation of the actual budgetary information presentation. So the explanation would be with that presentation. I wondered if you had any opinion on whether you think that's a good change or an undesirable change, and why.
Oh, well, I am embarrassed to say that question's a bit beyond me. I wish I could be more ready for that question, but I'm not a CPA. I'm not a deep financial expert. I'm just a casual user of these reports. So I apologize.
Well, I appreciate that. I was asking from your perspective as a casual user, is it easier if you find the information in one place or if you have to go multiple places to put it together?
Oh, I see. I see. Thank you. That's thank you for putting it in my language. Yes, it's easier if it's in one place. If I have to hunt and peck and look for a reconciliation and then cross-check the math, and actually I have tried to do that, look at the government budget and try to look at their bottom line, and then try to look at the CAFR budget, and in fact, when I was trying to calculate the whether Hawaii's government has grown faster than the local economy adjusted for inflation, that's a complex calculation. And I looked at the comprehensive annual financial report and the state general fund and the total fund, and I did it 3 different ways. And even within the CAFR itself, it was difficult to figure out which number should I use in looking at that concept. So, so yes, it'd be much easier if it was all in one place.
Thank you.
Diane.
Joe, thank you for being here. And I also wish we were meeting in Hawaii instead of virtual too. I just had a question for you. You talked a lot about pensions and long-term debt, and all of those things are captured on the government-wide financial statements. Why do you think that the policymakers and just, general citizens are not using that information?
Oh, I think they are using the information, and I totally respect and honor GASB for requiring that information to be on the government-wide financial statements. I'm just concerned that the governmental fund statements could be used to easily mislead the public or mislead lawmakers themselves who are trying to read it. And even when I look at it, I'm looking at the general. I'm a smart person. I try to go to the bottom line and look at the general fund statement, and I see a surplus, and I had to ask around and finally figure out, oh wait, there's this reconciliation page as well, and so it was difficult even for me to find that. So I know, and if I had flipped to a few pages earlier, I might have seen that, but I don't have time for all these details. I just need to look at the bottom line, and I think that's what most people do too.
So just as a follow-up, as you mentioned the reconciliation, and I asked Sheila this question about, are there changes that we could make to make it clearer on the reconciliation that you could pull out that information that you're looking for and still maintain what both Joel and Brian talked about, those 3 different statements, the budget, the short-term, and then the government-wide?
Perhaps, and I think that I like what Dr. Kevin Bronner mentioned, is you could there's different ways to do a reconciliation. So you could have a full accrual accounting for the governmental funds, and then if you wanted to do another accounting method with a reconciliation, you could add that as a supplement. So that may at least be clearer and more consistent when scrolling through the budget.
Thank you.
Thank you.
Lisa.
Aloha, Joe.
Oh, aloha.
Aloha. So seeing as to how Diane has brought us to the government-wide financial statements, I have a question for you regarding those. So right now, the statement of net position has three components of net position, right? So we talk about the component that's the net investment in capital assets. We talk about the restricted net position component. And then, of course, the unrestricted net position component. And in your letter, you requested that that section of the statement not include the capital asset section of net position. So my question for you, Joe, is how do you propose that we would provide users with information to assess capital asset needs of a government without that component of net position included?
Well, that's a great question. And I do think that, first of all, I'm so grateful that we have the unrestricted net position because, you know, from the way I view a budget, that's the more important number. And I have to admit, I'm not sure the best way to do that. I would leave it to the experts. But just in my casual review of the budget, when I look at the total net position, someone had to explain to me, hang on, Joe, hang on. That's not the number that you should look at with your view of, through your lens. You should really look at the unrestricted net position. It took me years to find that out. And if that were somewhere, if there was a way to make that easier to the taxpayer and to the way I view things, then of course, I'd like that, but I don't know exactly how a CPA would do that.
Maybe we can discuss that further on a beach in Hawaii at some
Yeah.
point.
Mai tais. That's
I
right.
think
You got it.
I think Lisa's offering to come out to Hawaii and teach an educational session for taxpayers.
Oh, I'd love it.
The governmental fund reports. I think all
I
of us
sure
would like
was,
to do that.
Joel.
All right, Chris.
Joe, thank you for meeting with us this morning for you and this afternoon for me. Appreciate you making the time. So, you know, I just want to better understand, you know, this issue or your thoughts around the best way to, and I apologize. I had my thought. It was one of those things, and I was listening to Lisa, and then the chairman cracked a joke, and he kind of threw me off. I'm going to blame it on the chairman. I need a second to recompose my thoughts. I apologize.
Chris, since I caused it, you want me to ask a question?
Sure thing, please.
Okay. Sorry about that. I didn't mean to be funny and you could lose your train of thought. So Joe, you in your comments and in your letter, you talk about in your comments in particular, you talked about Hawaii issuing debt to pay for salaries. In the proposal, we have an exception for the governmental funds that we've carved out that we describe as long-term debt issued for short-term purposes. Now, without looking at the specifics of what this debt is, based on the surface of how you described it, sounds like it would probably meet that definition. Therefore, under the proposal, that would remain and be reported. That debt that was issued for that short-term purposes to pay a salary would remain as a governmental fund, a general fund, if that's the fund that issued it, liability. Does that sound like a good exception, a good thing for us to have included? Does that make sense to you? Do you find that helpful?
So you're saying that the money borrowed would be a liability and not an asset, correct?
Well, it wouldn't be an inflow. It wouldn't be a revenue or an
excuse me,
inflow.
thank you.
It would.
Yes.
You'd have cash, right?
Right.
And then you would pay it, I guess.
Mhm.
But theoretically, you would start with cash, and have a liability as opposed to an inflow, so it doesn't go into fund balance.
Mm-hmm. Well, that would, yes, be ideal, I think, if just if there's any way to keep the bonds borrowed as revenue, a true financial picture of that, so that it can be viewed as a liability. Yes, that would be great. I was just confused myself as to how, I mean, we're still in on fiscal 2021, I think. So we're still going to wait and see how they calculate that in our comprehensive annual financial report. So yeah.
Understood. Okay, thank you. I think Chris is back.
Okay, good.
Great. Mr. Chairman, if you could hold your jokes, please, until after I finish. So thanks again, Joe. I appreciate you coming. So my question really revolves around this idea of these two statements that we have, and one having more of a traditional accrual-based approach, with economic measurement focus, and us taking this longer perspective view on the liabilities, the assets that are out there. And then this other one that, many say is very much more like how we budget, relatively speaking. Every state's different, budgeting processes are different, but a little bit more like it. Do you have any thoughts or concerns around the idea of making those fund statements more accrual, traditionally accrual like, economic resource measurement focus accrual like, and the potential for, say, after a year or two of, say, a government not fully funding their ARC or something to that degree, what do those statements then represent, right? You have some huge deficit in them, and do they really represent something that you find useful as a citizen in who you are in your everyday business, right? And so it makes sense when we look at it just from a 1 year perspective, and I want to know if somebody did not fund their ARC, if somebody did not pay a certain portion of these longer term liabilities, what that means to my budget in a sense. But you get to the point where after a year or two, because these are not connected, right? Governments are going to budget however they choose to budget and fund expenditures however they choose to fund them, and then accounting is going to be accounting, right? And those are two separate things. What are we left with? And are we left with something that you might find usable once you get a year or two out?
I see. Yeah, I see it kind of the other way around, where the government fund statement currently is not usable to me, because I know that there are all these liabilities, and they're switching things around, and they're swapping things, and it's swirling, and it's very confusing to me to try to follow that. And so if there was a broader look at what's going on, then I wouldn't get to the bottom line and see a lot of money. Well, at least in Hawaii, I hope I would see a lot of money, actually. But anyways, I do think that it would service the public better, and our purpose is better to have all the numbers in there, even if that would be difficult. And I know that there's challenges if it swaps from this fund as that fund, or if we decide not to pay this or that in the long term, and what does that mean? That's very difficult to get to the bottom of, and they pay people a lot of money to figure that out.
Well, thank you for your answer. And
Thank you
again for joining us.
Hey, Joe, I think we've used up all the time, but we really appreciate you joining us. We appreciate your perspectives and your insights, and we like when the non-accountants come and talk accounting with us. So we appreciate it very much, your interest and you taking the time. So thank you.
Thank you, and everyone, aloha.
Aloha, Joe.
Okay. My name is Richard H. Skiba Jr. I'm the former finance director of the village of Hinsdale, Illinois from 1976 to 1986, retired financial administrator of the DuPage Water Commission in Elmhurst, Illinois, 1988 to 2004, emeritus technical advisor, Truth in Accounting, TIA, Chicago, Illinois, 2007 to 2010. Assisted in TIA's development of an analysis of state and local government ACFRs, is it now? ACFRs? I personally prefer the name annual kerfuffle. This analysis showed the effect of off-balance sheet long-term liabilities and on-balance sheet future revenues. I still financially support and work with TIA on an ad hoc basis. Thank you for the invitation. I want to mention a few former GASB members and staff. Jim, Marty, Tom, Michael, and Ken, thanks for paying attention to me and listening to me despite my oppositions to many GASB proposed standards. My opposition continues. Did you ever see the 1948 movie Treasure of the Sierra Madres? A remake of that movie is currently in production in New England. This version is called Treasure of the CPAs in Government Practice. There's one scene where an LLP of CPAs comes upon a public citizen. The citizen shouts, "Stop!" The LLP managing partner says, "We are CPAs, you know, the public's accountants." "Oh yeah, if you're CPAs, do you use accrual accounting for state and local governments?" asked the public citizen. The managing partner looks at him and says, "Accrual accounting? We don't need no accrual accounting. We don't need no stinking accrual accounting. Stay away from my local government," yells the public citizen. The shocked managing partner says, we didn't think you'd notice the harm. Why can't you be a little more flexible? We want our fee and we'll leave you in ignorance." "I need to save the future for my children," storms the patriotic public citizen. "Aw, throw that old preamble to the Constitution over here. We'll stomp on it and go our way," disses the managing partner. The patriot cries, "You'll go on your way without ruining the blessings of liberty for our posterity." Whereupon the patriotic citizen shoots the managing partner. In the movie made in 1948, the shot went through the sombrero of the gang leader. The LLP managing partner does not fare so well in this public encounter. The shot does not go through his green eye shade. It goes right through the managing partner's heart. That's where these proposed accounting principles ought to be shot. The failure of the youth movement in the 1960s was tearing down society without any idea of how to keep society functioning. I was young in the 1960s. I don't intend to make a nearly 60-year-old mistake. So I offer an alternative to certifiable short-term accrual accounting, a required statement of working capital in the ACFR. I'm fairly certain that I learned about working capital analyses in a 3-digit college accounting course beginning with the number 1. Working capital analysis is used to determine the liquidity and sufficiency of current assets in comparison to current liabilities. That shows funds available for when short-term obligations must be paid. I believe this is the professional goal of the standards being proposed. I have tried to consider some of the issue GASB faces in improving fund level accounting. GASB doesn't set budget standards. I think it could if it wanted to do so. That certainly would differentiate GASB from FASB. And in fact, that and the presentation of net assets instead of equity should be the only differences. Just ask Ian Ball, who served as the Director of Financial Management and Policy and then as the Central Financial Controller at the New Zealand Treasury. New Zealand far outpaces America when it comes to ethically and transparently reporting the operations of government finances. Mr. Ball even credits full accrual accounting and budgeting with making New Zealand's response to the COVID-19 pandemic so rapid. State and local governments don't all budget the same way. If GASB has patriotic loyalty to the citizens of the United States, it should adopt standards that are for the people and usable by the people. Were GAAP to become this principle, failure to budget on full accrual basis by a state and local government would result in a qualified opinion. If Eggs Benedict Arnolds are being served and budgeting as usual remains a non-qualification factor, full accrual fund level accounting would highlight a state or local government's non-compliance with its own lawful budget. Governments do not budget on a government-wide basis. They budget on a fund level. But if they budgeted on the full accrual basis, you could just add the funds together and get a government-wide budget. By conforming GASB GAAP to any budgetary mode other than full accrual, GASB abdicates its responsibility and transfers the promulgation of GAAP to politicians. The government-wide financial statements include net pension, retiree healthcare, and other long-term liabilities. Readers can look to this to understand the government's financial condition. True, but that requires understanding a cumbersome reconciliation to show how the sum of the audited governmental fund balances must be adjusted to equal the reported government-wide audited net assets. This reconciliation, at least, should be named more transparently. Lies my government told me at the fund level, but I can't figure out in which funds they lied. Most government finance officers have bachelor's degrees. Some have master's degrees. GASB seems to underrate their abilities to understand full accrual and accounting. Yet GASB grants them a PhD, doctorers of financial reporting. How can we get the people to look at consolidated entity-wide statements? Do the math. Make the funds add up to the consolidation. There have been a modicum of success over the decades with similar situations in the private sector. GASB and CPAs should be the public's accountants. And if an example is helpful, look at the lifetime service of the late Abraham J. Brilloff, 1917 to 2013. Dr. Brilloff's record includes member of the accountancy faculty at CCNY downtown, now the Berard M. Baruch College, beginning in 1965. He had the annoying ability to be right years, decades before anybody else. He warned against providing management advisory services to auditing clients and of accounting practices that misled investors with off-balance sheet flim-flam. Within the AICPA, he was the public's accountant, living up to the title of CPA. Constant pain in the association. AICPA once charged Brilloff with failing to get a client letter certifying that the correct information was provided during an audit. The client had already certified that in his tax return. AICPA ordered Brilloff to take 31 hours of refresher courses, including 7 hours of remedial ethics education. From 1970 to 2002, he testified before Congress 15 times, enlightening those legislators on the biggest corporate accounting outrages of those years. In 2014, Dr. Brilloff became the 91st member of the American Accounting Association Hall of Fame. In testimony before GASB in response to Project 3.8 preliminary reviews, on August 30th, 1992, I made this statement. It may be time to revolutionize government accounting principles before the people themselves revolt. If GASB adopts as principle the proposals in projects 320 and 325, it will only further encourage and enable the practice of deficit spending. Taxation without representation on those not yet of voting age, including those allowed to be born in the future. This destroys the blessings of liberty for our posterity. Should this heinous treason continue, I pray all CPAs of integrity will declare their independence from GASB. And if such independence is declared, I will join the revolution. Roll credits. Fade to black.
That was certainly, I appreciate the unique presentation of your thoughts.
I'll wait for the critical reviews if you don't mind.
So we've had this discussion a couple of times, even today, and other testimony. So we've got the government-wide statements, which you acknowledge, right? But you kind of acknowledge that we've asked the question, why don't people use them? And you say it's because the governmental funds don't add up to them. Yes. So if the governmental funds were just gone, but people still use them to budget, but we just didn't require them to be presented, would then they look at the government-wide statements?
Well, if all they got was the government-wide, it wouldn't give them what they were looking for about the general fund necessarily, because you have other funds in there besides the general fund. You would have, I don't think that you're having your budgetary reports in the back is wrong. I just think it should be on the accrual basis. And if it was on the accrual basis, then it would just flow right up into the top side. You know, you might have to make some inter-fund eliminations like they do in the private sector, but it wouldn't really be all that much. It would certainly more add, and it certainly is better than sitting there and saying Illinois had $742 million of fund balance deficit, and then having 50 or 60 reconciling items underneath it, some of which are 12 figures, that comes down to a minus $300,000 government-wide position. And on top of that, you don't know. I mean, it would be more helpful, I suppose, although I still don't like it. But if you were to take your, I'll call it the reconciliation, I'll be nice, call it the reconciliation, and if you had a schedule elsewhere, or as make it part of the schedule, you fold it out and you say general fund, special revenue fund, blah, 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 fund balance, and then you put all the reconciling items underneath the appropriate fund and then come over to the government-wide. That certainly in the current situation, which I disagree with, would be a better presentation. At least you know, oh, that big pension thing, that's in the general fund. Holy cow.
Okay, so I appreciate that, and step back to the governmental funds. If we did this, budgets or whatever, you know, right? If budgets were full accrual, if everything was full accrual, do we lose something if we don't have something that's like a cash flow statement or something that is trying to show taxpayers what came in to the government that year and what went out with their tax money, what it was spent on what came in and what went out? And so that's what the governmental funds really at this point are trying to do, is show those inflows and outflows so that there's some transparency and accountability for what happened. If we did everything full accrual, would we be missing that?
Right. You do the working capital analysis. That's the closest thing you have. It's from numbers that will be off of audited numbers, full accrual audited numbers, but it'll only be the current assets, the current liabilities. You can do, 2-to-1 ratios, 1-to-1 ratios. What's good for government? Maybe 0.5 to 1 is good enough for government. I don't know, but you could develop that over time with that working capital analysis. It's not that hard. You take it from numbers right out of the audited full accrual financial reports, and you will put it together that way, and that'll give you that. But the problem with it is, I've heard a couple other things here. That doesn't help with management. The audit report doesn't really help with management. You guys are the GASB, not the GBSB, Government Bookkeeping Standards Board. You don't make the rules for bookkeeping, okay? So you set the rules for accounting. They should come up with the accounting rules. Anything they need management-wise, they should be able to develop from this on their own management thing, their cash flows, their projections, whatever they want to do. If somebody wants to keep their books on a cash basis because they're a small government, let them keep it on a cash basis. I used to work in auditing, and we'd come in and we have a client that didn't really know what they were doing. We took the cash basis and we would go and we would book everything would be an audit adjustment to get it up to the accrual so they could file their reports and whatever things they had to comply with, and they didn't have to worry about it. And they used their own internal bookkeeping system day to day, not once a year, to manage their business. And it was probably cheaper for them to do it that way and pay a CPA to book all these adjustment forms at the end of the year than to hire a full-fledged finance officer who knew what he was doing all the time.
All right. So
I thought this through, I'm afraid.
I appreciate that. I do. And so I'll back up to then the budget question. Some would argue that you're right. We are the GASB and that it's accounting. Some could have substituted for what you just said, GB, I don't know what it is.
GBSB,
instead of bookkeeping.
Government Bookkeeping Standards Board. Yeah.
Somebody could say, well, we're also not the Government Budgeting Standards Board, that we are accounting. And
Yeah.
so, you know, you said we could set budgetary standards, but some would argue that's not really in our purview.
Well, what I would say to that is let them budget the way they want. And then just go in. If you don't want to qualify their opinion because of their budgeting thing, you know, you're making it, you know, you can't, if you think you can't do it, they don't want to, people object to that. Let them budget the way they want. Whatever the budget is, you compare it to accrual actuals and you let those variances show out and show the people whether they are really in compliance economically with their balanced budget. Okay. And I'll tell you what, after a couple of years of doing that, and having people that aren't like me that know what's going on coming up and saying, what the heck happened in your budget? They'll start budgeting on the accrual basis. You won't have to do anything. But you've got to have the courage to do the accounting right.
But wouldn't a reconciliation between, if we did a reconciliation from whatever their budget base it is to short-term to long-term, if there's a reconciliation, would that's essentially what I hear you saying.
No, I'm not saying that at all. I'm saying, why do double work? Why do the books on this basis and report it on this basis and then have to go through a reconciliation process? Just if the local government's too small, does it on a cash basis, let the CPA go ahead and adjust it to full accrual at the end of the year, help them maybe along the year to say, look, you know, you're going to look this funny on budget, you know, because of the way you do it, and they'll get the message eventually, you know, and then just put that out there and just have it all there. No reconciliation, no other basis of accounting that they have to worry about. They do cash, the CPAs come in and turn it to accrual. That sounds more traditional to me than any tradition in fund basis accounting, actually. That's what CPAs used to do a long time ago.
So you would, in your world, they would budget on whatever basis, right?
Yeah.
And then our actual would be accrual. And so it would be complete apples and, honestly, not even apples and oranges. It's apples.
No, it would be an honest assessment of how they met their budget. And the answer would be they did not. They said it was a balanced budget, and you'll see revenues equal expense and zero. And then you put the whole full accrual revenues and expense statements together. And on the bottom, it says minus something real big. Well, obviously, they said they had a balanced budget, but they didn't do it. Okay, well, we had a bad year. You know, everybody has a bad year. And the next year, we had 2 bad years in a row. And then they get to Illinois. Well, we've had 37 bad years in a row. Somebody's going to get the message that's not a CPA, that's not a trained accountant, that maybe even doesn't have anything beyond a high school diploma. And they're going to say, something ain't right. And if you do that, then you've got a chance of making some meaningful reforms, maybe not just in accounting, but maybe starting with accounting, you can get some meaningful reforms going in other areas in America. Not to, face it, if you guys went ahead and did this, how long do you think Washington would be able to hold out against 50 governors that are forced to do this and forced to expose what they've got in their budget? How long will it take FASAB to get the message?
Jim has a question.
Richard, thank you very much for being here and for your contributions to GASB's deliberations over the years. I'm sure it's frustrating when you don't see all of your recommendations implemented as you recommended them, but part of the due process is believing in what you're doing and continuing to advocate what you think's right. And eventually, maybe, as you pointed out with Abe Brilloff, he was proven more right than wrong. My question goes to, I think your proposition is that there's only one really true and adequate and accurate accounting, or using the kind of conceptual term, only one really reliable or representationally faithful approach, and that is the economic resources measurement focus, full accrual basis of accounting. there may be others who believe that there are other approaches that are truthful or that meet those criteria, such as the what we currently have, the current financial resources measurement focus modified accrual basis, or this short-term basis that's in the proposal. How would you address the folks who say that the other way is either also truthful or is more truthful from a conceptual standpoint or from a reality standpoint?
It's very easy. It's very easy. Something I learned a long time ago. If two things are said to be true that are not the same, there's only two things that can be true about that. One, they're both false, or one is true and the other isn't. There's no other option. So truth is truth. So it falls back onto you guys to figure out, what do we think truth is? And I mean, it's not up to me. I know what I think truth is, you know, and I know what my theological faith is, but that doesn't mean that's your theological faith either. And I put up with the world, live in a world where I haven't gotten my way. I mean, I said the same thing. Basically, this hat is going to be 30 years old next year. And, you know, I wrote my first paper about the problems of government accounting in 1983. And I sent it to your former executive director when he was the deputy controller in Illinois. And, you know, it's been going on a long time. It hasn't happened yet. And, you know, I look at a couple of things, and I'm not going religious on you, so don't get me wrong here. I'm just trying to give you an example of what I try to do. If Jesus Christ, George Washington, and Abraham Lincoln had said, I don't want to work on this unless I see the results of what I'm trying to get done happen, I wouldn't want to think about the world or America or anything. And I'm the same way. I have my point of view. I'm 1 out of 330 million, but I bet you that Truth in Accounting could get me an army if they needed to. You know, come in and tell you, well, we think this is true. And then you might go, well, you know, and again, it's just the way that it is. And so I don't know what else to answer you on that. There's only one truth in an area. There can't be two truths.
Thank you very much. And I appreciate your allusion to the basic concepts in analytical geometry. In terms of proving what's true.
I don't know what's true, though. I mean, this is what I think it is. You guys are 7, right? 7, you know, and you guys have the authority to decide what is true in the government accounting. I'm just giving you, you know, one man's opinion.
Richard, we appreciate that. We've basically used up our time. So I appreciate, again, your interest, that you took the time to respond and that you took the time to come and present to us and dialogue with us today. We really do value all input, and we really value your input and your thoughts and expertise and your truth.
I thank you also for listening to me all the way through. It was unusual. And I think Greta will be happy that I didn't sing. I promised her I wouldn't sing, but I didn't tell her I would talk about a movie. So I didn't lie, Greta. See, it's just, I told you one thing, and now I did another thing. Goodbye, guys.
All right, with that, we will take a break.
Thank you. We have one of our finance directors going to put up some slides so you can see the organization for the comments. I'm going to ask him if he can do that now, so you know exactly where we're going. Okay. I'll start right now. My name is Paul B. Kazarian. I'm the chairman and CEO of Japonica Partners and the Charles and Agnes Kazarian Foundation. Joel, can you hear me okay?
We can hear you fine. Thank you.
Thank you, GASB, for the invitation and the opportunity to testify on the topic of U.S. government financial statements and reporting models. The sequence of my comments is in 8 segments, leaving approximately 50% for the Q&A. You can see the segments broken out by seconds or minutes and the columns. Topic number 1, we offer our advice from 3 perspectives. As an investor in sovereign bonds, Japonica was one of the largest and most successful investors in Greek government bonds. 2, as managers of Fortune 300 companies, we call them transformational investments, and our work with the Greek government in setting up their financial systems and the European Union. And 3, as the founder of the Kazarian Center for Public Financial Management. In sum, that's our background. As we sit here at the overview comments, topic number 1, as we sit here on 20 April 2020, this is what we see from a financial perspective. This colors all our comments. It's going to be much higher level pictures than a lot of technical discussion, but I think it's extremely important. 1, we see explosive and largely unregulated growth of cryptocurrencies. We see pervasive speculative bubbles in financial assets with markets and price to sales ratios at all-time highs. Christopher, you can move the slides. Thank you. We see an abject disregard for financial fundamentals with new adaptations of audited financials to reflect the so-called financial reality. We see unstinted government spending, especially at the federal level, worldwide. We see nominal to negative borrowing costs, hiding the cost of debt. These 5 traits of current financial reality have put the U.S. global best practice leadership and national security into a very serious focus. It is not the hard power of the U.S. military strength that is mostly unquestioned, but the soft power of the U.S. dollar as the world's reserve currency. There is no serious question that the next financial crisis is on the horizon and the magnitude will be larger than in the past. For well over 100 years, the U.S. has been the consistent world leader in democratic and best practice government, the use of soft power. Since World War II, the U.S. government and the U.S. dollar has been the reserve currency of choice for world commerce. Internationally, this is now under serious threat. GASB should understand that moving away from international public sector accounting standards will be seen by the world, which is our perspective, and I wrote in our letter, as the U.S. retreating from global best practices and is a worse practice. You may not fully appreciate the international implications, as we've been listening to the testimony, of a move away from international best practices as an international standing of the United States. Whatever your thought process has been before these 5 developments cited above, the world has changed. And you should now proudly display global leadership and embrace international public sector best practices and standards. Any actions to the contrary will damage the international reputation of the U.S., and we will indeed have an impact on the U.S. security and those who aspire to be U.S. government democratic models. Very 30-second introduction on Japonica. Our advice that we provide is wisdom we've gained since 1987. We built a track record of transforming very complex companies and governments with Greece. Our culture is to see what others don't see, quite honestly, and then to use education to accomplish what others believe is impossible. We've established the Kazarian Center for Public Financial Management. This is a topic near and dear to our heart. It now has over $250 million assets, which we funded. We focus on complex international investments, which we've talked about. We've done over 10 billion, if the slides can follow up. And we have a very, very good track record, 94% IRR, 4.6 times our capital, with virtually no downside at 1.9. That was 30 seconds. Topic number 3, by way of background, in preparation for this GASB testimony, our team has read the 2 exposure drafts, analyzed CAFRs listed in the slides, state, county, and local level. Go back to that, please. Thank you. We took the largest countries, largest states, cities, and including Chicago's public school system. We listened to the Q&A, read the comment letters for Sheila Weinberg, and then Bill Bergman from Truth in Accounting, and we've read the comment letters from Ives, Howard, and Skiba. So I think our team has done their homework. Should you have any technical or micro-technical questions, I'm really not the best person to answer that. We have a team that's standing by including the people who handled the New Zealand Public Financial Management System, the head chairman of IPSIS, and the head of E&Y's practice on global practice. Topic number 4, the importance of government financial statements. We take a very different perspective. To show the importance of government financial statements based on international public sector accounting standards, I provide the following exhibits. These slides we use in a class I recently taught the chief financial officers on transformational investments with the CFO as value creator. There were nonprofits there, there were government entities there. And it was at Columbia. This may come as different perspectives for you all. Major reserve currencies in the US, worldwide, now if you look at the chart, average 58% of the GDP of the countries. So governments have really morphed into the standing majority of the economies, and this does not include the cost of regulation, which put the number well over 60%. The UK, for example, which you all may or may not be familiar with, has a balance sheet where financial debts are only 21%, and total government balance sheet is 307% of their GDP. These have become massive. Next slide is the occurrence. What you'll see here is that the balance sheets, which where we focus quite a lot of time on, is have grown exponentially. From 2010, 2019, they have grown 4 times the level of GDP. 4 times the level of GDP. And the UK is not an outlier. What else we're going to go next, Chris? Good. The importance of GDP, just to make a quick note on the left side, people talk why GDP, why do we focus? When we look at balance sheets, we look at GDP as well. GDP is a flow, as you may or may not be familiar with, and it's basically, if you look in the right-hand column, it's used for the basis on which governments level their tax. It's no coincidence that over the last 20 years, government tax revenue to GDP and all the major reserve Western economies have stayed basically flat. That's how it gets set. Next, we're moving quickly, but I hope that's okay. Topic number 5, assessing sovereign government accounting and state and local, which we're going to leave more to you. We'll talk about the size, so you understand the global magnitude of this. Next slide, please. I'm going to keep this quickly. Debt and deficit, you call it budget balance, you call it financial debt, and the global terms it's referred to as debt and deficit. This would be OECD, World Bank, IMF, IIF. This is called debt and deficit. Debt saying financial deficit, you call budget balance, they refer to it as deficit framework. It has largely failed, it's recognized it's failed, it enables mismanagement, and it doesn't work with massively complicated organizations. Next slide. Here's a sampling of the books that all focus on debt. It's the wrong focus. It's got to be the full balance sheet. Next slide. Here's listed 5, we call it about the 7 F's of destructively toxic debt and deficit. You're going to have the slides. We're distributing the slides. You all can look at them later. I'm just touching on them now so you know what's there. All right. Next, keep on going, please. And this goes to a number of the speakers I've heard. What we have found is fiscal illusion, AKA accounting fraud, is rampant. It's rampant on the sovereign level and at the state level. I don't want to get into that because I don't think it's appropriate for us. We have comments, but at the sovereign level, what we found, it's accounting fraud by no other terms. Frank and simple. Next, please. Whose ox gets gored? If you go to debt and deficit, you got a lot of populist politicians and dictators. You got supplicants to the dictators. You got rent-seeking government people. You got agenda-driven. This is not just a factor. It's a very, very firmly entrenched problem. Next, please. And I'm going to keep on moving very quickly because I want to give you a chance to ask questions. Here's a number of the responses. We've been doing this since 2012. Virtually throughout the world, but mostly in Europe. Whether it's French, the Greek, the Germans, the UK, the US. The responses really, if you give time, I urge you, if anyone questions this, take the time. We're happy to dedicate it. This is what the foundation does, not what Japonica does, what the foundation does. Next, Topic 6, we're almost done, is a new framework. Here we go. New framework, 2 minutes, real quick, is we use the full balance sheet, total government net worth. I know you use a lot of fund statements, reconciliations, balance, some super important issues you all deal with. I had to debate recently, the slides are jumping all over the place, that's fine. You may be aware that President Biden has an Chief Counsel of Economic Advisors, and Jared Bernstein is one of his new advisors. I had the opportunity to debate Jared recently on this debt and deficit framework, so it's very, very high level. And we did it at Columbia, it was extraordinarily well attended, but the focus on this is debt and deficit myth or reality. This is at the highest level in the United States government. Next slide. He asked us as preparation if we could do this following the debate. Please, next slide. What he asked us if we would do is if we would provide a reconciliation, and I know this is fast, but I think you should be able to grasp it, between what's used at the administrative level in Washington, which is the headline debt number, which you'll see is 60% on the kind of mid-level on the right side, with using a total government net worth. Now, what we do, because we're very, is we do general government comparison sovereigns. So you may compare Cook County with Harris County, with LA County, with Miami-Dade County, or on the state level. We look at general governments, which if you look on the right, has to be built up through the US federal government, the 10,000 US state and local government, which is a Herculean task. That combines for Gen Gov. Some SOEs which go into the number. This gives you the international comparison. The US is a global society. We look at this globally. The world's becoming more global every day. You'll see the difference where the comparison number, where they only look at 26% of the US balance sheet. We look at 100%, which is 64 billion. This is the analysis. This was done for them, and they found it very helpful. You'll have the slides. You can look at them. There's a journal of applied corporate finance, which has the entire debate and the backup on this, which is a very good article you can look at. I'm going to keep on moving. Next. Say we use citizens' wealth. We combine GDP and government total net worth. We find that to be the most helpful metric at a very, very high level. Keep on going. There's a citizens glossary for the language that's developed on this. This is analytical at a high level. You have templates, Excels, so you can do workbooks on it to understand how this gets done. And we're doing this throughout the world, actually. Next. Next. We gotta go. I'm gonna keep on moving. Let's see. Okay, here's some more math examples. I'll let you use them later. Lesson number 7, we're almost done. I'm not gonna spend much time on this. Greece was an amazing experience for us. I'm not gonna spend 2 minutes. I'm gonna do a second. Keep on moving. You may or not be aware that there's a very large number of different standards that are used at a governmental level, a sovereign government level. There's SNA 2008, there's ESA 2010, there's GFSM 2014. They're all competing statistical standards to measure the financial performance and more increasingly balance sheet. They have differences, comparison. We had to master all these as part of Greece. Then you have IPSIS, you have IFRS at a global level, and then there's a Maastricht Treaty. So this gives you a sense of the landscape that actually exists. Next, please. I'm moving very quickly, I know, but that's fine. These are the 7 countries that have proper financial statements that you can actually use and analyze. They do not have fund statements, by the way. And some of them, like the UK, France, Switzerland, they are credible countries. We do not put the US in there because the federal balance sheet is very problematic. Dave Walker, who spoke at your group before, is an advisor to the foundation. And this is what you got on the sovereign level. Next, at the NGO level, using international accounting standards. Again, these aren't businesses. Next slide, please. You'll see that there are, the World Bank uses it, the IMF uses it, The European Union uses it. So it's there you go. The slide's right up there. All use international standards. And the states, by the way, in Germany, Bremen, Hesse, Hamburg, North Rhine-Westphalia, international accounting standards. These are states. They do not use fund accounting. They do not have 4 or 5 or 3 different statements. Super simple. They use it for management purposes. Keep on moving, and I think we're almost done. We are almost done, I'm hoping. The New Zealand model is a very effective model we found for public financial management. We are not just accountants. We've been criticized before for being no. And there's nothing wrong with being just an accountant. Please respect, but that in a number of circles is viewed as being for another table to sit at. We look at full public financial management. We look at actually the running of the operation, how it's performing. And this will be the last series of slides. It's extremely good, the New Zealand model. It's the best in the world without question. These are the issues we're concerned about: decision-making, corruption, which is systemic, regardless of where it is. Efficiency, net worth, education of the public, financing competitiveness, investor confidence, tax release, and sustainable growth. This is our perspective. This is what we look at. Keep on moving, and I'm almost done. And EU, Greece, these are our accomplishments. You can look at them. We were very fortunate there. We had a team of over 200 people, by the way, working on this to help the EU and Greece. And then last question should be coming up now. Please. Slowness over there. Topic now. Keep on going. Next, Greece. These are accomplishments. They've moved from best to last. I'll go through that later. I want to move here. Okay, last topic. How are we doing for time? Good. And here, this is how we use financial information. Next. Okay, this is a part of a class I teach at Columbia called B28. It's called Using Financial Statements to Assess Risk of Governments. Next, I teach it with Shiva Rajgopal, by the way. New Zealand. Let's look at the United States of America. How has it performed financially? Okay, and we look at the New Zealand, we take the United States. We look at government net worth as a percentage of GDP. And again, it's at governments, this issue of governments being it's not. The governments are run as an operation. Look at the difference in the numbers between New Zealand and the US. Best, and the US far does not have public financial management practices. If you look at the numbers, the percentage of net worth from 2000, last 20 years, you look at New Zealand, it's gone from 11% to a positive 48, US from a minus 70 to a minus 122. Citizens' wealth per person, US dollars from 15 to 60, drops from 10 to 14. There's problems here, and they may not be discussed, it may not be the menu, but states, there's 10,000 of them that go into the Gen Gov model. Next, I only have 3 more slides very quickly, and you have all the slides, you can ask questions later. Next one we've done New Zealand. And if we don't go, then I'm just going to stop. Can you please move the slide? Okay. This is the US government net worth. You may know David Walker. This is in his book on page 204 of his new book that came out. And it's the US citizens' net worth. If you look at the net worth, look at the decline. These are numbers that we look at. This is big picture. Was it 10,000, 11,000 in 2000? Financial crisis 2009 hit. Look what happened, then another drop. This is not what's going on in other countries. This is serious. These are serious declinations that don't get recognized without proper balance sheet and combining with an economist for the GDP. 2 more sheets, please, let's go. The next one, I'm hoping we can get to. Okay, difficulty with numbers, Japan versus US. Everyone's heard Japan. 238% debt, the US at 79, in the middle of the chart. If you actually look at a total balance sheet, full balance sheet, international standards, Japan is a minus 85, US is actually a minus 132. Worse than Japan, not a fraction of the debt. And the last slide we have is on Europe, I think. No, this is the 10 numbers. We have a German comparison, and then we go to Europe. Great charts, but I'm going to let you ask questions now So Joel, you want to start?
Sure. Paul, thank you. Brian has his hand up, so I'll let Brian ask the first question, but thank you, Paul, for the presentation.
Yes, Paul, thank you. Thank you for the presentation. My takeaway from your presentation, I think, is either that your organization does not support fund level statements, or does not support fund level statements that are prepared on anything other than the full accrual basis of accounting in the economic resources measurement focus. I guess I'll just say that by explicit intent, our financial statements are for the knowledgeable user, that someone who knows what they're looking at. And they include three sets of financial statements. They include a budgetary basis. They include something on a fund or short-term basis for governmental funds, which may or may not mirror the budget, depends on the individual organization. And that is the budget may be in accordance with the GAAP shorter term, or it may not. And then we have a longer term measurement focus that is full accrual economic resources measurement focus. So I believe the information that you're talking about, or you think should be there, is there at the government-wide level. So given that, and given that I think the users that with whom you're affiliated are global level, are they harmed by fund level financial statements for governmental funds?
Joel, would you like me to kind of just pass on the question? Would you like me to answer it as I've been referred to as a direct American? Which would you prefer? I can pass on the question. I can answer it very directly.
I guess
your preference.
I guess answer it.
Okay, I asked that because this may come as questions harsh. In preparation for this call, we prepared almost 3 weeks. And I'd mentioned the state level. The conclusion was unanimous. The approach that state and locals use is not only obsolete and anachronistic. And Joe, I'm sorry to say this in a way, but it may have been a best practice 20 years ago. It no longer is now. And our view is so clear and so firm on this that we look at the financial performance of the United States of America, and we see this level of quote unquote accounting as being at the heart of the problem of the government financial performance and the declination of management decision. Now, we've taken the time, we've read the material. You know Sheila, she's testified in front of you a number of times. Brian, you asked her several questions when she testified. I saw the questions you asked Bill Bergman. They were very, very good. They were very diplomatic, and I wanted to be very careful with how I answered this because I want to do it methodically, carefully, and professionally, having to do it in Europe as well. So the answer very succinctly is these are not helpful at all. They're counterproductive. In fact, we view them as being value destructive. And it's that clear a distinction. So I don't think there's a compromise here. And I don't expect you to grasp or agree with what I'm saying, but I wanted to be very candid with you and give you my opinion because I thank you very much for giving us the opportunity, and we took it extraordinarily seriously. I mean, the time it took we had to master, GFSM and, and GASB, having that background, it was helpful. But I will tell you, on a comparative basis, they're just anachronistic. That's our view. And I'm happy to go through a comparison and show you this, but I understand it is a challenge for the organization. And I wanted to be careful in saying that because I say it very respectfully because I very much appreciate and looking at the careful work you've done with these public sessions. This is remarkable, Joel. I mean, it really is a noble exercise, but I can't comment any other way.
I appreciate that, Paul. I guess it seems like it boils down to we think the information's there. The government-wide statements exist. The information that Sheila and Bill and Truth in Accounting and you want is presented. And so it's really it comes down to, is this extra information that we're including to try to be transparent and do something different is harmful. Is it harmful or is it not? And you and Truth in Accounting people think it is harmful, and it takes away from the information that is there that you want us to stay. And whether or not it does, I guess, is kind of our end decision point on it.
And what we try to do is, from a financial perspective, is to look at the numbers and the points we're making here. And I've spent a huge amount of time in New Zealand. I've spoken there for them with the finance ministry. There is a undeniable causal link between the different types of financial management systems, of which accounting is at the heart, and the resulting financial performance of the country. And because we look at financial security of the United States of America, and we look at the currency, and we look at where we are in the financial position, we see tremendous storm clouds ahead. And when we look at that, we want to say to the United States of America, and by the way, I'm an American citizen, I was born in the US, that the accounting is extraordinarily important for management purposes. And it's not, and when you look at the financial results of the United States on a general government basis, and by the way, the US government doesn't even publish general government financial statements. They act, I mean, it's such an anachronistic way to look at the world. I know it's hard. We went to Greece and we saw this, disparity. They had been initially considered the worst accounting nightmare. They were like, Greek accounting was a horrible term. And to get them to change, to realize that public financial management and international practices were essential and that they can affect their performance, it took 5 years. And this is only our first meeting and our first conversation. It may take 5 years, it may take 10 years. But it clearly, for the survival of the US and the best interest of their currency as a reserve currency, being a leader and adopting the best practices and moving away would be an extraordinary benefit to the United States. So, Brian, that's the answer from our perspective. Thank you for asking the question. I know we're out of time, but I'm willing to answer more questions either now or later.
Thank you, sir, for being here.
Paul, we are out of time and we've hit our break. But I appreciate you being here. We have Ian Ball's letter too. He has a response letter to us. And so we've read that and I'd like to, we do have your slides. Greta sent them out to us right before your presentation. So I'd like to look at them a little bit more. And if we have further questions, I appreciate the offer to be willing to answer some more for us in the future. So we appreciate your valuable time and the insights that you've brought. It's very insightful, and it brings a unique perspective that we don't always hear. So thank you for that.
Thank you. If you'd like us to send a team of people to come meet with you, we're happy to do that. That's how serious we take this. Thank you very much. Thank you, Jeffrey, as well, and Diana. Appreciate all your efforts. Have a nice day.
Thanks, Paul.
My name is Ed Bachrach. I live in Chicago. I am a CPA. I practiced public accounting in the early 1970s and was familiar with the financial accounting for the private sector. I am now a public policy practitioner. I wrote a book that was published 2 years ago about the government structure in the city of Chicago, called The New Chicago Way, Lessons from Other Big Cities. And while we looked at a broad number of areas of municipal governance, we did have a chapter which I wrote about the finances in the city of Chicago. And then I did write an email to GASB January 18th of 2019 about this project 3-25. And I have two concerns about the integrity of the state and local financial statements, especially in Illinois and especially in Chicago. One that I'm really not going to dwell on is how the units of local government in Illinois have been able to avoid showing the type of deterioration of their net condition that they should because of their treatment of pensions and OPEB. I know many others that have called in and that you've had testify have talked about that. So I'm not going to dwell on that. I'm going to dwell solely on a practice that takes place in Chicago and that I see reflected in this project. And that is, you make the comment in your statement of short-term financial resources that borrowings and the proceeds from bond issues, whether it be short-term or even long-term, that are used for particular purposes, can be included in the statement of funds flow or revenues. What happens then in Chicago is that when they're ready to balance their budget, they stretch any definition of borrowing and throw it in as a way to plug their budgets. So in the current budget cycle, they were facing somewhere, depends upon how you calculate it, between 800 million and a $1.2 billion budget deficit. They plugged it a little bit, or they solved it a little bit with some savings and some tax increases, but the majority of it was from two things. It was from short-term borrowing or intermediate term borrowing, and also from the savings that they calculated that they would achieve from refinancing at lower rates. And yet, how do you stretch the definition of revenue so that the savings that you will get over the refinancing of a 10 or 20-year bond obligation comes into current income this year? You'd never see that in financial accounting. So those are the concerns that I have. My understanding, and I've tried to read, I'm not that familiar with GASB. I'm much more familiar with financial accounting in the private sector. So I may not understand, but even if I don't understand, people look at me as somebody who is a CPA and public policy practitioner, and if I can't get it, how can city councilmen or aldermen or even budget directors in the city government understand it? And some people have explained it to me that the GASB statement allows funds that are the proceeds to be considered as revenue, the equivalent of a funds flow statement. And not necessarily a statement of financial activity or an income statement, as I would call it. And so we have as I've said, the chronic condition where the city meets its statutory obligation of a balanced budget. And yet every year when you get the financial statements that are stated in GASB terms, there's significant deterioration of the net condition. And the further problem is the fact that the budget is the statutory action that the city council takes. That's what's approved. So all of the flurry of publicity and drama around budgeting comes leading up to the city council voting on the budget. Nobody ever sits down and compares the budget to the financial performance after the audited financial statements have been published. So I guess the other encouragement would be for GASB to come out with a pronouncement on budgeting. Now, in my book, I also look at financial practices in other major cities, and we quote Richard Ravitch, who perhaps some of you know oversaw the reorganization of finances in New York City in 1975 when it was virtually bankrupt. And in a book that he wrote, he said that they now, not only New York City, but sometimes he suggests that even New York State budgets based on generally accepted accounting principles. Whether they do in New York or not, they certainly don't in Chicago. And that's a problem that we have. So, and finally, when the budget was prepared and presented to town hall meetings in Chicago the last 2 years, I have asked the question whether or not this treatment of borrowing is in according with generally accepted accounting principles or even GASB. And the budget director and the CFO have said, oh, yes, it is. The proceeds from borrowing we consider that as revenue, and we are allowed to do that. So I think I've said all that I want to say. I'd be glad to answer questions. Thank you, Joel.
Thank you, Ed. Appreciate it. Appreciate your perspectives. So Diane has a question. Go ahead, Diane.
Thank you, Ed, for being here. And I just had a question. You've talked a lot about the budget deficit of the city of Chicago. And since our scope does not cover budgets and we don't issue standards around how to budget, how could the GASB help address your concerns?
Well, I think, again, speaking as somebody who is familiar with financial accounting, where you talk about proceeds from borrowing included as a revenue item, if I ruled the world, I'd put in 2 statements, and I would say those proceeds can be used, but it's only for purposes of the equivalent of a funds flow statement and not for the statement of financial activity, the equivalent of an income statement. Some clarification there that could give guidance. Likewise, I would put in a qualification that this is an accounting standard for the preparation of financial statements, and it should not be abused or conflated or even consolidated into the general fund or the corporate fund for municipalities so that they can use it as revenue for budgeting. That's a long-winded approach, or you could just say, it is not to be used as a mechanism for balancing budgets. That would be the abbreviated way to handle it.
So
that's what I'd like to see. I don't know how you could massage it in order to satisfy your requirements.
So you would not want to see it as inflows at all?
Well, I mean, it's funds available for the operation, just as you funds flow statement on a financial statement. It's used for a different statement. I don't see it. I don't. Even when I read this project 325 in the short-term financial resources, I didn't see where it was considered to be, or you didn't explicitly say it should be considered as corporate fund revenue for purposes of a balanced budget. I didn't see where you said that. I didn't see where you didn't say it. I'd like for you not to say it.
Thank you.
Mm-hmm.
So Ed, the way it's not in this project in a way because we didn't change what exists now related to this, and that, realizing that you're not a government accountant, right?
Mm-hmm.
I'll talk a little bit about what's in there and just get your perspectives on it. But
Mm-hmm.
as currently required and is changing, we have what we call the government-wide statements, which are presented on full economic resources, measurement focus, full accrual accounting. So that includes all the assets, current and long-term, all the liabilities, current and long-term, pension liability, OPEB liability, all of it's presented. And then there's a statement of activities that is an income statement per se for that activity, full accrual, full economic resources. So we have those government-wide statements that has that whole perspective. And then we have a second set of statements that are the fund statements. And for the governmental funds, currently, and this is where the proposal comes in, that we're modifying, right? This is where the changes come into that statement. They're even currently and as proposed, both supposed to present a short-term perspective. It's supposed to present, as a government, responsible for taxpayer resources, trying to provide accountability for that, what came in and what went out, what came in for primarily taxes, and what did the government spend it on. So it is a flow statement. And you even see in the proposal that changes, we're changing from terms to try to make it look try to be more and say it's more like a flow statement, because it goes away from this, what is currently called, which is statement of revenues, expenditures, and changes in fund balance. So those items could be called revenues or other financing sources, which is actually where the proceeds would come in, and call them inflows and outflows. And so we're trying to really convey that the perspective is what came in and what went out. That's what those statements are trying to convey. And so that's what we're kind of doing currently and what we're trying to do. And I guess.
Well, my question for you, the first comment you made, that there's this government-wide, I'll call it an income statement, and then you have these specific funds. So are you saying that the government-wide is the equivalent of a consolidated financial statement, and all these funds are all the subsidiaries? That, are you making that analogy?
In a way, you could put it like that. It's not quite the same thing, but.
Well, I mean, is it apples and crab apples or apples and oranges? I guess that's my question, because I understand where you may have within a government, you may set up a separate fund for borrowing. They may have to statutorily set up a fund to borrow or refinance. But if that flow is not coming into your statement of revenue, expenditures, and change in net condition, but it's going to a different financial statement of funds flow, then there's not a problem. But when it's unclear, then you open a gap so that budget directors and CFOs in Chicago say, well, I can include that in my budget because it's revenue. GASB saying it's revenue. Do you understand my concern?
Well, I do understand the concern, and we've heard it a lot. And so I think we're trying to come up with the right warning labels, the right words to put on the flow statement so that it's called an inflow, it's not called revenue, so that there's some warning labels that say, hey, you need to go look at, this doesn't include long-term assets and liabilities. This is only short-term perspective. You need to go over to that statement to see the full effect or long-term perspective. So we're trying to work through that. I mean, I think we've heard that. So that's kind of where we are. And I appreciate your question back. That is kind of what I was trying to get at.
Right.
The one thing I will say is, though, is that's kind of how it exists now. And actually, it's in that statement. It's in a flow statement now. Maybe it's not called the best thing, but those proceeds from borrowing are called other financing sources within that statement and presented in a different section than revenues. So, but none of anything that I've said today will prevent any government from calling it and doing whatever they want to on a budget basis, because we don't set budgetary standards. The states and local governments, that's their sovereign ability to set budget standards as they want to, call things what they want to, call things balanced, et cetera. Whatever we do now, whatever we change it to, isn't gonna, I think, in the end, change that budget. And I guess how can we, what could we do?
Yeah, so it comes back to my response to Diane. And let me go a step further and tell you that when this budget season is unfolding, there are many of us who are critical of the budgeting practices that are public policy practitioners. And we write op-ed pieces, we write policy papers that we post on our websites, and we're critical of this. It would be wonderful if we could have a citation to something from GASB where it says, these revenues are to be used for the funds flow statement, not for the statement of revenues, expenditures, and change in that condition, and shouldn't be considered in budgeting. It would be great. That way, when we hope we wouldn't have a confrontation with a budget director in a public hearing, but when you do, you can read that and it's more definitive. Right now, they seem to hide behind this, and you get into more of a semantic argument than we would prefer.
Understood. And I appreciate that. Jeff.
Hi, Ed. Thanks for testifying today. We've heard a lot about issues in your state and difficulties. And I actually used to be a resident of Chicago in the past, so I know something about it from that perspective as well. Do you think, though, the issue at hand is one of accounting? In other words, when you're seeing these budgets, when you see the media, when you see is it the politicians don't know there's a problem? It seems to me to be a pretty well advertised problem. The state of Illinois' credit rating is the lowest of any state in the country. You certainly see a lot of headlines about the size and magnitude of these unfunded pension and OPEB liabilities. I would find it pretty surprising if there is a single legislator who professes not to know the extent of the problem, yet they choose not to solve the problem. Is that a governance or political problem and not an accounting problem? You seem to be saying it's an accounting problem.
Well, if there was more clarity in the accounting, it would be we would be better able to hold the public officials accountable. I will tell you what I have experienced in Chicago. First of all, the media doesn't get it at all. I mean, the people that are reporting on this, the Chicago Tribune and Cranes, they talk about the most trivial. They're looking for personality conflicts. They're not looking to really understand what's going on in the finances. I can tell you, having lobbied aldermen, we have 50 aldermen. You're aware of that, having lived in Chicago. Way too many, by the way. But 201, not a one of them understands any of this. They do not understand it. I choose to believe that the budget officer and the chief financial officer do understand it. I'm not sure of that, but I choose to believe that. And I'm not sure that the mayor really understands it. The mayor would like not to understand it. That is obvious, but I would assume that none of the aldermen really understand it. And I would assume nobody in the press really understands it.
Yeah, I mean, that's where we're talking about these government-wide statements that have this information. That's why we think, any and all efforts, which it sounds like you do, to publicize the existence, which shows all of these assets and liabilities, and is a financial statement, that should be something that folks such as yourself should be pointing these aldermen to see the extent of the effects of their decisions. But
yeah, the publication of their audited financial statement should be an event, but it's not.
Okay, thank you.
Alan.
Good afternoon, sir. I appreciate you being with us. I'm going to ask a question. I think Jeff may, I'm going to use some terms. I hope, Jeff, I don't use these terms wrong, but just the way I think about what I was hearing you say when you were talking to Joel. I think of budgets, and I think of the concept of budgets in two concepts. You have governments that have what I would consider structurally balanced budgets, right? So where they have recurring inflows and they've got recurring inflows sufficient to actually pay for those recurring outflows, right? So they're not having to worry about gimmicks or one-time funds or one-source funds to actually balance the revenue side of the equation against the expense side of the equation, right? And so their collection of taxes and their services and fees can generate enough revenue to pay for whatever the expenditure side of the equation is. And then we've got governments that have structural imbalances, right, where they don't have that balance between those two entities, and they result of things like borrowing and one-time funds and stuff to actually provide that balance. If I'm hearing you right, is what you're really trying to get at, and like putting in a flow statement, is the ability to be easier to see what stuff is that normal recurring revenue, recurring expenditure thing separated out from those one-time non-recurring sources of revenue, typically, because typically it's one-time revenue sources that they use for that, such as borrowings, to actually see that separate from just the other revenue, to know that, hey, you have this recurring revenue, but you did these other things over here, which are typically not recurring in nature, one-time gimmicks, and that's how you end up balance. And it should be able to see that very clearly is what you're really looking to be able to see.
Is that a question for me?
It was, sir. I just trying to make sure if I'm hearing what because it gets back to the idea.
Well, but what you're describing, what that sounds like to me is a financial statement where you have you go down through the statement, your financial statement, you have all the regularly recurring items, and then you have extraordinary items. on a private sector financial statement, but those would still be items that would be items of revenue. And financial statements don't put borrowings on the income statement. It wouldn't be an item of revenue. It's on a different statement.
No, you're proposing to be like on a flow statement, right? Is what you're getting at.
On a flow statement.
Right. But even on a flow statement, you'd have those things put in a section together to where you'd see them all together, right?
I don't see where you'd combine the flow statement and the income statement.
No, sir.
No.
Yeah. Right.
Mm-hmm.
All right, Ed, I'm going to switch gears a little bit on you. And it wasn't something that you wrote about, but I'm just going to ask, our statements currently have, and part of what we're trying to improve is management's discussion and analysis, the MD&A. Is that something that you find that you've read in government financial statements to the extent you go and look at them? Do you find it useful? You know, what about it do you find useful, and how could it be improved from the ones you've seen?
Well, they're not always useful. I do read them thoroughly to try to discern what's going on. It's a pretty vast question, so I wasn't prepared for this. If I had been, I could have brought you some of the most egregious examples. But when I read them, either it could be one of two things. When I don't understand them, it's either me not understanding them, or they don't understand what somebody with a financial accounting background is looking for. And I'm not sure that the people that are writing the management discussion, that's got to be management. It's certainly not the accountants. The accountants don't write that. They just express an opinion. So, and I'm not sure that they understand it, or if they do, whether they're trying to obfuscate. So I can't say, but in general, they're not helpful. You kind of get the drift. And then, if you really want to nail them down, you got to try to contact them, which is virtually impossible. Mm-hmm.
So they should be helpful. You would like for them to be helpful. Do you just find they're not overly helpful? Is it really because
they come close, but not close enough for you to really understand, and they can be off by material amounts.
Is it the analysis of the financial activity? That's because there's a few other things like capital asset or long-term debt activity. There's some other things that go in there as required, but it sounds like it's mainly the analysis of the year that you're looking for that they don't really explain very well usually.
Right. I mean, I'm going by memory right now, but a typical explanation of how they covered a significant deficit in the net condition, or deterioration of net condition. Net condition decreased by $1 billion in the last year, and that was that was made up of $500 million increase in pension obligations and $500 million worth of borrowing short term to cover the operating loss of the underlying entity, something like that. And it gives the impression that, we had a deficit, but we covered it, or it didn't matter. And it doesn't say we had to borrow the 500 million, and that didn't improve our condition. It gives the impression that they improved their condition by borrowing money. That's my whole point.
Would you say that a discussion of budget to actual comparison should be a required part of an MD&A?
I think that's a very good recommendation. I think it should. Yeah. I mean, some of you may know that at the state level, and my focus is more on the city of Chicago, but at the state level for the last 3 years, to balance their budget, they have included revenue they expect to receive from selling the state office building in downtown Chicago, and they still haven't sold it.
Thank you, Ed. And we've kind of reached the end of our time, but I surprised you with the MD&A question, but if you have additional thoughts about the MD&A and you want to send them to us the same way you did your comment letter, we'd still be welcome. We'd love to hear anything that you have. So I appreciate that and so please take it away, sir.
Well, thank you. I certainly appreciate the opportunity to come and talk about this topic. I believe it's a fairly important one. A little background about me. I'm now in my completing my 53rd year post-college. I'm still 49, so you're going to have to figure out the accounting for that one a little bit on your own. I started my career with Arthur Andersen back in 1968. More realistically, 1970, because I had to take a little detour for the Army at their request, kind of stuff. I've been at it ever since. I have always worked in the private sector. My clients at Arthur Andersen included schools, particularly Chicago, among them, Evanston, both elementary and high school, and other governmental agencies. I'm a specialist in primarily application to private for-profit entities. I have commented on both the proposal now and the preliminary review version of that 2 years ago, kind of thing. And I have a particular interest accumulated over time or developed over time in pension and OPEB accounting and reporting, which is hardly the only thing I practice on. I'm doing currently consulting on lease. I have a particular interest in that, so and I'm from the state of Illinois, which is famously or notoriously among the more difficult financial challenged states in the country. So with that, let me go into my comments generally. I'm certainly not going to generally read from my letter. All of you are more than capable of doing that to the extent that you can tolerate, kind of thing. I'm a full resource guy. I don't want to end my presentation with a short declaration, but I'm one of the full economic resource advocates here. I think some of the goals of the reporting concepts and the financial reporting standard proposal need to be a fair representation of economic reality first and foremost. Secondly, I think they need to be a framework for communicating and evaluating past and contemplated actions and decisions. One of the things, and I think they need to provide information for decision-making by people other than management, particularly financial reporting in the public sector, as in the private sector, is primarily geared to non-management users. And I think there's too much of an overemphasis, quite frankly, on management users and management convenience. These users include, obviously, legislators who aren't financial people. And you can go talk with a couple of legislators, as I have done from time to time, and their eyeballs glass over very quickly when you get to finance and accounting. Government officials who are not financial, voters have trouble understanding some of this stuff, particularly in the language we use, which I'll get to in a couple of minutes. Employee organizations which negotiate badly or mistakenly based upon terms like surplus and focus on an individual fund, while the governmental entity, which the taxpayers support, the legislators are responsible for, is failing financially, as it is in Illinois, or failed, depending upon your opinion, kind of thing. I kind of lean close to the thought that we've already failed. Nobody's come to certify the death. Illinois is very sick. I think you need good information. I think the basic foundation for that is full accrual accounting all the time, everywhere. You know, all subunits reported, regardless of how they're combined. I think it would be helpful if there is more combination or consolidation than less. I studied fund accounting in college. I've encountered it for 50 some years, a variety of areas. I was a school board member for 12 years in a district that's now approaching $100 million in size, which I consider a small entity, but a fairly large school district. Kind of thing. I don't think that the fund distinction is nearly as useful as it's represented to be, any more than the subsidiary distinction in a consolidated company is as useful as it's considered to be. Both of them allow significant management discretion to move funds around and enter into transactions which on an individual basis tend to either confuse or mislead the condition of the entity as a whole. And quite frankly, some of those transactions are designed for that purpose. And that's not exclusive to governmental entities. Private entities are famous for that. And obviously some of the rules have driven to that. So I think a more consolidated, I'm a fond believer of balance sheets, income statements by whatever combination, cash flow separate from income statement. The resource flow is a little confusing for most of the world who is not in governmental accounting because it combines the cash flow and the income statement in a certain manner. One thing that I particularly don't care for in fund accounting in certain funds, I understand the structure of funds, but is that borrowing and other financing transactions end up in the fund balance, which is, well, I don't think a financial borrowing transaction should ever end up in the fund balance and should never be considered expendable, which of course is the conclusion frequently drawn by those not too well informed. MD&A is useful, supplemental information is useful. For specific concern areas, there's no basis, I think, for introducing an attempted concept of short-term measurement focus and accrual, which is, in my opinion, only slightly different than cash basis accounting. I think the occurrence of completion rule at 12 months, quite frankly, in Illinois is a great example of this, is too much focused on cash payment. Cash payment in many items for services that are incurred in Illinois, they know they're not going to pay them in 12 months, and so they're left out. So the following year. This is the unreported accounts payable hangover problem, which is only a $6 or $7 billion problem in the state of Illinois. I say only because the big problem the state of Illinois has is a $240 million approximately pension and OPEB liability for unfunded status. I don't think the term balance sheet should ever be applied to anything less than a full economic accrual, full accrual with short and long term. As I mentioned before, financing activities should never end up in equity. And I think pension and OPEB costs particularly need to be reflected at every unit level to which they apply. Wherever there's an employee, not doing so ignores the single biggest problem I think that many governmental units have today, which is funding their pensions. In the state of Illinois, which reflects contributions, not pension costs, which are service costs and interest on the debt, they don't fund at full actuarial requirements, and it still requires 25% of the total funds of the state. Ignoring 25% of the budget in favor of all the things that make up 2% makes no sense at all, and it confuses the public and fails to explain why the state is in such serious financial condition, why the debt is rising even if they happen to have a surplus, so indicated, from time to time. I don't believe that budgeting practices or the convenience of management for internal reporting should ever drive external reporting. They don't in the for-profit world, they don't in the non-profit world, and I don't think that's the best basis for driving them here in the governmental accounting and reporting world. Pension and OPEB obligations are, quite frankly, seriously misunderstood, I think, in large part. The previous speaker from Michigan just mentioned one of those concepts, things that are paid over a long period of time. There's a notion that the number people see in Illinois, that's 240 billion, is paid over a long period of time. That's not correct. Or at least that's incomplete. What happens, remember, the liability is the present value of the ultimate liability. The ultimate amounts to be paid in Illinois are somewhere between 4 and 10 times the number you see as the debt, if it's undiscounted. That's the amount of cash that's going to have to be gathered up at some point in time and remitted over the next 50 to 75 years. The present value calculation is the amount that should have been paid as of today. And I think that conversation is incomplete, and that tends to get seriously masked by the accounting and the presentation for that, which is why I think OPEB liabilities need to be reflected. And lastly, there's a presumption, I know the rating agencies use this unduly, and I think legislators implicitly rely on it. There's a presumption that taxing capacity is unlimited. It's not. At some point, people will do one or two things, either vote against the tax if they have the right to do so, or vote with their feet and move, kind of thing. So taxing capacity as a practical economic matter is not unlimited. As a consequence, I would encourage the board to reevaluate the notion of publishing this particular proposal and reconsidering going to a much more comprehensive, full economic resource, full accrual accounting basis. Thank you.
Thank you, sir. And thank you for both your service in the military as well as a CPA for 50 years, which amazingly you have done at the age of 49. That is very impressive. So I thank you very much for that. Thanks for your comments and your thoughtful
accounting there.
So Brian, start with you.
Barrett, thank you for coming today also. Thank you for your long service to the profession. We certainly benefit greatly from your testimony, and it's just invaluable having you here. Quite clearly, you are a staunch advocate of the economic resources measurement focus at the fund level.
Yes.
So my question to you is a simple one. That is, we do have two sets of financial statements in our reports. We've got the economic resources measurement focus for the, generally speaking, for the government-wide level, and then the fund level government side is something of a shorter perspective. Is somehow the government-wide statements, are they somehow ineffective or insufficient? And wouldn't we lose something at the fund level on the government side if we went to a longer term perspective?
I think from a financial reporting perspective that the fund level, frankly, are less useful than the entity-wide. And they encourage people to look in the wrong place. And by the wrong place, I mean they tend to emphasize the fund, and particularly in larger organizations, the general fund, even though there may be specialized funds that are transferable at the legislature or the governor or the administration discretion into and out of the general fund from time to time, which is how they rescue the general fund periodically, at least in the state of Illinois. I think from a financial reporting standpoint, the fund information is not only less useful, but tends to contribute to the confusion. Quite frankly, I'd like to see less of it and much more of the entity-wide focus.
So just a quick follow-up, you believe that financial statement users are just simply bypassing the government-wide statements, and is there something that
Yes. They're bypassing it because there's several problems wrong. There's newspaper coverage, there's popular reporting. Very few people, except for people like me, go and pick up your GAFR issued 18 months after the year. Now, I live in a world where, particularly in the public company, you have between 45 and 90 days to file your information, period. Or you get kicked off of the board if you're a public company. Private companies, you may have, depending upon their size, may have widespread market reports from investment banking institution and commercial banks. But you don't have a long wait. The newspaper will report reports of the general fund a few months after the end of the year, and the publicly available entity-wide financial statements come out 15 months later. Guess what page they follow? Right behind the obituaries in the newspaper. They're ignored by almost everybody except for those who produce them and a few hardcore individuals like myself who are looking for them all the time.
Very well, thank you.
Chris.
Thanks for joining us, Mr. Peterson. I had a question for you regarding your comment in your letter about the financial risk profile of entities, and just wanted you to elaborate on that a little bit and help me understand how we might, through financial reporting in this project, better highlight or depict the risk profile of a given entity.
I think the risk profile appears most effectively in the section, is elaborated in the MD&A section, somewhat comparable to combining the traditional SEC's MD&A and business risks sections. If you're familiar with the 10K financial type report, which is the annual reporting mechanism for public companies, a lot of private companies of size use them. Where I'm currently consulting is a private company of size. The annual report was just completed last week, officially. Been complete draft for a while, but it's officially last week. And it follows that practice where you have the significant risk profile kind of conversation incorporated into the MD&A with its with a discussion of its obligations, particularly longer term. Because very few companies, except those who are near bankruptcy, or very few entities who are near bankruptcy, suffer seriously from accounts payable. They suffer from long-term contractual obligations, pensions, OPEB, sale and leaseback, and other kinds of things. So the risk profile is driven by the non-current transactions, for the most part.
Thank you.
Dave?
Again, joining everyone and thanking you, Mr. Peterson, for joining us today. You mentioned the timeliness of the state's financial statements. Do you believe the timeliness would be improved if the board adopted your approach and had economic resources be applied at the fund level?
Not automatically. I mean, I can tell you there's a magic silver bullet to make more timely reporting a fact, but I don't think if you told them you could put 4 lines out there, they'd be more timely. I think part of that is probably politically driven, and part of that is habitual. unfortunately, I'd love to tell you that it'd make it more timely, but I'd be exaggerating.
Okay. All right. Thank you.
Diane.
Thank you, Mr. Peterson, for being here. You had talked in your letter about using or including a cash flow statement. Why do you believe this information is essential, but information related to the short-term financial measurement focus is not?
I think the cash flow statement I envision is much more like the corporate version. A little bit that accompanies an income statement is somewhat more like the problems I have with the proposed short-term. One, I don't like the short-term emphasis and the exclusion of transactions that aren't considered short-term. So that's a fundamental problem that's universal. I'm not fully comfortable with the full design of the resource flow statement, and in particularly, I don't like the accounting devices that are inherent in fund accounting that result in things like borrowings ending up in fund balance. In my opinion, they should never end up in fund balance, ever. And that just distorts the notion that the fund balance has an availability from a resource that is an obligation to repay. And of course, that fund balance, which of course doesn't represent cash, as most accountants know, the average voter on the street and the average negotiator for a union says that's cash available, let's spend it.
So just as a follow-up, it sounds like you would want to move the governments away from fund accounting to something similar to what corporations use.
Closer, absolutely.
Okay, I thank you for the clarification.
Yeah. And I think that would be a lot less confusing in the public debate.
Mr. Peterson, I'd like to build on that and go back to something you said in your earlier comments. One of the, in my view, one of the main reasons we've got the dual perspective, we've got the long-term perspective in the government-wide statements for users, you know, who need that perspective for it to be out there for everybody to use. But one of the real benefits of the shorter-term perspective is that the purpose of the government is to take citizens, taxpayers' resources, show how they were pulled together, and show what they were expended on, what they were, the outflows were for that year. And to do so in a way that the citizen can understand. You know, a citizen's not an accountant, this kind of notions of accruals and things like that isn't as easily understood for somebody who hasn't studied it. And that was kind of a notion you started talking about. That's why I've always thought those kind of existed in the past, why the short-term focus was on those governmental statements. If we go away from that, are we losing some kind of financial accountability to the citizens and the taxpayers in a way that they can understand, because we won't have that short-term focus, easily understood statement?
I don't think so. And the reason I don't think so, as you've pointed out, and that's certainly true enough, most people don't understand accounting. And they don't understand it when it's cash basis. They don't understand it when it's short-term management focus. And they don't understand it when it's full accrual. So the absence of understanding is an educational need, if you will, that exists regardless of how we do the financial reporting. So in my view, the question is, what is the best quality financial report?
Thank you. Lisa.
Hi, Mr. Peterson. Before I ask my question, in the spirit of full disclosure, let me first tell you that some would probably call me the small government cheerleader on the GASB staff. So my question for you is that we continually hear that small governments are moving away from GAAP because the standards don't really reflect how they operate. So if we change the fund structure away from what is used in budgeting to accommodate the adoption of something like an economic resources measurement focus, are you concerned that the end result will be more governments moving away from GAAP, specifically in states like Illinois that do not require GAAP reporting?
I don't think that fund accounting mechanics, particularly in larger entities, but even in smaller one, have to be abandoned to get to full entity accounting of financial reporting. Reporting is a little bit different than the internal accounting. And that goes back to my comment that generally speaking, I think too much of the financial reporting standard is driven by the budgeting and day-to-day management process, which I don't think is an appropriate driver. Corporations have that problem all the time. We have lots of subsidiaries. We present it as a single one. We still have to account for every single one of the 110 subsidiaries, but we don't have to report. And the smaller entities shouldn't have any, I don't think, unusual problems. I think the basic difficulty is people are uncomfortable with the idea that some of their decisions and their transactions aren't in cash in a way they understand. They are in cash, pensions being one of them. There's a big contribution requirement in place of the expense requirement, but you end up with something very similar. The problem, and that's regardless of size. So I think for transaction complexity in smaller governments, if you're a smaller government, like a smaller company, your best bet is don't engage in unduly complex transactions you don't understand. That's my advice to small companies. Don't do that. You don't have the resources to manage it. You don't understand it. And that would be the same advice to smaller governmental entities. Keep your operations simpler. The financing side is not necessary.
Thank you. Jim.
Barrett, thank you for participating in our hearing and offering your perspectives. I will plead guilty to being in public accounting and so on about as long as you have. But having said that, I wondered if you could give me your perspective on the role that you believe budgets should or shouldn't play in external financial reporting in general. And I will note that in the proposal, the board is proposing to eliminate the option to show budgetary comparison statements as a part of the basic financial statements and instead presenting it only as required supplementary information. And I just wondered, because obviously most governments budget by fund. And so there's a tie between budgeting and fund reporting. Given your views on fund reporting and so on, I wondered if you could elaborate on what role, if any, you think budgets should play in external financial reporting.
Not as much as they have historically, quite frankly. Most for-profit entities budget. They budget by entity, and they don't report either against the budget or by entity. And the entities are frequently comparable to funds. There are some fund structures that don't have a counterpart in corporate subsidiaries, if you will, but a great many of the funds operate just like a subsidiary. I think the budget is a plan. That's nice, but I think Dwight Eisenhower's observation was planning is everything, the plan means nothing. Once you get into the actual year, enough chaos ensues that the planning gives you the ability to pivot more than it does a useful comparison.
Well, Mr. Peterson, thank you very much. We, again, really appreciate your time, the time you took to respond to both the preliminary views and to our exposure draft. We appreciate the time that you spent with us today. We certainly, like Brian said, we really benefit from your experience and your thoughts. So thank you very much for your participation.
Allowed to participate today.
Thank you.
Happy to do that. Thanks again for the opportunity. I'm Dave Walker. My current position is I'm a distinguished visiting professor, and I hold the Crow Chair at the United States Naval Academy, where I teach the economics of national security. But I've worn a lot of hats in my lifetime. I am a CPA. I worked for PricewaterhouseCoopers, Arthur Andersen. I was a global partner with Arthur Andersen, ran a worldwide line of business for them before they fell. I've run 3 federal agencies, the Pension Benefit Guarantee Corporation, the Employee Benefit Security Administration, and the Government Accountability Office. My last full-time position was Comptroller General of the United States, which is basically Auditor General, Chief Performance and Accountability Officer of the U.S., and CEO of the GAO. I've also run a couple of not-for-profits. I've been a trustee of Social Security Medicare, and I've been heavily involved for several decades now on trying to promote and improve transparency and accountability in government at the federal, state, and local level, including running 2 not-for-profits that focused on that. So what you're doing is very important work. And what I'll do is just kind of summarize the highlights. Obviously your effort is extensive, and I'm not going to end up getting into the nitty-gritty. And I know you have a very capable staff. So, to me, I want to convey some key concepts. And I know that, your capable staff and the board can work together to work out all the details to the extent you think they have merit. All right. The first one is, I think it's fully appropriate that you're undertaking this fundamental review, because the financial condition and long-term outlook of many state and local governments has deteriorated dramatically. And I have found in my lifetime that politicians, like most human beings, like to emphasize the positive and play down the negative. And I think it's very, very important that while that's human nature and that's what people are going to do, whether you're in government or out of government or whatever else, it's important that financial reporting, provide enough information that helps the reader of the financial statements to understand what the true situation is, and to also be able to ask informed decisions to challenge assertions that are being made by public officials that may be technically accurate but grossly misleading, which happens quite frequently, I find. So with that statement, it's fully appropriate that you're undertaking a comprehensive review of the financial reporting model. And my first comment was that, I think having one definition of accrual accounting makes sense rather than trying to potentially come up with multiple definitions. And I think to the maximum extent possible, we want to try to be consistent with other generally accepted accounting principles and reporting practices. Otherwise, it kind of creates confusion. And as you all know, there's always already some skepticism on behalf of the public about, well, is government doing things differently? And do they have a different set of books? And why is this different? I think what we want to do is to make sure, to the extent that there are legitimate reasons that there should be differences, then fine. But if there aren't legitimate reasons that can be clearly, concisely communicated, then I think we need to maximize consistency to the extent possible. Second, as you know, most state and local governments budget on a cash basis. And that's why you have fund accounting, inflows, outflows, if you will. It's basically cash flows for the most part. And 49 of 50 states have a requirement to have a balanced budget. My understanding, the only state that doesn't have a requirement for a balanced budget is Vermont, although they try to seek to have one. All right. And the real question is, how do you define a balanced budget? Most of these states define a balanced budget as they balance cash flows for the operating budget. All right. They're trying to balance cash flows. Well, in some circumstances, that means that you end up deferring certain payments, such as pensions and things of that nature. In some cases, it means that you accelerate revenues through, so issuing bonds, if you will, dealing with, advanced receipt of taxes, or even just flat out going out and borrowing money that is unsecured, if you will. And some states have the audacity to call that a balanced budget. So I think one of the things that has to happen, and I think your capable staff can figure out the best way to do that, is how can we have some reporting or at a minimum disclosures that help people to understand what is being done in connection with any attempt to achieve a balanced budget requirement. And I put that in quotes, including whether and to what extent they are drawing from unrestricted rainy day funds, which there's nothing wrong with that. It just needs to be disclosed, okay? Including whether and to what extent they're issuing debt, generating cash, and call that and using that as a basis to say that they balance their budget. So the bottom line is, I just think that we need more transparency and clarity with regard to what these states are asserting, which right now I don't think that's the case. I don't think you get that right now, and there are different ways you can achieve it, but I will leave it to the board to decide how best to do so if you believe it has merit. What I've also found is that the single largest financial challenge facing federal, state, and local government is unfunded pension and retiree healthcare obligations. At the federal, state, and local level, they obviously exist with regard to civilian employees. At the federal level, they exist with regard to the military as well. And at the federal level, we obviously have social insurance programs, which are fundamentally different from pension and retiree healthcare, but nonetheless involve retirement income and health obligations. And I would commend the GASB because you've made a change already with regard to the statement with regard to the consolidated statement to be able to reflect unfunded retirement obligations. And I think that was a big leap forward, and I commend you for that. All right. But as was mentioned by the prior witness, states and localities focused a lot on fund accounting. And so the question is, what can be done to take that concept and provide additional transparency with regard to fund accounting? And I know that there's some thoughts under the alternative views. It's possible to maybe do a double bottom line approach where you do it, and then you show what the obligations are associated with that and have a double bottom line. There's different ways that you can get there, but I think it's important to try to think about whether or not that's appropriate, and if so, what's the best way to get there? Next comment would be is when I was Comptroller General of the United States, one thing that was very clear to me was the federal government was on an imprudent and unsustainable fiscal path. And that one of the things that was needed was to provide additional transparency as to the longer range financial and fiscal outlook of the government, including issues dealing with intergenerational equity. As a result of that, a new statement was created at the federal level, a statement of long-term fiscal position. And I think something like that is needed at the state and local level, because I can tell you firsthand, I've seen a lot of mortgaging the future going on at the state and local level. And unlike the federal government, states and localities can't print money. They can't manipulate interest rates. And at the state level, they can't declare bankruptcy. And unlike the United States, where most Americans have little interest in leaving the United States for another country, an increasing number of Americans are considering leaving states and localities for a variety of reasons, including their deteriorating financial condition. And I can raise my hand and I'm saying I'm one of them. And I know the GASB is headquartered in Norwalk, Connecticut. And I left Connecticut in large part because of its uncompetitive posture and deteriorating financial condition, long-range financial condition. So I think whatever can be done to try to provide more transparency there, which would facilitate more accountability on behalf of public officials, but also would help individuals to make more informed decisions about where they want to base their businesses, where they want to retire, what they might like to do in that regard. And then the last comment that I would have is that, a lot of states and localities and even the federal government, and changes are needed at the federal level too, I will admit that, and we'll continue to try to make some of those changes happen. But a lot of state and local governments own a lot of property. And that property, might be recorded in the financial statements at, cost less depreciation or amortization, depending upon the facts and circumstances. but the real value of that property could be substantially different than how it's being carried on the books. And one of the things that governments are going to have to do in order to assure longer range sustainability is they're going to have to restructure some of their financial obligations, but they're also going to have to rationalize their assets. And whether and to what extent they ought to be holding certain assets, whether or not they ought to privatize certain assets. And so I would ask you to think about, whether to what extent you think there's anything else that can or should be done in that regard. Now, all of my comments have to be taken with the understanding that smaller entities should not be subject to the same standards. I mean, you got to pass a cost benefit test. All right. Obviously, every state is big enough that they ought to comply with this. Many municipalities are, but not all are. And I know that you've used your judgment in the past, and I think you should continue to in the future to determine, the cost benefit with regard to the value of the information versus the cost of compliance associated with that. So with that, I again appreciate the opportunity. I thank you for your work, and I'm happy to answer any questions that you or the other board members or the staff may have.
Thank you, David. We really appreciate all your thoughts on, you hit some important topics. Brian has the first question. Brian.
Walker, thank you for being with us here today. During your comments, you talked about making sure we've got a clear path between the governmental fund statements and the government-wide statements, so people understand what's going on there. At present, we don't have any plans to eliminate the reconciliation between those statements. Do you think somehow that reconciliation is insufficient, or we should do something more with it? Would somehow a double bottom line be superior to reconciliation?
I suggested a double bottom line as one way to maybe bridge the gap. Okay, because as the government really focuses on the budget. It really focuses on cash flow. It really focuses on fund accounting. That's the culture, all right? And yet you recognize and appropriately show, consolidated financial information on an accrual-based accounting, and you get a very different picture, when you do that. So the question is what can be done to bridge the gap between the fact that the government typically focuses on fund accounting, and those fund accounts don't include some of this vital information that we just talked about, all right, that would give you a very different feel as to where things really are.
Maybe I could follow up just a bit with that. I guess I'm violating the rules a little bit by a second question within one question. Well, of course, we do have those government fund statements, and we have the government-wide statements, and we try to make it clear through various means that they're different. Where are we missing the boat? Where are we missing the boat?
Well, the question is I don't believe at the present point in time that you can see the one big item I just talked about, the unfunded pension and retiree health obligations associated with funds. That's my understanding. You see it?
Right.
You don't see that, right? Those are huge numbers. All right. It's kind of like the federal government. One of the problems the federal government has right now, the federal government doesn't show trillions of dollars of debt that's owed to its trust funds, money that was taken from people, spent on other things. It doesn't show that as a liability. That's wrong. Okay. It's trillions of dollars. It ought to change. That's beyond your scope and purview. But here we're talking about, cumulatively huge sums of money, $1 trillion plus, okay, that somehow has to be able to be bridged to what the government's used to dealing with. And the government's used to dealing with fund accounting. And that's what the politicians talk about. They talk about, well, we've achieved fund balance. We've balanced the budget. Because the cash flows work.
Thank you, sir.
Thank you. And by the way, yours was just part B of the first question, right?
Thank you.
David Bean.
Thank you, Mr.
Hello,
Chairman. And Dave, thank you, sir, for joining us today. I
see you've got the COVID look too.
Hey,
go ahead.
I've had the COVID look for about the last 40 years. So
No, I know you have. It looks good. I'm sorry. Go ahead.
It keeps
I'm
getting,
just
no, it
copying.
just keeps getting wider. That's all it is.
I
It
got
just
it.
keeps
I
getting
got it.
wider.
Yeah.
The, but anyway, you know, Dave, you've faced the same frustrations at the federal level for so many years, where you were out there trying to focus people's attention on the financial position of the federal government, but yet everybody focused on the budget, you know, and they said, well, you know, I mean, of course, they're not even close to being balanced on the federal side. And I've seen a number of your talks, and for me, they were very effective, but obviously you felt some frustration on that front. I mean, I guess, do you have words of wisdom for us, you know, on how to better communicate, how to get people to focus on government-wide financial statements? You know, in other words, if they're not looking at the fund, you know, some people would say, well, you know, okay, we put the accrual, you know, we take the economic resources and we put them in the funds, they're still going to say, well, don't pay attention to that. Look at the budget. How do we educate citizens? Like I said, you've tried your entire career, and what helpful hints do you have for us to help bridge that gap?
Well, first, I think we have to recognize that government at the federal, state, and local level is used to focusing on the budget. They focus on the budget, okay? And most state governments have two budgets, right? I mean, they have the operating budget, which they try to balance, and they have a capital budget, which they don't, all right? And so they focus on the budget. It's largely cash basis, right? And they try to use that for all of their messaging. It's myopic, it's tunnel vision, and it's self-interest, okay? Because if you get them to focus on something longer range and or broader and or more inclusive, you know, the numbers are much worse, right? And so their primary concern is keep their job, like most human beings, all right? So I think, you know, we have to recognize that's who we're dealing with, right? I mean, human nature being what it is, you know, people want to emphasize the positive, don't show or de-emphasize the negative. And so all we can do as as standard setters, all right, is try to be able to provide as much information as possible, all right, so that a variety of parties can try to be able to communicate that in ways that otherwise the politicians don't, okay? They don't do it, all right? For example, you're probably aware of an organization called Truth in Accounting, which is based in Chicago, and I'm on their advisory board, okay? And, you know, you can debate how they present things, but basically what they do is they take information from the, you know, the accrual-based financial statements, which you guys set, and they try to provide a, you know, a more understandable view for taxpayers about, you know, what all these things add up to, and what does it mean per person, per household, which is what people can get a better understanding. And also, how does it compare to other states? How does it compare to other localities? As I say, if you want to know how you're doing, you got to know three things. How are you doing as compared to plan? Are you getting better or worse? And how do you compare to your competitor or comparator groups? If you don't know those three things, you don't know how you're doing. You don't have a full and fair view of what you're doing. So my point is that, look, you're not the ones that are going to do the communication. You just need to try to make sure that the information that you're providing is to the extent possible a full and fair view, all right? So that the information is there for others to be able to use in an appropriate manner. Yeah, you know, and unfortunately, at the federal level, things have gotten worse. You know, and I'm spending a lot of time now trying to help us deal with our much worse situation post COVID-19, and I'm making a little bit of progress. So make sure the information is there. You're not the ones to communicate it. A variety of other parties will have to do that. But what I found is I like to use information that are in audited financial statements. Some people try to use other stuff. I don't want to do that because I want to be able to say, look, these are the official audited financial statements. I'm not making up stuff. I'm not coming up with my own methodology. I'm not trying to use infinity as a horizon for calculating these numbers. All right. By the way, what's infinity? It's the end of time. When is that? I don't know. I mean, but so I hope that helps. But
no, that does. Thank you very much. Thanks.
My pleasure. My pleasure. Let me mention one other thing, David.
Go ahead.
One example of this was the creation of the new statement that looks at the longer range fiscal outlook for the government, right? That at the federal level, because we were mortgaging the future of our country, our kids, our grandkids. We still are, all right? And somehow to provide that information. And then you can rely upon others to be able to make the case. Is this right? Is this ethical? Is this moral?
Mr. Chairman, if you would indulge me, since given today, Dave, you raised an issue that certainly has been of interest to us, and Lisa Parker has her hand up, and she probably has some interest in this too. But as you're probably aware of, the GASB attempted to go that path. One of the disadvantages that we had is, as you know, the federal government actually had a law that required the federal government to provide that information with state and locals. We didn't have those laws, and therefore, you know, it was information that nobody really calculated or provided in the past, and therefore we met a lot of resistance on that. Again, any helpful suggestions that you have, knowing that, you know, you had that law in your back pocket. For those who don't have those laws in their back pockets, how do you get people to that point where they're willing to look ahead?
Well, I'm trying to think of what law you're talking about that I had in my back pocket.
There was a law that actually required them to do a financial projection. At least that was my understanding. Yes.
Yeah. That I'm not familiar with that, but
okay.
But basically, we know the budget is myopic.
Yes.
We know in states, in localities, they typically budget for 2 years. We budget 1 year, so we're even more myopic than states and localities. All right. And yet we know that we are engaged in activities with much longer financial implications. And we know that due to known demographic trends, rising healthcare costs, and a variety of other factors, that things tend to get worse over time, absent action. All right. And so candidly, the reason that statement was adopted to a great extent, I think, is because as Comptroller General of the United States and as the audit partner on the financial statements for the consolidated U.S. government, many times I would say, if not us, who? If not now, when? You know, I mean, ultimately, we all work for the citizens, right? Government is an intermediary. We're supposed to work for the people, and you know, and ultimately, if we're not, you know, if we are mortgaging our future, then I think our citizens, you know, whether they be at the federal, state, or local level, have a right to know that, so that they can then try to help hold their elected officials more accountable, try to get them to change their actions, try to, you know, or then make individual decisions about, do I want to stay here? Do I want to go someplace else? Okay. You know, I will tell you that the kind of information I'm talking about is being used with increasing frequency by business people in trying to decide where they want to be, and by retirees in trying to decide where they want to retire. Okay. And I think, you know, the other thing you got to keep in mind is, you know, you have to get input from the people affected by this, right? Right. You know, and one of the probably the differences that I had than you have is, you know, the Congress didn't really understand this. All right. I mean, they're our client, you know, we work for the Congress and the American people. The American people don't really understand this, right? You know, we don't have a bunch of states and localities lobbying for what federal accounting standards ought to be. I mean, you have factors that we didn't have. All right. The other thing is you also got to consider that one of the things I found is everybody's for transparency and accountability until it relates to them. And then all of a sudden, when transparent accountability relates to them, whoa, wait a minute, we're different, okay? And so you're going to face pressure because a lot of people aren't going to want this. Why? Because it provides a fuller and fairer view. Because it might end up providing transparency in areas that might hold them more accountable. You know, it might cause them to actually have to make tough choices with regard to taxes and or spending or what assets they hold and retain and operate versus ones they don't. But that's how it ought to be. You know, I mean, you're just there to provide the information. And I think one of the things you have to do is you have to consider the source of the input. How objective is this? And as I said before, is some people have conflicts of interest. And the other thing is, you already do recognize the difference between large entities that have the resources to be able to get and small entities that don't. Okay. I mean, that has to be maintained, that differential. I hope that helped you, David, but I think you look very distinguished, by the way. I'm not sure about me.
Thank you. No, you do too. But thank you. Really appreciate the words of wisdom. Most appreciated.
Happy to answer any more questions you may have. I think you got another 5 minutes or so. I'm okay. It's you. Yeah.
Well, I'm going to, you've hit on it a couple of times, and it's not necessarily part of this project, but I'm really interested in your, this notion of fair value for the assets of the government, you know, knowing that, you know, our local governments in particular, you know, they're tasked with providing education or healthcare services or whatever it is they're doing. And they kind of have to continue to do that, and they have to use these assets to do that. So this ability or notion to sell, you know, privatization, I guess, is a concept, but this ability to sell, do they really have many assets that they theoretically have this ability to sell? I'm just interested in maybe a little bit more on that in thinking about how our local governments use their assets.
Well, and I think, you know, well, first, I think you have to talk about what does government do? How does government do it? Who does it? All right. So government has to provide certain services. All right. But they don't necessarily have to own all the fixed plant, okay, associated with providing those services. They could theoretically lease, okay, like many people do. I mean, most people don't own their own buildings, right? They lease space. All right. I know there are a number of circumstances where governments own, you know, parking garages and all kinds of other things. All right, that you know are not mainstream to what they do. I mean, they're not mainstream to what their mission is. They're incidental to what their mission is. Okay. You know, the way I kind of look at this is, and by the way, COVID-19 is going to change our life in many ways beyond our defeating it. And one of the ways it's going to change it is, you know, COVID-19, along with transportation and technology systems, are going to cause us to have to rationalize our infrastructure, and are going to cause basically a re-examination of how much work needs to be done at physical plant. There's going to be a lot more telecommuting. There's going to be a lot more hoteling of office space and things like just things that, frankly, you've seen, you know, more in our profession, in the CPA profession, than you have in others, and definitely than you have in government. So, you know, I think, you know, this is something that needs a lot more thought. Okay. I have a friend, and I will get some information and get it to you, who specializes in this. And by the way, I think he lives in Connecticut. Okay. He specializes in working with governments to try to help them identify what assets they own, and then to go through a process of trying to determine whether and to what extent they should continue to hold them, and if not, what the alternatives are. You know, the way I've kind of looked at the federal level is this only applies to things that are not directly mission focused, and that you have the ability and potential to sell. All right. I mean, so it's a subset. It's a subset, a small subset. But I think one of the things government's going to have to do is they're going to have to relook at what they have in light of changed conditions and financial challenges. And one part is going to be to rationalize their asset base. I'll send you some information from a friend of mine.
We would appreciate that very much.
Okay.
And we really appreciate your time. We've hit the hour. We've used your time. We really appreciate your insights. We appreciate you taking the time to come and provide them to us. It was very enlightening and interesting. And just thank you so much.
Thank you very much for what you're doing. I'm sorry I didn't dress up more. You look great.
You look great too.
I'm hanging in there. I'm doing real well. Thank you.
Excellent.
Take care. Bye-bye.
You too.
Well, thank you. Thank you for giving me a few minutes to provide your panel with feedback on the proposed rule changes as it relates to financial reporting model improvements. My name is Jeanne Ives. I was an Illinois state representative for 6 years from January 2013 to January 2019. Prior to my election to state rep, I served on the Wheaton City Council for 18 months. One of the first bills to be dealt with just within days of taking office was a vote providing $300 million in additional funding for child care services because that fund, halfway through the fiscal year in the state of Illinois, had depleted its budgeted allotment. Adding $300 million, if I remember correctly, would have essentially doubled the amount taxpayers were providing for that fund for that year. I knew our state was in dire fiscal straits when I entered office. However, it was worse than I thought. And it also appeared that no one knew how to budget. How does that happen? How is it that Illinois has had a continuous backlog of current account bills of over $5 billion for at least the last 8 years? How do Illinois politicians for 4 years in a row say they're going to sell the Thompson Center, a large, inefficient eyesore of a building in the center of Chicago, for $300 million and add that as revenue to the current budget when the for sale sign is not even in the ground? How is it that Illinois has not had a balanced budget since 2001? And in Illinois, the beginning of our budget document literally says the following, and I quote, "Over time, the Illinois budget has been viewed as balanced in several ways, both at the time it is presented by the governor and at the time it is passed by the General Assembly. Illinois' daily activities and annual budget historically have been operated and presented on a cash basis. Expenditures are made from the available cash balances on hand, and the budget balances estimated expenditures with estimated resources. The state's CAFR conforms to generally accepted accounting principles as prescribed in pronouncements to the Government Accounting Standards Board. This act incorporates aspects of a modified accrual basis into the budget process for certain designated funds, including the general funds. Well, I'm telling you right now, this type of accounting is not working. During my tenure, I never voted on an Illinois state budget as every one of them was blatantly unbalanced. They passed anyway, as did supplemental appropriations when money ran short. By way of background, I have a BS in economics from West Point, which is BS probably to you. And I have taken graduate level accounting, finance, and tax classes. I am not an expert by any stretch and would agree with my fellow alumnus, Mr. Caputo, that the current government financial statements are probably only understood in their entirety by sophisticated users. I would be surprised if even 10% of elected officials truly understood any of the budget documents, or quite frankly, even took a look at them. So we taxpayers need you to be the enforcers. We need you to set strict standards with no wiggle room. Your panel and your decisions on new rules regarding financial reporting can make a difference. I listened into a few of the other testimonies you took over the proposed new rules. In my opinion, your board has a few different paths here. One, make no change to current practices, allowing modified accrual accounting to continue, and in some places, even cash basis accounting. We know in Illinois where that's gotten us. Two, pass your new rule, which, as I understand it, would simply continue the current practice of not full accrual accounting at the fund level and then rely on short-term statements to present inflows and outflows of the current year. There's other options. Three, you could accept full accrual accounting and the full inclusion of OPEB and pensions in fund accounting where decisions are made, and then rely more on a cash flow statement to help make shorter-term decisions. In truth, I'm not sure any of those three options really would solve the problem. to be honest. At the root of the problem, at least in Illinois, is the defined benefit pensions in OPEB that is allowed to be underfunded or not funded at all, and not reflected in the current year budgets used at the fund level. Regardless of what decisions you make in the end, where's the teeth in any of these rules? Such new standards, which should mirror the private sector, must have penalties associated with it for non-compliance. For Illinois, who got caught lying in 2011 on bond issues about the level of their pension obligations, the SEC's response was simply a slap on the wrist. The teeth in the new rules should be fines and the inability to borrow for a significant period of time. Elected leaders with final budget authority, along with their chief executive, should have to sign off on the veracity of the public budget statements or face repercussions, just like private sector heads must do. As the Standards Board, you are tasked with ultimately protecting the taxpayers and the end users of the information. While you care to produce easy-to-use rules, you should care less about those who prepare the statements, which are done by professionals now and computers, and more about requiring truth. In one particular exchange your panel had with Ms. Munger, you noted that any rules you make regarding what and where items are placed on the balance sheet can simply be ignored by politicians. I know that. Your panel also asked why make tighter rules when so many other states seem to be doing just fine with balanced budgets, rainy day funds, and even fully funded pensions. It is a good, valid point, but misses entirely why we write any rules at all. Not to mention, plenty of other states are not fully funding pensions or have true balanced budgets. But we pass laws to keep in line the bad actors who think they can act with disregard to common sense rules. Illinois budget shenanigans are legendary. Bad budgeting due to opaque accounting standards has real effects. In Illinois, if vendors are not paid on time, they can make up to 12% interest from lack of payment. Cottage industries of buying receivables from state vendors has made some folks wealthy. Unfortunately for taxpayers, it has sucked up hundreds of millions of dollars annually since the prompt payment requirement began. With the worst bond rating in the nation by a long shot, up until the new funny money from the federal government came in, when Illinois went to the market to borrow, our rate we had to borrow at was 3 times worse than the next worst state. As Mr. Caputo knows, our sub-governments pay an Illinois penalty when they borrow, too, regardless of the strength of their individual balance sheet. Again, our poor credit rating, a result of mismanaged budgets, is costing taxpayers millions of dollars in Illinois. So I'm part, and this is who I represent here, I'm part of the angry mob in Illinois, quite frankly. I think your board can help immensely in creating a more truthful way to present information to taxpayers. But I actually want to propose yet another solution to your board, the real solution. Get behind a proposal to end all defined benefit pensions and OPEB. How about public workers work until Medicare age or figure out how to fund healthcare if they retire before Medicare eligible? How about no more sick day accumulation amounting to nearly 2 years of work in some cases? You either use it or you lose it, like the private sector. Same thing with vacation day accrual. And for once and for all, get rid of defined benefit pensions. As a taxpayer who, like many others, receive none of these gratuitous benefits, fairness demands these changes. I thank you for allowing me the opportunity to testify, and I welcome your comments.
Jeannie, thank you so much again for your interest and for your comments. We'll start with Brian. So you referenced him, so we'll let him go first.
Jeannie, it's so good to see you participating here today, and your comments are very valuable to us, given that you've been an elected official and seen how state budgets come together. I've got kind of a related question with respect to the capacity for governments to prepare statements as you're proposing, basically the economic resources measurement focus, something that takes in all of the assets and liabilities at the fund level. There are some that would assert that kind of a proposal would be imposing significant costs on smaller governments. Now, as you know, I was in Aurora before I went to my current institution, but prior to that, I was in a smaller government. And there were a lot of other governments like that didn't have a lot of professionals on staff. So do you have any thoughts about that additional cost that it might impose to do that kind of a economic resources measurement focus at the fund level?
Well, first of all, Brian, I am so appreciative that you're on this panel because of your expertise, because you're not just somebody who, has an accounting degree. You've actually practiced in this area and continue to practice as the president of College of DuPage. And so Aurora being the second largest government or city in the state of Illinois, that was a huge responsibility for you. Coming from the city of Wheaton, though, population 53,000, which is maybe a third of Aurora's, maybe even just 25%. When you look at the comprehensive statements, you can go down. I mean, a lot of this accounting is already happening, right? So if you go to the pension board's segment and you look at police funding, firefighter funding, it's already really broken down how much that firefighters cost in OPEB and in pensions is really costing. You could, in your enterprise funds, they certainly are run that way if they're run correctly. Because if you're charging for water, then every bit of personnel cost to that water department should be put into that enterprise fund and not sucked up in the general fund. That way you're costing your fees correctly to the end user. So I would argue that in many cases, a lot of this is already happening. It's just happening in other documents. Now, how do you bring that up to the state level? How do you make that make sense at the state level, which is far more complicated? I agree. Is it part of a solution? Possibly. In some of the fund statements, that there's an additional line at the bottom that captures maybe these additional liabilities that need to be paid, that have already actually been accumulated in the future, but won't be accumulated to date, but won't be paid out to the future. Is there some way to recognize that right in the bottom of the statement so that it's not hidden in back documents or hidden in a general accounting statement? Maybe that would wake up taxpayers, wake up even politicians, if they could look to that and say, yeah, but you know what? The central management system of the state of Illinois, it's costing us this, and we've got the dollars for that. But honestly, here's all these other liabilities associated with the personnel there. Don't you think we should take a step back and see what we're doing in terms of pay increases or whatever? Because, I think that might be more valuable. It depends on where it's placed in the statement.
Thank you so much for your input. Appreciate it.
Jeannie, you were starting to get there. I might explore this a little more, but you touched on things like that are public policy related, enforcement related, that are maybe beyond what our mission is. And our mission really is about making sure that information is available to different users, legislators like yourself, citizens like yourself, investors, to have the information to hold the governments accountable. You seem especially passionate about the pensions and the OPEB benefits. Is there information, additional information that you think you need that should be included in the statements beyond what's there currently to be able to have that accountability?
Well, I think that part of the problem is the idea that we don't have full accrual accounting. And how is the state of Illinois has, $5.2 billion in current account back bills. And it's continuous. It's not just a one-year occurrence. It's not a COVID problem. It's constant. I mean, how are they allowed to do that? This is honestly a solution for you guys to help out, but I think part of it is that there's not full accounting. I don't know if he's set to testify, but I spoke with a CFO for a local school district, and he says that before their fiscal year ends, they get their segment of property taxes in, which are supposed to be used for the next year. But what they do is they put it into their current fiscal year. I mean, how does that happen too? So I think that part of it has to do with the accrual accounting that needs to take place. I think part of it has to do with how these liabilities are accumulated and hidden outside of the fund balances. Honestly, I am not an expert in solving that, other than I really do think we have to get to the point where, if you have one unbalanced budget and then you're allowed to do it the next year as well, something's off. And so whatever rules you currently have, they're not working either.
All right. Thanks,
The,
Jim.
the other thing, okay, one more thing on enforcement here. How is it that the SEC doesn't, you know, and investors continue to lend to bankrupt a state like the state of Illinois? How does that happen? Because their experts can certainly read the documents. I know there was an idea, well, a government can never go out of business, so it can just continually to tax. We know that there's eventually a limit on how much you can tax people in the state of Illinois. We know that it's the reason that we've had out migration for the last 7 years. And so, I mean, there is a limit to taxation as well. So not recognizing liabilities in the year that they are occurred is a problem. And again, there should be some sort of like, maybe it's a matter of going to 2-year budgeting. I don't know. How is it that other states do have 2-year budgets? They seem to be better run. How can you carry over, I guess, how can you carry over current account deficits and not account for it at some point in the future?
We'll let Jim ask a question.
Jeanne, I appreciate you being here and sharing your time with us. As you may or may not be aware, the GASB does not have the authority to establish standards for budgets. Those are very much an individual government right and responsibility. And unfortunately, some governments have latched on to GASB standards as a budgetary basis when in fact they never were intended for that. They're intended to be external financial reporting, which is not a spending plan. It's a demonstration of what actually happened. But having said that, what you're talking about is currently reported in the government-wide financial statements. If I pick up the government-wide financial statements for the state of Illinois, I see that you are, I won't say hopelessly, but you're certainly in hock. And I picked it up for other states, and sometimes I say they are, and sometimes I say they aren't. What you're advocating for is taking what's already in the government-wide financial statements and moving it to the fund financial statements. Mm-hmm. And my question is, if you were to push all of that down to the fund financial statements, do you even need the fund financial statements anymore? Or is that just duplicative of what you'd see in the government-wide financial statements?
Well, it's a really good point. I think that, you know, we do budget by funds. And everybody's got their little fiefdom in which they operate. So it would be duplicative. It certainly would, but it also may be looked at more. I think, again, I go back to, I know you guys don't necessarily set budgeting standards, but people do rely on how you account for inflows and outflows based on your standards. And that's where our conundrum is, right? We keep going, and I've listened to you ask the same question to a number of other people, less sophisticated users like me. But the truth is that if you could take on that additional role, it would be very beneficial for us to put some teeth behind some of these mechanisms of accounting. And I just, that's the problem. That is truly the breakdown. I mean, I know I can find what I want to find about the state of our pension systems or our debt load. I know where to go to that because I've invested time in researching that. Most people can't. So I don't know if it's a matter of at the bottom again of every fund statement, you essentially say, how is this balanced against last year's receipts and inflows? You know, if we have $5.2 billion in unpaid bills, what fund did that come from? Can we do something on that side and then take up those liabilities as well and associate it with that? So I don't know that the proposed rule is going to help at all. We know the back rules don't matter. I know you guys say that you don't have authority here, but boy, I'd love it if you could find the wherewithal to find a different way to report some of this stuff so that we had a better understanding. It was just glaringly obvious on a fund statement. But I'm not here to tell you that I have the solution.
Well, thank you for your response. I will tell you that I find it inconceivable that Illinois or any other state or local jurisdiction would cede to a standards board the ability to adopt a universal standard for budgets when they have the power themselves. And one can question whether that's good, bad, or indifferent, but it is the reality that we live in. So we have to work within those constraints, is what I'm saying.
I understand, sir, but they certainly have to conform to SEC rules when they go out to borrow. So they're conforming to somebody's standard at some point with their financial stuff.
Actually, they don't have to conform with SEC rules either, because the SEC doesn't regulate issuance of tax-exempt municipal debt or of debt by governments. And that goes back to something called the Tower Amendment, which limits their authority. And again, that's a states' rights versus federal government issue, which is part of the landscape. One can argue whether it's good, bad, or indifferent, but it is the reality in which we function. Thank you.
Okay.
Alan.
First of all, let me say thank you for being here. I spent the last, just sort of go to background, Jeanne, so you have a sense of where I'm coming from. I spent the last 9 years as a state controller for Georgia. And I can tell you that I like just having a legislature who can sit here and say some of what you're saying in terms of I could go get what I wanted if I wanted to get it because I know where to find it. So I think that's really nice to hear. Two things I would say is, number one is I think you're right to at least question why those back billed invoices weren't recorded, because I think that's a very good question to ask. I just leave it at that of why they weren't. I'll leave it where they should or shouldn't have. My question's different. When we're in Georgia, obviously, and I'm asking you if there's something we can do to help. So I mean, there's a question in this, but give me a second to explain it. When we're in Georgia, a lot of times the first things we would do, to your point, is we would put on the table the idea of what was our ADEC for pensions, what was our required bond, bond payments next year, all those long-term liability payments that you knew you had to fund in the budget. And you'd find those in the very first part of the budgeting process. And the folks at the budget officers would put those on the table and say, okay, those are those, don't touch them. And the rest of the budget is about how you spend the rest of the money that's left over on all the rest of the services you got to provide, right? But you're going to make 100% of your required contribution for your pension, right? It was non-negotiable, right? And you're probably sitting there going, I wish they would, because I heard you say you never voted for a budget that wasn't balanced, which I appreciate. But so the question, and I heard you also mention the fact that, a lot of times, the good pay for the sins of the few. I think I'm paraphrasing kind of how you said that. So I'm wondering if in your mind, you said there were three options: to do nothing, to pass the rules as we currently wrote it, or to just go to full accrual. I'm wondering if there's in your mind at least an option or a fourth option in there to just find a way, if we can find a way to connect or not let I guess in your mind, I'm putting words in my mouth, sorry, to connect those fund statements, those NE-wide statements that Jim was talking about that have everything on them, to connect them in a way where it's less easy for someone to just look at fund and not look at the other, and therefore not see the whole picture, to your point. And I just don't know if there's, at least in your mind, there's at least room for a fourth option to say, hey, if you don't want to stay with what you have, but you also don't want to go to full accrual, is there at least room in there to say, okay, if you can connect them better, that's also a better option. That's almost like a fourth option. Does that make sense?
Again, you folks are really more the experts. I'm here to just tell you that the current standard's not working. I don't think the new standard sounds like it's much different than that. And I think, like, Sheila said, Weinberg, we do need some truth in accounting. So while Georgia is doing it correctly, they're fully funding their pensions. We underfunded our pensions $5 billion. So, I know Sheila talked about Chicago Public Schools. Well, in 2000, they took a hiatus from paying any level of pensions for 13 years. They tried to do it again for another 3, and I stopped the bill from them doing that. So what's the truth in that? There's no truth here. Why? I mean, honestly, if you guys don't have teeth, why do we have a government accounting standards board if everybody can make it up as they go and not comply but with the rules? I mean, that's what I just heard from Mr. Brown. I mean, I feel like that's what I heard. Maybe I'm wrong. So what I'm asking for is maybe some tighter standards behind how we account currently for expenses that are being accrued this year, but you're expecting future taxpayers with massive new tax hikes to pay for in later years. It's inherently unfair to future generations to do this. It is robbing our kids. And in the state of Illinois, I don't know a single sane person who's going to stick around to pay for this long term. We got to correct this because the state's too good to waste, quite frankly.
I appreciate that.
Brian.
Jeanne, I'm acutely aware of the issues that you raise. I can't get away from either living where I live, but I want to ask you a question that kind of ties in what Jim talked about earlier and what some of the other testifiers mentioned in terms of if you give multiple sets of statements to legislators or elected official or whomever, they're going to point to the statement that makes them look the best, and that's one they're going to follow. So there are essentially, I would argue, there are three sets of financial statements in a financial report. There's a budget basis, flow statement. There's some form of a short term, not necessarily budget, but could be short term view, that's what we're working on right now. And then there's that longer term view. If we took away that central piece and said there are no longer governmental fund financial statements, and what would you be left with is a budgetary statement and then the full accrual statement. Do you think that would help matters any, or would folks just simply go back to, well, there's the budget statement and that looks better, we're gonna look at that?
Like I said before, I don't think 10% of the legislators look at these statements. And even if they do, I think even half of them even understand it. So that's our conundrum. So you need people like Sheila doing the work she's doing, looking at these from a standpoint. You need other people who like your organization, like GASB, really to make sure that they are just paying for things when they should be paid for, and they're not just scamming folks and moving expenses to future years with future property taxes or additional taxes. I mean, that is the problem. How we get there, I understand. You need a cash flow statement. Every business does, every government does. You need to know when your cash is coming in and when it's going out, and that's in some cases an estimate. But I mean, it's untruthful to say that you're going to sell the Thompson Center for $300 million 4 years in a row and know that and it's not even up for sale. How do you allow that to happen on a fund statement, that's going to be part of available revenues? How do they get away with that? And I think it's because we have, too loose of rules around what they can recognize as revenue and what they can also recognize as expenses. And so any way that you can tighten that down, that's great. But I think it has to deal with accrual accounting, full accrual accounting.
Okay, thank you very much. Let me clarify something that I said earlier, is that budget statement can be like our current short-term type of focus, but it doesn't have to be. So, but thank you so much for your input.
Jeff.
Thank you, Jeanne, for being here with us today. One of the questions I wanted to ask was, we've talked a lot about the situation in your particular state. I actually used to be a resident of that state. I'm pretty aware of what's going on. I think we get a clip service every day with news headlines. We see a lot of news headlines from in-state sources as well that talk about the financial situation in the state of Illinois. Do you think what's going on in the state of Illinois is happening because the information isn't there? That the legislature doesn't know what they're doing? That they literally don't know that these liabilities exist? They're in the media almost on a weekly basis that these liabilities exist, the underfunding, the unpaid bills. So do you really think that the solution lies in accounting, or would the solution lie elsewhere, given that this information exists, and it seems to me to be pretty well known what's going on?
Well, I think most legislators understand the pension problem. They don't think they'll ever have to deal with it within their term, which is why they don't really focus on solving that problem for the most part. Many of them are, going to receive healthy pensions as well when they retire. In full disclosure, I never accepted the pension or state health care when I was a legislator. I think you raise a good point. The problem here is that it's the politicians are going to do what the politicians do. It's the taxpayers who need to better understand whether or not the budget was truly balanced. And I think that's where we need to get to first. Is that budget balanced? And when you have $5 billion plus in current account payables, it's not balanced, and it hasn't been for a long time. So how are they able to get away with that? It's obviously they're supposed to be using GAAP, but they're using modified accrual accounting, even when it comes to current accounts, not even long-time liabilities, and it's wreaking havoc. But if you were to force them to recognize that police officer, quite frankly, in the city of Wheaton, they spent about $3 million on police pensions last year, and they had 67 current members. I mean, you're talking about $44,000 just for a pension obligation. Nobody knows that. And nobody knows that. You also have to recognize the cost associated with personnel so that people get a better awareness of what's going on. And I don't know how you do that, because they're not going to read the supplemental statements. They're just not. Where do you put that? Again, I go back to maybe you keep what you have, but you have an additional bottom line right there on the fund statement noting the liabilities in that fund that have accrued in that year. Maybe that's a wake-up call. But in Illinois, until the voters have the political will to change out the politicians, you're right, nothing's really going to change. They're going to be able to get away with it. I would just hope you guys had tighter accounting standards that they have to, rule by, even if it just dealt with current accounts.
Thank you.
Jeannie, thank you so much for your time. We really do appreciate your perspectives. You have a lot of interesting perspectives as a legislator, citizen, and so we really appreciate hearing from you. So that as we kind of deliberate and try to deal with the issues that you've brought before us. So thanks again for your interest. Thanks again for your time.
Thank you.
Really appreciate it.
Oh, okay. Grover Norquist. I run Americans for Tax Reform. It was a group put together back in 1985 to help pass what was then the 1986 Tax Reform Bill, a revenue neutral federal tax reform. And since then, started working on general tax issues, both at the state level, local level, and at the national level. We have groups that we work with in all 50 states, taxpayer organizations, and various center-right groups to try and keep an eye on how much the government spends, the government being their local government, state government, as well as the federal government. I just got back from North Dakota, which has interesting accounting because they've got interesting large quantities of oil revenue that may or may not continue, and pension unfunded liability. So my interest in this is that when we have these conversations at the state level in Virginia, at the national level, but more often at the state and local level, politicians will flash numbers and say, see, we have balanced budget. We have in the Constitution, we have balanced budget. And they have liabilities that do not show up in the books, or if they keep one set of books that do show the liabilities, as long as there's another set of books that they can say is an official financial report that doesn't include the pension obligations, the healthcare obligations, or that recognizes loan money they have that's a loan as something other than a loan, you have all sorts of problems in getting elected officials. And again, you go to North Dakota, states, they meet every 2 years. They don't get paid very much. It's all part-time. Everybody has another job and another life. Never mind New Hampshire, which is even more so. And somebody flashes them a balanced budget, no liability. Look at this. We can afford to spend more money. The case in Texas where they were all told, even though there was a $75 billion liability on pensions, they said, we have $13 billion net over here. Unless every time an elected official or a person in the press who doesn't necessarily terribly sophisticated either gets a piece of paper that says, here's the budgeting for this state. If it doesn't include the real liabilities that are contracted, and take those not as something that's we got to pay, in 30 years, but it's owed right now. I mean, it's not our money. It is going to go out the door, and it is a liability now. And people need to be able to see that when they make decisions about, oh, we have so much money, we can afford to increase pay or open, put more money into pensions, because if it doesn't show up clearly in today's books, it'll go right. I mean, Chicago's been bragging about what great shape they were in until the future showed up. And each of these states is kind of knows that they have these unfunded liabilities in their pensions, and very few of them have taken the steps necessary to get out from under those. But again, if it's not clear, and as I look at some of the short-term financial resources, measurement focus, and accrual basis of accounting, it appears that this would allow a set of books to be presented. Another set will have all of the liabilities and when money comes in and out, but it will allow somebody to flash that and say to a taxpayer or to an elected official, oh, you don't have to worry, we can spend more money because we have a balanced budget, and not include all the liabilities and all the and timing of expenses and so on. So that's my concern. I don't see this as a step that the creation of this other set of accounting without attaching all liabilities and the whole thing. I mean, we get this in Virginia. They pushed through 2 tax increases because they were bankrupt and they had the money in the bank. Okay, but that wasn't transparent. The money, literally cash in the bank. In 1978, when Prop 13 was on the ballot, the governor said, we'll go bankrupt. And he had, because it was a $4 trillion tax cut over time, there was more than $4 trillion in banks at the time that California had. And the governor just decided to lie to the people of California. And a week later goes, oh, we can fix this. He had $4 billion, states, billions, not trillions. That lack of transparency. First, this isn't what you're doing, but I'm certainly in favor of full transparency. Every bank account a state has, a local government has, how much is in there, so people have some idea, and how much cash they have, but also what are they spending? What are they spending it on? What does every contract look like? Some states do a pretty good job with that. Some, California is the worst on hiding everything. So you don't even know how bad the problem is. Although when Arnold Schwarzenegger was there, he and his chief of staff said they were going to make everything available, but that never happened. So that's my concern as a taxpayer activist who talks to politicians about how much money do you have in your state, what's the state of your budgets, and they don't have the kind of information they need to have. It's not, the transparency isn't there, even for elected officials. The governor in Virginia lied to the state legislators about what the status of cash flow was, and was able to get away with it because that wasn't transparent. I realize that's not the accounting you're talking about, but I do think that the accounting books need to make it very clear when you make, since so much of our problems these days are problems that are created for 30 years from now, when people are retiring or getting healthcare, government workers getting healthcare at that point, and you're going to have the money saved up for that, or you hit a brick wall and you've got to have massive tax increases, or as they're looking in some states, you can have ghost workers. We'll have fewer teachers and fewer government workers in schools, and we'll just take all the money that we would have paid them and put it into the pension. So we'll have 100 workers, but 15 of them will be ghost workers. They won't be here. We'll take their whole salary and put it into making the pensions work. That's not what people are expecting. A little more advanced thinking on behalf of by the elected officials and the guys who make, or the bureaucrats who make some of these decisions. And voters, taxpayers, citizens should be able to look at the books of the city, the state, the county, and understand what's going on. There's no reason it should be complicated in a way that the average person couldn't look at it and say, that's how much money we have, this is how much we owe, this is when it's owed. So that my concern is, as I read this and as I talk to some of the folks at Truth in Accounting, which focus on this more, and we work with them as they work on some of these issues with state and local people, this additional set of books that you're talking about appears to be a tool that could be used to confuse voters and confuse state legislators as to the actual cost of government and the commitments that it makes. So that's my concern.
Thank you, Grover. Appreciate that. The first question is from Brian.
Grover, thank you so much for being here today. It is very helpful to us to hear from users, such as those from taxpayer advocacy organizations like yours. It gives us a perspective that we don't hear maybe enough of. One thing I think it's important to point out from the outset is that this board does not have authority to set standards for budgeting. That's not what we do. But we do have a responsibility to establish accounting standards and improve accounting standards for financial reporting. So I found your comments to be very interesting because what I hear you advocating for is transparency. I would assert that's what we're trying to do, because what we've got in our financial statements are government-wide, which are the longer term, and some form of short-term reporting right now, and that's what we're proposing a modification of, so you could get kind of the two looks. But one of your comments was that, led me to believe that those government-wide statements are there. Why isn't that sufficient? Why aren't those being used? To us, the information is there.
They're not being used by public officials who want to spend more money because they want to say, we can afford to spend all this money. The case in Texas where they were arguing, look at all the cash we have. Or even in a state like North Dakota, oh, look at all the cash we have right now. Alaska, look at all the cash we have right now, but not as you move forward. When you offer somebody more than one set of books, one senses from experience that elected officials who want to mislead voters about decisions being made today before the next election will flash the one, say, this is an official document. It says we've balanced budget and it says we're fine. This one over here, I'm not showing to you and you don't know where to find it because you're just a citizen.
How would you
includes state legislators sometimes?
Just kind of a follow-up to that. How would you respond to the assertion that, well, if we don't offer the short-term view, these aren't cash flow statements we're talking about, but you could think of them conceptually something more short-term, that we would be reducing transparency. In other words, both statements are there. If we take one statement away, you might argue that there's less transparency because the elected officials can't see the shorter term aspect of their finances.
Is there good, if you were buying a drug or a consumer product, there'd be a label on it telling you, batteries not included. Is there some way to put a big flashy sign that says, by the way, this does not include $32 billion in unfunded liabilities in the pension plan?
Well, I'll kind of defer to my colleagues on the board. There might be some follow-up questions as far as how we're trying to draw attention to the fact that these are short-term types of financial conditions. So I'll stop there with my questions, Chairman.
Anything that moves in that direction would be helpful. I just have not as much confidence as one would like that elected officials won't take the short-term thing and act as if it was the full story. And there's nobody at NBC capable of telling them they're fibbing.
Thank you, sir.
So I want to build on what Brian said, just to be sure. So what Brian articulated is correct. We have these two perspectives, and it is the main purpose of this short-term perspective to give citizens, legislators, an idea of that kind of what tax dollars did we bring in? What did we use them for? What cash, for lack of a better term, it's not totally cash, but it's kind of close to cash. What cash do we have left on hand to spend in the next year? That's you were kind of right there. You were talking about cash accounts and what's the balance in the accounts. That's what those do. Do you agree that that's an important piece of information for them to have? If we could attach these appropriate warning labels and signs pointing to these other statements that are 2 pages prior that have all the liabilities on them?
The more information you can make available, the better. the idea this is a separate, here's the report for the state, short term, or this is the right now, to the extent that one can highlight that this is short term only, one of those, like, you don't need something quite like the drug ads they have where they have 5 pages of teeny print explaining that you could hurt yourself because the drug doesn't always work or something. But something that makes it clear this is short term. This does not include long-term liabilities. For that, look at page this. Something that would make it impossible for a state legislator to misread it, or an average citizen to misread it and think this is the complete set somehow.
Jeff, then Diane.
And I'll continue along that theme. Thank you, Mr. Norquist, for coming here today to speak to us. Right now, there is something that we call a reconciliation. So when you see that short-term perspective, and then you have the long-term perspective, what the accounting statements try to do is they try to create a tie between those two statements, and that's called the reconciliation. And it's a numerical line-by-line adjustment that sort of says, okay, to get from the short-term perspective to the long-term perspective, you have to add these figures, you have to take away or add these amounts. Now, the question is, in some of our deliberations has been how much emphasis to give to those reconciliations. Some people, some governments say hard to produce, so take them away. Sounds as if, and this is what I wanted, my question is, would you encourage an even heightened focus on those reconciliations so that when you are looking at those short-term statements, right there, either right underneath or on the next page, there's going to be this reconciliation that says to get to the full accrual picture of this government, you need to add, and it would, a lot of cases, be long-term obligations and things of that sort. Can you elaborate on that?
I think that would reduce the danger that what you're talking about creating or requiring is misused. Because if you have the thing that you worry somebody would, this is the only story, this is the story, full story, and you have next to it, this is an important thing to look at for the next 3 weeks. Anyone with terminal cancer really wants to know what's on this page. But right next to it is, if you're planning on living longer or you have kids, this is what's going on as well. And the closer those are together, side to side, so that you can have both of them, I think that would dramatically reduce the chances of misusing it. And certainly to the extent that we can train people who are looking at books to say, go to page 35 where they have both, or page 30 and 32, that would make it less likely to be misused.
And of course, there's no substitute for that last point you made, right? Understanding and education so that they can't be misused. And that's, of course, a lot of what our discussions, that there has to be some level of education and understanding among the reader so that they can't be deceived that this is the entire picture for the government.
A briefing for state legislators. I'd love to work with you guys. I mean, we'll set up one of those Zoom things with hundreds of people and get state legislators in to focus on something like that. Because I'm just always amazed, even at the state legislative level or the local government level, the number of people who feel comfortable being able to look at one of these documents and understand which chart matters is not as high as you'd like.
Thank you.
Diane.
Thank you. Thank you, Grover, for being here. When you describe that legislators are saying, look, we have balanced budgets, I do see a gap there between what we're doing and what you're describing. And so I'm from a state where the legislature has passed certain laws shifting some of the expenses from one year to another, which I'm sure you see in a lot of states. So I feel like there's kind of a gap. Going back to what Brian said, we don't set any kind of standards relating to how they set their budgets. So we're getting as close as possible with this short-term look to give the citizens kind of that cash flow view. But there's still that gap between any kind of laws that have changed things in the budget perspective. Do you see a way of filling that gap? Because I feel like what Jeff just described, the reconciliation from the government-wide and all of those liabilities to where we're at with the short-term view, that happens, but then you've got the budget and you've got any kind of nuanced changes that have happened legislatively. But there's this gap between those two. Do you see a way forward with that, or a way of maybe bridging that gap?
Well, there are rules for the legislative rules where some states have a rule about, you know, putting how much is this going to cost? Is there a tax increase in this piece of legislation? How big is the font when you know, in Texas, it's got to be big font up front, first paragraph. If you're going to raise taxes in a bill that's 30 pages long, you can't put it on page 29. There needs to be ways to do that with unfunded liabilities, with longer term liabilities, so that when they vote on this stuff, that it's clearer. That's not an accounting question. That's an informed legislator or informed citizen question. All of those ways to flag those things that can be done now that looks like they don't draw blood, but they're very expensive long term, need to be raised in the visibility, whether it's size of font up front in the piece of legislation, you know, a fiscal note, and how clear that is. Those are always, I see different states particularly looking at it different ways. And when cities and towns float bonds, some of them will say, this is a $10 million bond, but oh, by the way, over the course of the next 30 years, it's not $10 million, it's $40 million in terms of what we're going to be paying out. So putting some of those numbers together gives people more information than or a better sense of the size of what something is than otherwise. But I don't know that those are that those show up in the accounting numbers. These are the sort of before the preventative, before you do something, what's it going to cost? How long is it going to impact your budget as a taxpayer?
Thank you.
Lisa.
Hi, Mr. Norquist. Thanks for joining us again. So my question sort of catapults off of what Jeff was talking to you about with the reconciliation and how that might help, you know, sort of to pack the punch, if you will, that these fund statements are telling a different story, a short-term story. And my question for you is that in the exposure draft, we proposed some actual changes to the titles of those fund statements, specifically to indicate that they present shorter term type information. So do you believe that this would, that proposal would also help to, help with your concerns that you have regarding the misunderstanding of the information that's presented there in those fund statements?
Yeah, if you have titles that are written in larger type that sort of explain what it is and make, this does not include pension liabilities, those sorts of things, or it doesn't account for them in the short-term version, that I think would be very helpful to somebody reading it. But again,
excellent.
Larger font and stark, batteries not included, pension obligations not included. And even if you want to put a dollar number in the pension obligations that are not included, that would probably make it clearer, because pension obligations not included could be a little problem, could be a big problem, depending on the state or city.
Thank you very much.
Grover, one other way we've attempted to do this, in our current version of these short-term statements, we call items on the income statement, for lack of a better term, revenues and expenditures. In the proposal, we've proposed changing them, the terminology, to call them inflows and outflows, to try to really, another version, another part of what Lisa was just talking about, another way to identify, hey, these aren't revenues and expenses the way a normal accountant would think of them, as revenues and expenses, where it includes everything. This is short term, this is close to cash coming in and out. But there are those that have come before us in the last few weeks that have argued you're going too far away, and a lot of these are accountants saying you're going too far away from terminology that people are used to hearing. People don't understand inflows and outflows. You need to go to something closer to revenues and expenses. What do you think about that? Do you like the idea of inflows and outflows as a way to distinguish, hey, this is a different perspective, or are we being too geeky accountants and it almost doesn't matter?
How do you count loans in that?
It would be an inflow.
Okay. I think it would be helpful to have a distinction between tax revenue, stuff we sell, and we sold a building one time, and we just borrowed money. If that borrow money is an inflow, it's not, part of it is this going to be repeated? Last year's income taxes or last year's property taxes, next year's going to look pretty much like that. But we sell a building to get cash, we borrow money. Those are not necessarily things that get repeated all the time. And making the distinction with those, I think, would be important. There may be other one-off things that I'm not thinking of, but loans are not income, because when you have tax money, you don't have to give it back. I'd like to try to get that someday, but right now that's not on the books. But a loan you do have to give back. And if you sell property that the city owned, there's only so much of that. You can't do that tomorrow because it's sold.
Thank you. And in the proposal, we do try to distinguish between those, between current and non-current, but that's another part of the debate. And Jim has a question, so I'll let Jim ask his question.
Mr. Norquist, thank you for being with us today. My question is going to budgets. I take it from your presentation that you believe that the prominence of budgets in comparison to budget contributes to a lot of short-term thinking, and also permits painting an incomplete picture that may be perceived as being more complementary than it should be. In a part of the proposal we have, first of all, I should say, one of the objectives, current objectives of governmental financial reporting is to provide information to assist users in assessing and making decisions about a government's accountability. And traditionally, at least, compliance with budgetary laws and such is a part of that assessment of accountability. The current standard requires a comparison of actual to budget for the year, but it permits it to either be presented in the basic financial statements or to be presented as required supplementary information. And of course, if it's in the basic financial statements, it has a lot more prominence than if it's in required supplementary information. Our proposal would eliminate the option to present the budgetary comparison information in the basic financial statements. It would be required to be presented in required supplementary information, along with some identification of variances and explanations of the variances. Do you believe that that would be a step forward in helping to alleviate some of the concerns that you have about the ability of politicians to point to specific information when they design the criteria in terms of the budget?
Yeah, I think whenever you put something in the appendices and you think about it and go, that's really important, pulling it up front, as you're suggesting, I think makes a great deal of sense and makes it easier for people to not disingenuously quote the thing, or by mistake. They just, oh, I see, well, here's what it is. And I think it makes it clearer for people who want to understand what's going on, both so they can tell other people, but also so they can understand it themselves. So that strikes me as a step in the right direction.
Thank you.
Grover, we really, again, appreciate your time. I think we've reached the end of it, but thank you very much for being interested in our project. And thank you so much for your letter and for coming today to share your views with us and let us dialogue with you. We very much appreciate your time.
Thank you very much for the opportunity. I am not an accountant, but my brother was the comptroller for the Pentagon when they did the first audit of the Pentagon. And he tells me it's a very large pension plan that fights wars from time to time, if you look at it as an accountant.
Very good. Thank you, sir.
Thank you.
Thank you. I really do appreciate being here. I also want to thank you for what I believe is the important work that you all do to improve financial modeling. I've been a strong proponent all my life of transparency, openness, and clarity in government. And I do believe that elected officials work for the people. I am not an accountant. I am not a financial professional. I do have a law degree. I spent most of my time in the field of civil rights and civil rights cases, and hard to understand cases. However, I have been involved in a lot of business disputes too, representing both a plaintiff and defendant. And therefore, I've looked at and read probably a number of income statements, profit and loss statements, balance statements. Again, I am not a rules expert, but it is from the prism that I, as a former elected official, come to you. When I first ran for public office, I lived on a block that was, I turned to the east as I would get off my stairs, and one of the top high schools in the nation, one of the top 100, was at less than a half a block away from my house. I look to the west, I can still see the school, a few minute walk away. It was one of the more troubled institutions. So I ran on an agenda to help public education. I do believe that officials come and run for office for various reasons. And I was elected. I built a 14-year incumbent. And during that period of time, from April to May, before my swearing in, I was involved in a number of community meetings that had to host giving and using of TIF monies, upwards of $90 million into projects. When I was sworn in, we were then only a few months into it, we were presented with a budget by the administration. At that time, it was about a little over $6 billion in October. Elected officials, most of them are not accountants, are not financial professionals. Within 10 days, we had to look and analyze the budget, begin questioning of all the departments. Currently, the city of Chicago's budget is almost $13 billion. It does not include our public school system, and it does not include parks and a lot of other sometimes that are put together, water systems that are put together in an overall budget. I served in the city council for 2 terms, and I did run for other offices. But however, the problem that I saw in budgeting, and again, we only had a few weeks to analyze a $6 billion budget, was to look at how and what and where the items came from. Chicago and Illinois both have balanced budget requirements to keep elected officials accountable. But both governments, however, are drowning in debt. I have come to understand that governments can easily circumvent their balanced budget requirements through accounting rules and follow some of the accounting rules that have been instituted or promulgated here by GASB. Budgets are to me, complicated and so often politically motivated. I look at a governmental budget as a moral undertaking of what that governmental entity is and should be for its citizens. So I would turn to the financial reports for the truth and expect to find the answers. However, again, it is not generally the truth. It is hard to find. I see many of your proposed changes to a general fund accounting would allow and continue to keep allowing some of the confusing, and I'll say, I don't want to say it in a wrong sense because I think you're guided by truth, but it misleads the public. It's a myopic perspective that keeps continuing. I would allow, and it allows elected officials to continue to abuse the system. As a former city council member, I know that city financial statements can indicate, and excuse me, I didn't expect that. I thought I turned it down. That city council members, if there is available money, they'll spend it. But I would argue that these resources are already committed to pensions and liabilities. You know, and when I was the alderman, I brought in 8,000 jobs into my ward. I made sure that we had community benefit agreements to help those that needed jobs in my ward. It was the most diverse ward in the city of Chicago. And I look at what the city and the state have done. In 2019, the Illinois Comptroller, Susan Mendoza, used the fiscal year 2018 government fund statements to say the state of Illinois general fund deficit was reduced by $6.8 billion, when $6 billion of that improvement was for loan proceeds and state government-wide statements of activities reporting a $6.2 billion decrease of its net position to a negative $184 billion. On last year, November 20th, the chief financial officer of the city of Chicago had a plan to borrow money, an additional $1.7 billion to refinance existing city debt to save $450 million in 2020 and $501 million in 2021. And it returns the city of Chicago to the same era of scoop and to us. Like the state of Illinois, Chicago prepares its budget on a modified accrual basis, which was noted in the city's budget, classifies both long-term debt, proceeds, and operating transfer ins as revenues. And secondly, the money borrowed through this scoop and toss tactic will be included as revenue in the 2021 budget. The 2021 budget currently also includes revenues from transfers of the $597.2 million. I think there is a solution, and the solution should be a balance sheet of the general fund and other budgetary funds should include all long-term liabilities. These funds should be responsible to pay, these funds will be responsible to pay in the future. Also, the income statements should be prepared for the general and other budgetary funds. I can only think of political reasons as to why you would require any that a government-wide and proprietary fund levels, but not government budgetary level. In conclusion, what I'd like to say, the short-term perspective, which is very myopic, and I am a proponent of multi-year budgeting, makes it impossible for taxpayers to understand their government's financial conditions and consequences of what their elected officials make as they make their budgetary decisions. I think you require government to put out data that people can point to that in effect misrepresents the actual financial status of the government to the taxpayers and voters. By requiring governments to keep almost two sets of books, that makes the certain things that have happened in the past almost look small in terms of scandals that have occurred. The taxpayers and citizens are those who ultimately will be affected by all of this at the end of the day. I think we need to stop providing our elected officials, politicians with incomplete and in a sense, inaccurate data that misrepresents what the true financial statement is of the current government to the taxpayers. Again, I want to thank you and appreciate your willingness to take into account and listen to the public and people like me. And I hope you can come to Chicago and visit it sometime soon.
Thank you. We look forward to visiting many places at some point soon. And we really appreciate you being interested in our project and bringing the perspectives of a taxpayer and a former council person. So it's very beneficial for us to hear your perspectives. I'll start with you know, I'm assuming you know, it seems like from your comments that you do, that we can't set budgetary policies. Like that's not what we do, because those abilities are rightfully with the state and local governments. They're sovereign entities. or they're given that ability from the state if they're a local entity, but they have their ability to set their budgetary policy and their budgetary, practices and accounting however they see fit. So, some of them follow GAAP, some of them follow something kind of like GAAP, but not exactly GAAP, and may even call it GAAP. But we can't really dictate what they do. So if we changed the governmental funds to be full accrual, full economic resources measurement focused, just like the government-wide, include all these liabilities and costs, it doesn't necessarily fix. Governments are still going to budget however they budget, and we're not fixing that problem. I guess I'm asking, do you think it would fix that problem? Do you think that it would somehow encourage governments and that they would actually change budgetary policy and somehow, instead of maybe referencing a GAAP statement, they just reference their budgetary statement that would show in whatever accounting they choose instead of our statement? What do you think would happen if we changed that? Why would they change their budgetary policy?
Well, I know people follow your model. And even though you don't set the standards, I do believe governments such as Illinois, I know New York, require the budget to be calculated using generally accepted accounting principles for government. And since GASB sets generally accepted government accounting principles for governments, I believe there is that connection. They can help guide governments to be much more open and transparent and give clarity to the taxpayers and citizens of that local government.
Okay. Well, I believe those couple you mentioned, I think they reference GAAP, but they say it's not exactly. I think they follow a form of it. They make some adjustments, so it's not exactly, and they change it. But your point is still the same, and I understand that. Brian has his hand up with a question. Go ahead, Brian.
I'd just like to take a run at Joel's issue, maybe from a little different angle, and that is that, as you outline in your letter, the liabilities that Chicago or any government has, they're there at the government-wide level. Why are we having a problem getting some to pay attention to those numbers, those government-wide numbers that have the full accrual basis of accounting and the economic resources measurement focus?
Well, I think a lot of it is in their financial, how they make the reporting. And all of a sudden my screen bounces around between everybody who asks a question or whatever. But, I also represent a small suburb who deals with the city of Chicago right now. And many of you have heard the city, Harvey, Illinois. And we have an aggressive mayor there right now who wants to pay down the debt, refinance certain items. And of course, it's like many of the cities and states, especially urban ones, that we're feeling with a lot of industry has moved out. But as I look at what we do in Harvey and how we make the changes, I think our budgetary system and what we have motivates, the more open it is, the better the motivation for the taxpayer, because it allows businesses to make decisions on where and how long they stay, whether they're going to expand. It makes the citizens, especially retirees, on whether they stay or move. Voters vote with their feet more often than they do with their at the ballot box. So often in a lot of these smaller institutions and smaller governments. And Joel, I know as I say that, and that's a big comparison between a 2.5 plus citizen entity and the home rule unit that has 25,000 citizens. And so I think we have to be careful on how you craft and issue regulations, because what's good for the big is not the same thing for those that are for the smaller units of government. I am cognizant of that factor.
Mr. Fioretti, thank you for your feedback. I guess our struggle is, and Joel hit on the first part of it, is that we can't control how they budget. The information is there. Even if we were to take away that middle portion, the shorter term view, or put a full accrual in the center, what's to keep the elected officials from, going to what's their right is to go to the budgetary basis, whatever it is. We don't really control that. So I don't know if you ever thought about that, but that's really our struggle in this regard.
Well, and again, I think strong reporting standards that deal with both loans, how they come in, if they're treated as revenue, or the pension obligations are. Obviously, we're all aware of the pension problems that are engulfing a lot of our municipalities and states. But at the same time, I think we need to have strong clarity, and openness in terms of how governments report what comes in, how it's spent, and not just in that 1 year prism of what we look at.
Very good. Thank you.
Thank you.
Jeff.
Hey, Bob, thanks for coming here today and providing your perspective. I wanted to just ask, sort of follow on this issue of transparency. We talked earlier today with some testifiers, the proper role of financial reporting is to provide information, right, to users of those financial statements. And I'm wondering, as a former Illinois and Chicago resident, the issues that are engulfing the state and the city are ones that have been in place for quite some time. And, your letter points out some of the numbers, sizable numbers that are, facing the state. And I'm wondering, those information, as we've talked about in the government-wide statements, that information is known. Yet there seems to be a lack of willingness among leadership to tackle those issues. Now you're saying we should do a little bit of addition by subtraction and taking away the short-term perspective and providing that same information, full accrual in the general fund. But those same leaders who've been not paying attention apparently to the government-wide, what makes you think they're going to pay attention to gigantic negatives in the general fund when they haven't paid attention to the gigantic negatives in the government-wide statements?
Well, I've always been a proponent of Chicago. And despite the problems that we've had, I invite people to come here all the time. I was able to invite and host delegations from all around the world and talk with them because of my unique ward that I did have. It was the most diverse ward in the city of Chicago. It encompasses part of the Loop, the Sears Tower, Soldier Field, McCormick Place, and the far south side. And I say that because sometimes elected officials, we always accent the positive. And at the same time, we may play down the negative, and we have to be truthful. We have to be truthful with everyone. And I tried to do that in my career. And I see your question, while it's multifaceted, we need financial reporting that really comes forward and shows enough to have an understanding of the true financial condition of the government and the governmental entities. And so the taxpayers can ask informed questions and comprehend what the financial status is. I think most states have, maybe 49 out of the 50 have a balanced budget requirements. But what is a balanced budget? And yes, cash flow coming in and how it's spent. But if we don't have those long-term liabilities assessed into it, then we are making a mistake and misrepresenting the truthfulness of what the budget is.
Yeah, I mean, I understand your point, but it's also that, at a certain point, the leadership has to absorb the information, right? And I know sounds like folks like yourselves are trying to hold them accountable, but that's the difficulty, right? Because there are a lot of places, a lot of states in the United States that are not in the situation that other states are, and yet they function by the same accounting rules. So it would seem to make more sense to me that if it was the accounting that was causing the problem, there would be a lot more problem situations than the relatively few problem situations that we find out there. But I mean, I understand your point, but I just wonder whether it's leadership or is it accounting standards?
Well, it may be a little bit of both, to put it, since you threw it on the leadership aspect. And of course, when you try to be open and transparent, sometimes you're shut down on what happens in government because people, again, a lot of our governments, a lot here in Illinois has special interests. I'd like to give an example. I always had my ward night. And people would come in. I'd have maybe 30, 40 people. I would give a quick speech on before they would come in and have them fill out a form, but I wanted to know whether or not they were registered lobbyists. Here in City Hall and in Springfield, a lot's controlled by the lobbyists and what they do and how they influence. And I think the hardest word in a politician's vocabulary is the word no. Telling certain people, certain constituents that this is just not going to work. And you're right, leadership controls, but if we have good, strong modeling in terms of rules and regulations on what we need, it makes it easier to be transparent and open.
Thank you.
So Bob, if we went to a full, all the liabilities, everything on these governmental fund financial statements, accounting requirement, would you see the benefit or need for a cash flow statement for each of those funds?
Well, I think it's helpful. I mean, let's not put it there and not have it, but I think we should go to both, yes.
Jim?
Bob, thank you for your efforts to be here today and for your insights. If we went to the model that you're proposing for governmental funds, do you believe that we should also be reporting all the long-term assets in those funds, even though those assets may not be available for expenditure or might, as a practical matter, might not even be available to service debt, because clearly there are certain assets that governments have that if they don't have those assets, they're not providing the basic public services for which a government exists. So should we be including all of the government's what we call capital assets, or what a lot of people know as fixed assets, all the way from police cars and buildings to infrastructure in the fund financial statements, as well as including all of the longer term liabilities?
I hadn't thought about the question the way you're posing it, but I have thought what are the assets that government has? Water systems could be a huge asset. I know the city of Chicago and my dealings with them on behalf of the city of Harvey is over the water system and downstream municipalities. And I know the city, I believe, services 150 plus municipalities, and they do make, I don't want to use the word profit, but excess revenue from the water system. But as you look at the police stations, fire stations, public health areas. I don't know how we would account for those, because what would be the fair market value, or how would you assess it? You did say police cars, they can easily rack up the 100,000 miles within a year or two. So that gets to be a very tricky question. And you can then use the books in such a way as to not show the depreciation or not show the true value of what that asset is.
Thank you.
Lisa Parker.
Hi, Mr. Fioretti. Thanks for joining us this afternoon. So my question for you relates to MD&A, the management's discussion and analysis. And because of the importance that you've placed on the budget, I wanted to ask you this question, because in the exposure draft, we've proposed to take that budgetary analysis that right now resides in the MD&A and to move it back in the report to the required supplementary information, so that the analysis basically will be right with the budgetary comparison information. So I'm curious as to whether or not you have an opinion on that, whether you agree with that proposal or you don't agree with that proposal.
I am not sure how to as to that. I had thought about that, and or actually, sometime back there was a discussion that I overheard regarding that, but I did not make an opinion on that.
No worries at all. Thank you very much.
Thank you, Lisa.
Bob, we've come to the end of our time. We really appreciate your insights. It's very valuable to get somebody with your experience to come and talk to us about your perspectives on financial reporting and our proposed project. It's been very helpful. So we really appreciate you taking the time to do that.
And thank you for all the work everyone here does. And I know you've had a long several days of public discussion, and the staff has been there for all the work you do. And hopefully we can all make a difference and have what I hope is transparent and open government. Thank you. And come to Chicago soon.
We look forward to that. Thank you.
Thank you.
Yes, longtime listener, first time testifier, as it were. So yeah, I'm a little outside of most of the people who have testified. I don't prepare these financial reports. I'm not an accountant. I actually generally don't use, any of these statements myself. I use the ACFR, but more specifically, the actuarial valuation reports from public pensions. Because, hello, I'm Mary Pat Campbell. I'm a life annuity actuary. I'm here representing only my own personal views, but I have been analyzing and writing about public finance with a big focus on public pensions for over a decade now. And I've been very active in the actuarial community with regards to valuation standards, with regards to public pensions, again, specifically. I did send in 2 comment letters in December 2020 and for this comment period. I have sent letters in before. So my comments today are going to combine and build on those letters. In the letters, I focused on the viewpoint as a taxpayer and a voter. But now you've heard my emphasis on public pensions. That's really going to be the emphasis on my comments today. In my professional actuarial life, I have followed and been directly involved with various regulatory and standards changes in the life insurance industry. In these projects, it was well understood that insurers could go insolvent in terms of not being able to fulfill the promises they made to policyholders. For life annuity insurers, many of the promises being made are extremely long-term, potentially spanning a lifetime or maybe even several lifetimes for group annuities. Because the failure of insurers was seen as a possibility, mechanisms to protect the interests of various stakeholders were put in place by regulators and standard setters over the years. It's evolved as we've learned more about the risks inherent in the assets and liabilities for these products. This is clearly different from the sphere of public finance, where the argument is often made that government doesn't go out of business. While it's true that some kind of government will persist through both good and bad economic times or other kinds of stressors other than economic, it is not true that governments will be able to fulfill long-term promises simply because they are government entities. There are a variety of parties to which government entities make these long-term promises, and some of them I'm actually not too concerned about. Bond buyers and some other creditors who explicitly lend cash to governments are not always sophisticated in their credit risk analysis, but they always have the choice of not extending credit and not giving cash to the governments. That's not true of government employees and retirees. Often, government employees and retirees are the biggest unsecured creditors a government entity has. And they were not asked if it was okay to borrow money in terms of not funding their pension and other retirement benefits as they were earned during their working years. I'm going to emphasize this via repetition. Public employees and retirees are lending money to the government in the form of unfunded liabilities for pensions and retiree health care if you have a full accrual perspective. They are not asked if it's okay to borrow that money. The operating cost comes at the time the employees earn those benefits during their working years, not decades later when they start receiving cash for their pension benefits or healthcare benefits. The approach to oversight in the insurance sphere that I alluded to earlier is what Nassim Nicholas Taleb would call anti-fragile. It's a robust oversight system. Well, it gets more robust. I shouldn't overclaim here, but it prevents large disaster, prevents large promises and huge risks taken in the insurance industry, and thus protects stakeholders. This is what we want from life insurance and annuities, that the long-term guarantees that they are promising can actually be fulfilled. The approach that I see being taken in public finance is what I call the fragility of can't fail thinking. Because it's assumed government promises can't fail, the mechanisms that would prevent failure are not put into place. Because it is assumed that the cash flows will always be covered somehow, governments are encouraged to ever riskier behavior, making fiscal failure more likely. One major mechanism to make sure substantial long-term government promises are fulfilled is to recognize the value of those promises as they're made and as they're earned, not when the governments decide to make a cash contribution to those promises. If full accrual accounting had been in place in California in 1999, perhaps the retroactive boost to retirement benefits in SB 400 would not have occurred, and CalPERS fully funded status at the time would not have eroded as rapidly over the last 20 years. Perhaps the retirees of Pritchard, Alabama and Detroit, Michigan would have been better protected. For those who are not aware of these, Detroit, I should hope so, but Pritchard, Alabama is a bit smaller. The retirees, the public employees, saw their benefits cut while they were already retired. And they thought, they had these promises, and it turned out the money wasn't there to give them 100% of what they were promised. If we had had full accrual accounting in terms of recognizing who's making the promise and that expense as it's getting earned, that there is a shortfall would appear not just in the ACFR, if we're going to use the new acronym, it would appear in every level where those promises flow through. Between my writing of the first letter and the second in this particular comment period, GASB issued a fact sheet on these projects, and I'm going to quote a specific part with a little bit of elision. So to begin the quote, this is from the GASB fact sheet. To be clear, it is not the GASB's mission to tell governments how to manage their finances. The GASB does not, however, tell governments that their revenues must exceed their expenses. So that's ending the quote. And I agree with that statement. The point of accounting standards is to provide good information that people can act on. It's not to control the behaviors. That said, isn't it interesting how good or better information leads to better behavior? If governments are not recognizing the retirement benefits are an operational cost, recognize when those benefits are earned, again, during the working years, governments are stating through their accounting that those promises, those are empty promises. They're saying it's as if it had no value. Some of the testimony I've read and heard state that recognizing long-term financial promises on a full accrual basis, as opposed to a cash or modified cash basis, is too difficult for some governments. That doesn't tell me that full accrual accounting is wrong. It tells me those governments are probably unable to reliably make such promises, and thus they shouldn't be making those promises. Or at the very least, the people being promised should be extremely skeptical that they will see their promises 100% fulfilled. I've seen this happen in the insurance sphere. I'm going to give a concrete example, variable annuities. And we've had a lot of regulatory change in the insurance industry with regards to variable annuities. They can have embedded guarantees that are very complex and very valuable. The regulatory approach was pretty simple early on, and it's gotten more complex with stochastic modeling and all sorts of things now. As these have evolved, some insurers realized that they really couldn't support these liabilities, so they exited the business. So maybe some governments do have to use a cash or a modified cash accounting basis for their funds. Maybe they can't have more than short-term fiscal planning, in which case they have no business making long-term financial promises. So let me quote the GASB mission statement. We said what GASB's mission isn't, so let's say what it is: to establish and improve standards of state and local governmental accounting and financial reporting that will result in useful information for users of financial reports and guide and educate the public, including issuers, auditors, and users of those financial reports. So I'm asking GASB to guide and educate the public via better recognition of costs when they're accrued. I thank you for your time and attention, and I welcome any questions.
Thank you. Is it Mary Pat?
I go by Mary Pat. Yeah.
Okay.
Yeah.
Thank you, Mary Pat. I appreciate your interest and your comments. And I've told this story before. I don't want to waste everybody's time, but I actually at one point went into actuarial science as a degree, and then I was in the business school and I took accounting, and I never took an actuarial class, but I kind of consider myself a wannabe actuary in a way. I've always been really
well, and I mean, that's fine. Not that I want to be an accountant. I'm not. My middle sister is a CPA, so we have the accountant actuary jokes going between the two of us all the time.
All in the family.
Yeah.
So I wanted to talk to you though about, so we in government, we have these, in our financial statements, we have these kind of sometimes three perspectives that we present. One is the long-term perspective in the government-wide statements. One is for the governmental funds, a shorter term perspective, and a potentially third is the budgetary perspective, which sometimes can be the same as short-term, but sometimes it's different, right?
Right.
And so they each have their own purpose. And so I want to focus for a minute on those government-wide statements, which have for many years now been presented using the full accrual economic resources measurement focus. So ever since, at least since the new pension standards were enacted and OPEB standards were enacted in the last decade, I guess, those statements have included that unfunded liability, have included those, costs for pension and OPEB plans in expenses for those years. So I guess you talked very well about our mission and providing information. So in my view, we are providing that information. It's there. What is it about the fact that it's there and in the government-wide statements kind of isn't providing the information that you believe needs to be put out and portrayed?
Okay, so yeah, it's on. Okay, so again, so because I'm not an accountant and I actually don't work except with those government-wide reports, actually. So those are the ones I look at because I'm concerned about solvency. I'm concerned about projecting into the future. So that's why I'm looking at those. And this is reminding me some of the problems that we've had in the insurance sphere where we had off balance sheet items and things that did not flow through the income statement. As you say, you have different perspectives. Well, insurers have to do at least two different accounting standards, tax and statutory. Many have to do GAAP on top of that, and maybe they have IFRS if they operate internationally. And they have lots of different layers that you have to look at it and slice it different ways. In the annual statement, they have an income statement and a balance sheet full accrual and a statement of cash flows and MD&A, and you have stress testing, cash flow testing, and et cetera, et cetera. But the question is here, when you have a government-wide, who is really responsible for bearing the cost that's accrued each year, at least the normal cost flowing through? Okay, if the, and this is, I take a very long-term view, and this is the thing about life annuity actuaries. We think in terms, I think anything shorter than a decade is short-term. Okay, so that's a short-term perspective for me. So I'm looking, I used to work at TIAA, and we would project things out 100 years, but this was to do stress tests. We knew that past a couple decades, it wasn't going to be real. The issue that I have is if you're not recognizing that operating cost of who's making that promise, it's the governments that are employing the people who are accruing whatever retirement benefits at the time. If it was a 401k, those cash flows would have to be deposited right then. If your retirement benefits were set up, not that you had a pension fund that the government or a board of trustees was managing, but an insurance company through a group annuity contract, you'd be paying premiums and have to recognize them right then. They're making the same promises and they're accruing the same way, but you're not pushing that down. When it's at the government-wide level, it's as if the budgeting, at the funds, that no one's responsible. Who's responsible for keeping that in line? Okay. In some cases, I know that some local governments actually do have to recognize these costs, like in Illinois with IMRF, because they're told by the outside statewide entity what they have to contribute to the pension fund, and they have to. It's caused stress for towns like Harvey, Illinois. And CalPERS has a similar situation. It requires 100% contributions, but there's a lot of governments where there's no outside entity making them responsible for that operational cost in the period it was accrued. And that's the issue with public pensions. People act like, oh, it just came all at once. No, it accrued over time. And it was, well, we'll just do 60% of the ARC, of the actuarial required contribution, and it accrues over time. Most public pensions were well-funded or fully funded in 2000 or 1999, and over 20 years, they've eroded. It's just like, okay, we have it at the government-wide and we see it eroding, but no one's really responsible for it. So, I'm thinking from a high level and systemic kind of things, because I've been very involved on the insurance side. And we've had a lot of these discussions. So we've had, some of the stuff I'm hearing from the accountants here on transition costs and having to allocate costs and stuff, we've had this happen too. Some of our developments of recognizing the value of the promises embedded in our products has happened in the last 10 years. So there's a lot of evolution going on right now in accounting standards, on all levels. I think I've mentioned, and I know I'm kind of monologuing here, I did mention, and I know you guys talk with people at FASB, that the long duration contracts targeted improvements has been a big project to update how life insurance and annuity contracts are accounted for in US GAAP. And that's been really big, and the transition has kept getting pushed off. And the pandemic was like, oh, good, we don't have to do this yet. It's had a lot of consequences. In full accrual accounting would have, at all levels where it flows through, would have a lot of consequences. I don't deny. It would take a long time to get there, I think. But I'm trying to advocate that as an ultimate goal. Work towards that is what I'm trying to argue.
So I guess, and I would continue to say it's there, right? And I whether it's used or not, I guess was
right.
part of the problem, right?
Yeah, and I mentioned IMRF. for some pension systems, for some of these obligations, I would say the best behaved governments, they do this, right? In regulation, unfortunately, often we're getting at the marginal cases. We're trying to prevent disasters. So we look at who are the worst behaved ones, and what are they doing? We've had this in US GAAP for regular corporate accounting of like, you can't recognize that revenue. Netflix says, okay, do a 2-year subscription and you recognize it all in the first year. No, you can't do that. We know the tricks. And so accounting standards evolve to say, no, you have to reflect the reality of what the promises are, what you're earning over time. I'm focusing on pensions. I've been hearing about grants and other things that other testifiers were talking about. And it is a different kind of perspective. It's easy to watch cash flows, but if you want a system that's sustainable, and as I said, this anti-fragile versus encouraging various tricks such as pension obligation bonds, scoop and toss. Let me see what else we've got here. I mean, it's just other borrowing, what's going on with Illinois vendors. These are operational costs, and not all of them are pension related. It's just that there's always these tricks to get under the balanced budget laws. And while GASB is not responsible for what the politicians are doing, you don't have to make it easy for them to lie. They're going to lie, but you know, it would be good if the responsibility kind of went through and flowed. You know, that's the way I see it. There are plenty of governments actually that are just fine with the pensions and are really reflecting these costs. Most of what we have in mind are like Chicago and Illinois and New Jersey and Kentucky, you know, the bad boys. And those are the ones that need to be more transparent in what's actually going on. You know, not perhaps Wisconsin or, you know, some of the other states that have worked on this. So.
Jim has his hand up.
Okay.
All right, Pat, thank you for your perspective and for your interest. I'm trying to process what you're saying. And as Joel pointed out, the information, including the costs, is the government-wide financial statements, as you're probably familiar with. The cost runs through the statement of activities. But what I think I'm hearing you say is that you believe that the fund financial statements should reflect a full cost of services approach rather than the current approach, which is a spending within that period approach. And is that what you're really advocating for? And therefore you believe
yes, that sounds accurate. I mean, again, I'm not an accountant, so I don't necessarily use the same language, but yes. Is it the example again I give, if you were providing these benefits, so we think of in terms of the employee costs, their total costs, and their benefits have a cost, the promises you're making for retirement. If you did it as a 401k, there would be a cash flow and you'd have to recognize it. If you did it via group annuity, there'd be a cash flow to the insurance company and you'd have to recognize it. But when it comes to pensions, it's, you know, whatever contribution we decided we were going to make, as opposed to what was the value of the benefit that you earned in that period. So that the normal cost is what I'm saying with regards to public pensions. So yeah, I'm using the actuarial language.
Thank you.
Yep.
Jeff.
Hello, Mary Pat. Thank you for being here today. You know, your comments raise a whole host of things that are banging around in my head, things that I've asked prior testifiers about, the questions of you know, governments as continuing entities, why the fact that we have, you know, relatively speaking, a few outliers who are weak in this area, but generally governments on the whole act responsibly and think about these things responsibly, and what is the role of accounting standards in sort of in dealing with this. But I guess I will ask, and you recognize governments as continuing entities. which is fundamental, right? So when a corporation makes pension promises, that corporation could be gone tomorrow, right?
Right.
So, and they won't be able to raise ostensibly another dime. And so therefore we want those pensioners in a place where they can be taken care of ostensibly if that company doesn't raise another dollar worth of revenue. Governments, for the most part, a little bit different, right? And I think we see that, and we see even research in this area. And I think it was Brookings recently just came out with a piece that said something to the effect, right, that government pensions don't need to be fully funded, right?
Okay.
So
yeah,
it sounds as if you're familiar with it.
I have a lot of strong opinions about that research. I'm not going to rant on that right now. I'm just going to use a couple concrete examples that we know about. I mentioned Detroit. So one of the things that there were all sorts of things going on in the Detroit bankruptcy. It was not the pensions that caused the bankruptcy, by the way. But that said, what a big part of the Detroit bankruptcy was its tax base eroded. I didn't even look at the tax base. I just looked at the population dropped by 10% in a decade. That's huge. Puerto Rico has a similar problem where it's just people going to like Florida and New York from Puerto Rico because they're economically stressed. And where's your tax base? The Puerto Rican, and I was just looking at a lawsuit regarding to the Puerto Rican pensions, are pay as you go. And a lot of public pensions used to be pay as you go. And then the Great Depression hit. A lot of the pension funds that we know today got started in the 1930s and 1940s because the governments recognized they might not have the tax base, or they might not have the cash flow at the moment they need to pay the benefits. So it's a good idea to pre-fund them. And so that's kind of what I'm talking about. There is going to be something called the government that's there, but they might not be able to support the promises the government 30 years ago made. And, you know, I think one of the reasons public finance has done so well is we had that big boomer population, which really grew tax base in a lot of locations in the US. The problem is, of course, the oldest baby boomers are 75 and the youngest are, let's see, it depends on where you do the cutoff, but, you know, they're about 60 years old. Most of them are going to be retired soon. And so some of the tax base, you can even have the population, but the tax base goes down because they're retired and, you know, you can tax them only so much. So I'm just like, this is again goes back to that anti-fragile. The anti-fragile system is that you pre-fund the pensions, and you need to pre-fund it while it's earned, because once they retire and you're trying to pay benefits, your options really get constrained if your tax base shrinks. That being able to support on a pay-as-you-go or an, you know, 70% funded for all time public pension kind of depends on the tax base growing at a certain rate. And if it doesn't, you know, it would be nice. I mean, my concern here is there are promises being made. And basically with the current baby boom population mainly being retirees now, we're going to see this with Medicare, see this with Social Security. There are going to be a lot of strains, and the ability to bail out or to support those cash flows is going to be very limited. Unfortunately, and this was something I had in my original type of, the best time to plant a tree was 20 years ago. It would have been great if we were having this conversation 20 years ago. And then we could just be talking about details right now. The second best time is to plant a tree is now. So, you know, we have various fragile pension systems that have grown over the last 20 years, basically, because the last time most of them were in a good position was in 2000, fiscal year 2000. And then it's just kind of gone down from there. And you know, it's not just that there's not full accrual accounting. There's just a lot of different things interacting. I think being able to have these costs recognized at all levels, and they have to be allocated and yada, yada. But I'm just saying conceptually, having as your goal a full accrual accounting is a long-term perspective that we expect government to last longer than the politician's term, you know, and make them recognize the cost of the promises they're making as, you know, as they accrue. And it's a little optimistic that it would dial back what politicians do, but you know, you got.
I mean, it's just interesting because I mean, I think we won't have time to get into it, but there is this notion that even, you know, there is another side, right? That there are those who would say if every state fully funded their pensions, that's money that's not going towards other uses,
Yes.
right? And so in a world of limited resources,
right.
Hey, why should we be quote wasting money fully funding our pensions when there is some reasonable level of carry that we can do over time? Right. And I get your point. Management has to behave responsibly to be able to make sure that you know, if economic circumstances change, they can manage that outcome. And I'm not sure that all of them are doing that. But it's just interesting to see the different sides of it.
Yeah, I mean, my concern, and this is coming from an insurance actuary point of view, is that I know things can fail. And how do you set up systems? And we've learned this the hard way on the insurance side, not in the US so much for life annuity, but it has happened. Equitable Life UK made some annuity promises, and this hundreds of years old, very old insurance company destroyed itself because it overpromised. It can have, you know, it doesn't matter if it's a private entity or it's a government. You can overpromise. It can happen. It's one way to prevent that is to make people recognize the value of the promise when it's made, you know, not the 30 years in the future when the cash flows actually occur. So,
thank you.
Anyway, I know you guys have a break. So yeah, I could talk for hours about this, and you guys need to move on.
We appreciate your interest. We appreciate your passion. We share your passion for governmental accounting. We take our mission very seriously, and we appreciate your input into that. And that you take the time to write letters and to come and talk to us about it. So thank you.
Okay, thank you.
All right, with that, we will take.
Thank you for allowing me to talk to you today. You know, I've listened into a little bit. You know, I know you've had been hearing from a lot of people who are accountants who are very familiar with GASB rules. I will tell you that today I'm here testifying as the former Illinois State Comptroller. I am not an accountant. I'm not a financial professional. I do have an MBA from Kellogg Northwestern Graduate School of Business. I have 20 plus years of private sector business experience, leading a large portion of the business where I had P&L responsibility. So I'm very familiar with looking at financial statements, income statements, balance statements, or balance sheets and cash flows, et cetera, from a private sector business perspective. But I will say right up front, I am not a rules expert. I am not an accounting expert, but I am, as someone who was the state officer in Illinois, charged with maintaining the state's fiscal accounts, paying all the bills for the state of Illinois. My office is the one that developed our annual CAFR and managed really not the investment side, that's the Illinois Treasurer, but all of the outflow side of the financials for the state of Illinois. And it is really from that perspective that I come to you today, and from that perspective that I wrote my letter. You can probably imagine my surprise coming from private sector business, using financial statements to make decisions regarding the health of my business, what my costs were, what I owed, how we were going to make sure that we managed our liabilities and grew our business and met financial targets for stock appreciation and in the eyes of the stockholders. When I came to government and found out, it took over a department and part of a section of our government that has, for years, we've been told that our state has balanced its budgets for year after year after year, following the gap for government accounting standards, presented balanced budgets year after year after year. I took over a state that had at the time about $115 billion of unfunded pension liabilities. At the time, about $40 billion of unfunded healthcare liabilities. And the day I was sworn in, we had $8 billion of unpaid bills. And yet somehow we got there with balanced budgets, according to the standards set under GAAP for government. And as I would travel the state and talk to people, they would be surprised. You know, how can we get in this position? We're supposed to have balanced budgets. Under the Illinois Constitution, we require our legislators and our governor to pass budgets that are balanced. Balanced, not only just balanced using their funds, but balanced using the GAAP for government. What I learned from this, and what I hope to maybe impress upon you today, is that using the standards for government, allowing long-term liabilities to be kind of off the radar, while allowing the inflow of revenue. And it's been treated different ways in Illinois. It actually, in the most recent budget, I believe, shows up as revenue if you get a loan, but allowing those loan proceeds to show up as revenue, but not showing the corresponding long-term liabilities, it allows the decision makers in government, who are really, they're politicians. They're not accountants. They're not financial professionals. They are, many of them have no business background. A lot of them are educators, but they're not, the finances, and the legislators are a lot of times just, we'll just say they don't really understand a lot of the numbers. And so, so it allows them to look at things and think they're balanced, and and this is how we end up with a mess. I can give you some anecdotal stories about how we were in such bad straits financially that the state had to go borrow $6 billion to be able to pay down bills. So we did that, and we knocked our bill backlog down from about 12 to about $6 billion. And then the next budget that came up, the legislature was spending more money than we had coming in again. It was like the loan that they had just gotten was out of sight, out of mind. They forgot that they had to pay that back, or they conveniently didn't mention it because it wasn't on the fund statement. That is what they are looking to budget, the general funds account. I think the important thing is that the government decision makers do not look at total financial statements. Most of them have no idea how to read them. The people who are voting on these things, passing these budgets, are the politicians. And what has been allowed, and what my concern is that it allows basically a loophole for our legislators to say things are balanced when they're not balanced. And if you need an example, I mean, Illinois should be the poster child state for how this doesn't work. With balanced budgets, following the accounting standards, today we are a state that really, if we could be bankrupt, we would be bankrupt. We have $140+ billion of unfunded pension liabilities. We have over $40 billion today of unfunded healthcare liabilities for retirees. And then we have another $30 or $40 billion of borrowing that has been done to fund unfunded pensions and things. And yet our leaders pass budgets that spend more money that they say, and they say they're balanced under looking at the general funds account using the GAAP for government accounting standards. And so my question, I guess, maybe naively, as someone who has been on the business side and in the government side, is why is it right? Why does it make sense to not have long-term liabilities recognized as a liability with the same when the revenue or the loan proceeds show up either as an inflow to revenue or some kind of an asset, why isn't there a corresponding long-term liability on the fund at the fund level, which is what they look at. They don't look at the giant, all government consolidated numbers. They think they have money. They think they've balanced the budget. Businesses manage their businesses that way. If you borrow money, you know you have to pay it back. It's on both sides of the balance sheet. And I don't understand why government does not. It leads to bad decisions by people who don't understand financials, and those who do, who are looking for ways to, maybe manipulate the numbers for political gain. And so that, I guess, generally is my statement. I imagine you've all read my letter. I will tell you that there are people throughout the state of Illinois who can't understand how our state has gotten to be in such dire straits. When we've got legislators who claim to be following the rules. And as someone who lives in Illinois, as someone who had to talk to our businesses, explain to people throughout the state why the state was a year behind in paying bills that it owed to them for contracts, talk to the providers of healthcare for the state, to explain to them why the state had no money to pay the medical bills of people. And in fact, we had unfunded liabilities in the tens of billions. No one understands how a state can follow the rules and get into this mess. And I think it goes back to loopholes in the government standards that frankly aren't available in business. And I guess maybe a final thing, when I learned accounting back in my business school days, which, admittedly was decades ago, I always felt like accounting was one of the, to the extent that things can be black and white, accounting is a little more black and white. Things balance or they don't. You borrow money, you have to pay it back. There's a check and a balance on so many things, unlike a lot of other parts of business. And government needs that. Government needs that more than business, because at least in businesses, you have people who have a stake in getting the answer right, because they are accountable to the shareholders. In government, people can be unaccountable. And I think we've seen that, I can tell you in Illinois specifically, extremely unaccountable for the disastrous financial results that we now have as a state.
Thank you, Leslie. I really appreciate that. Dave.
Thank you. And Leslie, thank you for joining us. In the spirit of full disclosure, I was actually involved in the preparation of the very first comprehensive annual financial report back in 1981.
Oh my God.
So, but you made reference to the Illinois budget laws, and your letter very clearly states what the law says. And the unfortunate thing is, the legislature may say they're following GAAP, but they're not. Under GAAP, all those unpaid bills, they're currently reflected in the general fund. That's why there are, there's a $10 billion deficit in the general fund for the state. So if they're saying that it's in accordance with GAAP, that's not a truthful statement. So, the comments that you've made about pensions and OPEB liabilities and like, those are certainly subject to debate. But when somebody says they balance their budget in accordance with GAAP and they're not paying, pharmacies and things of that nature where they owe the bill, that's just not the case. But my question, I just wanted to set the record straight from that standpoint. But my question to you is, during your time as controller, why, you were communicating to the people of Illinois, why wouldn't anybody focus on the government-wide financial statements? As you said, like the private sector has segment reporting. Segment reporting is not required to be under GAAP. So, it's reported like management. People look at segment reporting, but they also focus, of course, as you said, on the balance sheet, on the operating statement of the corporation. we have that economic resources accrual-based balance sheet. We have the statement of activities on the accrual basis. Why won't people focus on that?
I think, and this is just, my opinion, obviously. So I think because people look at where all the money is, and in Illinois, it's the general fund. That is where money is allocated from. People are looking at how much money does this program get? How much money are we going to use for education? What's the, how is the general fund where most of Illinois' funds are to spend? And people don't look at, they don't look at consolidated things. And again, I guess I just, in a business, you have people whose job it is to make sure the financials are correct. You have to report them. Your stock prices relate to that. You have shareholders holding you accountable. In government, who holds you accountable? If it's a state like Illinois, the voters theoretically, but it's impossible to get rid of people who are not doing a good job in not just our state, in many states. I think we can see when you look at the news. And so why don't they look at that? Because the people who are making the decisions on this, they are not financial people. They probably have never looked at financial statements before they got into their roles in the legislature. They have a built-in, this might sound cynical, but they have an incentive to hide how bad things are. They want to get reelected. They want to fund all of the handouts, the goodies that the people who put them in office want. And so they look at what are we spending and where are we spending it? And they don't look at consolidated statements. Someone does, as the comptroller, I was out there trying to explain to people what a mess things were. This might seem so naive to, but this is the level of financial expertise in, the average people who don't have a business background. But people would ask me, they say, we have so much money coming in. How come you can't pay me? Why am I waiting 6 or 8 months to get paid by the state? And at this particular time, I think we had about $10 billion in unpaid bills. We had unfunded pension liabilities in the range of, at the time, about $115 billion. We had promised funding for our higher ed that was in the range of $2 billion that we hadn't paid for yet. And we had a budget, a revenue expectation of, in our general funds, of about $32 billion. And so people would say, how come we got all this money coming in? How come there's no money to pay this? And I would say, I started taking 6 zeros off of all the numbers to get them down to something people could imagine. I'd say, imagine you're sitting in your own home down to pay your bills. If you have $32 billion, coming in, let's just take 6 zeros off of that. That ends up being around $100 or so a day that's coming into your household. You look at the bills you have, it's like having $10,000 worth of bills you have to pay today sitting on your table, and you have $100 in your checking account. And you've got on your Visa statement, which is the long-term liabilities, you've got $115 $1,000 you have to pay, and you've got another $2,000 worth of bills coming in the mail, and you have $100. That's where the state of Illinois is. I will tell you, I told that to the legislature, and they were shocked to hear that. So I don't know if that answers your question, Director, but people are financially not very literate who are making the decisions from this. They don't understand that when they borrow money, they would say that they would spend money and allocate funds for something, even though we had a lot of debt already, because somebody would give that organization a loan until we could, pay it. But we can never pay it because we kept borrowing money. We had to pay that money back. So Does that answer your question? I mean, it seems like nonsensical, but the people who are making the decisions with it don't look at that level of data. They look at their general funds. They're parsing out dollars. They're incented to stay in office. And so they're incented for giveaways. And they use it, sadly, to, I think, hide the truth of what is going on.
Well, if I could just briefly follow up, you said that they're incentive not to look at the government-wide financial statements. So if you actually reported all of these liabilities in the general fund, would they be equally incentive to say, don't look at these GAAP general fund financial statements, look at the budget, even though it says it's GAAP, it's not GAAP, but it shows a balanced budget? Would they then just move the narrative?
So I don't, I guess I don't know the answer to that question. I just know that our budget requires that it be done, and the budget that the General Assembly works on is the general funds budget. That's where they're allocating money for programs, and they're not deciding to go borrow money. That is the governor's level. But they're allocating those funds, and though the budget requires that to be calculated in concert with the GAAP rules for government. And so, maybe when there's a deficit on unpaid bills, that shows up. But if they borrow money and bring in, to be able to cut that down, to shrink that gap, the fact that they just borrowed, example, $6 billion, it's nowhere. It's off the radar. It's on that consolidated page. They don't look at that. They're like, oh, forgot about that. Out of sight, out of mind. And it's allowed Illinois to borrow, borrow, borrow. They skipped funding pensions for 2 years back in 2006, 2007. They took that money instead to fund programs that a governor who was running for re-election at the time wanted to fund, didn't have the money. So instead of funding pensions, they used that money to pay for it. And the pension obligation, it was invisible, off the radar. And, we learned that years later when the damage has been done. And now we have a $140 billion unfunded liability. So I don't know if that answers your question, but the people who are making these decisions aren't professionals in any way with respect to finance or accounting, or even most of them general business. There's no one to hold them accountable. Unlike in a business, your auditors would call you out, your stockholders would, be trying to take over the board. I mean, if it was done this way. In government, what's the ramification? If you've given away all this to your constituents, they like you, they vote for you, and it just perpetuates.
No, thank you very much. Appreciate it.
Jeff.
Hi, Leslie. Thank you for coming to speak with us here today. I wanted to just ask, I appreciate that you're talking directly from your personal experience and with the state, but I wanted to ask, since all states use the same sort of financial reporting, as you call it, GAAP for governments. So if that were the case, why doesn't Wisconsin have the same problem? Why doesn't Iowa have the same problem? Why doesn't Indiana have the same problem? Why doesn't Missouri have the same problem? I'm just picking bordering states, but I recognize there are states that have some financial difficulties, but by and large, the states are quite strong. So is it a financial reporting problem, or is it sourced from something else?
Well, I will just give you, I guess, again, just my thoughts on it. Most of the states that you just mentioned have balance in their political structure in the states. And that helps hold things accountable. And several years ago, actually, Governor Walker inherited a state that had a lot of issues and put in place a lot of controls that weren't there, and actually straightened out that state so that now their pensions are fully funded. But in states that don't have that balance, that are heavily run by special interests. And I would say Illinois is one of them. I don't know what California's look like, but I'm guessing California, New York, I think is in better shape than us, but I think still has some issues. There are plenty of states that are dominated by single party rule, where there are very heavy special interests involved. And I think a majority of those states have a lot of problems. And so they tend to be the larger, they tend to be larger. Well, I guess that's maybe not correct, larger states, because Florida certainly is not like that. And it's certainly a larger state, nor is Texas. I guess I just look at what's happened in Illinois, and I feel like there are loopholes that allow people who are not the most honest of legislators. We've had a number of them in Illinois under FBI indictment. As I think we all know, it's been all over the national news. And one longtime speaker just stepped down under a cloud of corruption. But somehow, those budgets were passed, and we've got 20 years of this. So more than 20. So I guess that is just my answer. There is no, you can't go to the legislature and say it's not balanced. You do that and they show you how it's balanced. But then, as I said, it's like the loans they took out to balance it they're on that other page that no one looks at. They don't look at. I had to look at them. I had to say, we're out of money. We don't have any more money to pay the bills. So I don't know. It probably didn't really answer your question, but I think it has something to do with the attitudes of the people who are running the states. And I don't think Illinois is the only one where it's not been where there's been, in Illinois, there's been a fair amount of corruption, and they've used every trick to put us in this position.
Thank you.
So Leslie, I want to follow up on you've said a number of times, nobody looks at those entity-wide statements. What can we do to make them look at them? Even if we change the general fund, governmental funds to a full economic resources measurement focused, full-blown, long-term perspective, with the fund statements, governments can move things out of a fund, put them in different funds if the focus is only on the general fund. So we've got to get people to look at this big picture, this broader picture of the government, especially the legislatures and people that are using this information to manage the government. How do we get them to look at those entity-wide statements? Because they're important.
They are important. I mean, as I said, obviously I looked at them. Certainly the credit rating agencies looked at it. And there's another reason why Illinois' credit ratings are in the, basement these days. I think, so people do look at them, but the people who are voting on the budgets, who are making the decisions when they look at the fund by fund measures, which is how they budget in the government. They don't budget at that high level. They budget at the fund level. And when the budgeted funds financial statements are prepared using a different accounting basis than the government-wide statements, it gives those officials an ability to make those numbers look their best. And having something that's consistent, I think, would certainly help. They can't look then at the general funds balance that they just borrowed money to help pay off, billions of dollars of unpaid bills and reduce that backlog, without having to see that they also now have to pay back, and begin to put that into their thinking, that they can't just go spend another big chunk of money, which is what they do. That loan is on a different sheet. And for many of the people who vote on this and who work on these, it's like out of sight, out of mind. So I think having a similar a similar basis for accounting in the fund statements as in the government-wide statements would be helpful. I just think we have to match those liabilities up, and it gives people the ability to manipulate things for perhaps unintentionally. But I'm from Illinois. I've seen up close and personal a lot of the gyrations of things, and how once something was borrowed to pay for something, it's forgotten about.
Leslie, thank you very much. We've used up your time, and we really appreciate your perspectives, your experience and bringing those perspectives and that experience to us really informs our process and helps kind of bring some of that to us as we make these deliberations and go through them. So we really appreciate your time. We know it's very valuable. So thank you for being interested in what we're doing. And thank you for taking the time to respond to us in the letter and to come and present to us today.
Well, thank you for giving me the opportunity to talk to you all. Good luck with everything. And thank you.
Thanks. Have a great rest of your day. Appreciate it, but welcome, Sharon, and please take it away.
Thank you so much for inviting me here today. My name is Sharon Lassar. I'm the director of the School of Accountancy at the University of Denver. And I am not a government accountant. I am a taxpayer, and more interested from my point of view as a taxpayer in your governmental accounting standards. I replied to the preliminary reviews in February of 2019, imploring you to adopt a full accrual approach in the financial reporting model. I responded again with the exposure draft. The number one concern is please do not call what you are using accrual accounting. It is not accrual accounting. And for people who rely on Investopedia to describe accrual accounting, it's very misleading to describe what is proposed in the exposure draft as accrual accounting. In addition to not wanting you to use accrual accounting, again, or the term accrual accounting to describe what you are proposing, I implore you to use full accrual accounting at the fund level. It is what is proposed by the International Accounting Standards Board, International Public Sector Accounting Standards. And 75% of the governments in the European Union have adopted accrual accounting for reporting, and about a third of governments have even adopted accrual accounting for budgeting. I know you don't control budgeting, but it is possible to have accrual statements for governmental purposes. Many other commentators have given you examples of how the exposure draft falls short, so I will not repeat those. But I will repeat that a short-term financial resources measurement focus obfuscates the interperiod equity as explained in paragraphs B 118 to 122 of your exposure draft. And in David Letterman's style, I have a top 10 reasons why you should adopt a full accrual reporting. First, capitalize on the trajectory that you started in the 1990s with the discussions that led to GASB Statement 34. Let's continue that trajectory rather than stunt it. Number 9, case studies by the OECD investigators show that policymakers have paid greater attention to acquisition, disposition, and management of government assets, liabilities, and contingent liabilities following accrual reforms. So we have better management of government with accrual accounting. Number 8, accrual accounting provides a better view of growth in government expenditures and commitments. Number 7, better intergenerational equity is obtained by accounting for the full cost of our activities. Number 6, we have better comparison across governments when all governments use the same basis of accounting, rather than having a statement that is so influenced by their individual transactions. Number 5, it provides better fiscal forecasts. Number 4, accrual accounting also gives us better performance evaluation of government services because costs are allocated to the right time period and to the right program. We might even be able to benchmark against other programs. Number 3, we have better navigation from the fund level statements to the government-wide statements if they are prepared on the same basis of accounting. Number 2, better understanding by users. The current system of multiple measurement systems is confusing, even for sophisticated users. And number 1, with accrual accounting, we will have better decisions, or at least make it harder to make bad decisions. And that concludes my testimony.
Thank you very much. And I appreciate a good top 10 list. I like Letterman's. Thank you for that. Jim has the first question.
Good morning, Dr. Lassar. Appreciate you being here and appreciate your interest in the work of our board, as well as I'm sure the Financial Accounting Standards Board. My question goes to the concern that some folks have expressed with regard to really understanding the full cost of an activity that's accounted for in governmental funds. And I want to know whether you share this concern, and if you do, how you think we might be able to address it if we were to go with the proposal that you're advocating. And
yes, I do share the concern that policymakers, legislators, and others do not have the information that they need to make good decisions around the full cost of the decisions that they're contemplating. As an example,
well, let me ask my question if you don't mind.
Oh, I'm sure. Go ahead.
Okay. We have a number of governmental activities that actually are accounted for in more than one fund. For example, transportation. Many times you'll see a part of the cost of say streets and roadways and bridges and so on accounted for in a general fund, and other parts of that cost accounted for in a special revenue fund, and maybe even accounted for in a capital projects fund. So if you really wanted to see the full cost of the transportation activity, you would have to cross multiple funds, and fund financial statements would not show that. So I'm asking, my question is, are you concerned about that? And if so, how would you propose that we might address it to overcome that concern in the situation where an activity is accounted for in more than one fund and may be required by law to do?
Yeah, so I think what you're describing is analogous to having a joint cost type of situation in a manufacturing. You know, where do you allocate the costs, or an overhead allocation problem, where if you have the information that perhaps this is does not necessarily rise to the point of being at the government level financial statements, but internally for managing those particular activities, I think that could be even another discussion. So I understand the limitations of not being able to identify all of the cost with pinpoint accuracy, but with at least accrual accounting within the individual funds, you will have a total cost, perhaps not allocated as finely as would be ideal, but you would still have the total cost. The current model at the fund level does not even give you the total cost because we're not accounting at the accrual level or on the accrual basis.
Thank you.
Brian.
Maybe I'll come at that question from a little bit different angle. If the way we're presenting funds right now is problematic, what do you think the reaction would be amongst users, including those that are legislators, if we didn't have funds anymore? We simply use the government-wide statements. What would be the reaction, you think?
I can imagine that would make it very difficult to move completely away from funds. But what I'm advocating is that funds be accounted for on a full accrual basis. So maintain the funds, but have them accounted for on a full accrual basis at the fund level.
Okay, thank you.
Mm-hmm.
Chris.
Morning, Doctor. My question is a follow-up to Jim's question, and it really goes to, you talked about having all of the cost or all the information at the fund level, but that underlying question of allocation, right, and the consistency of allocation, do you have any thoughts or ideas on how governments might consistently allocate those costs across funds, so that when you're looking at one government as compared to another government, and everybody's concerned about the general fund, right? We're talking a lot about the general fund, but there are a lot of funds, and how are we allocating year to year, and how are we consistently allocating year to year and consistently allocating across governments? Any thoughts on that, on practices that might be implemented to make that?
Well, one thing that always confuses me, again, my specialty is taxation, not governmental accounting. But when I look at governmental funds, one thing that confuses me as a reader is the line of transfers from one fund to another. I've tried to identify, are these transfers consistent? Are they the same percentage of revenue each year? I'm not sure what's going on in the transfers. So to the extent that costs are allocated and shared through a transfer system, perhaps greater disclosure around those transfers would be helpful.
Thank you.
Mm-hmm.
So Sharon, I want to follow up quickly on the transfers. First off, there is disclosure that's required, and I know you're a tax person, so there is disclosure required about the purpose of the transfers. But one of the things that this proposal does in the governmental funds in the flow statement is it asks a preparer to break out the transfers between current and non-current to try to, on the statement, distinguish at least a little bit of the purpose of the transfer. Do you find that would be a helpful addition?
Yes, that would be a helpful addition. But again, we're talking within the confines of your proposal, and the proposal is not full accrual. And it's really the full accrual at the fund level that I'm advocating.
Sure. The transfers, it kind of goes back to maybe some of what Jim was talking about in transportation or maybe transit, right? And this is just a function of government in that, a transit fund, which often is an enterprise fund, which means it's full accrual, it's full enterprise resources, long-term perspective fund statements, right? But it usually doesn't fully support itself. It needs a subsidy. And so there's this transfer in that comes in every year from usually the general fund or something like that to help it kind of bottom line. And so this is kind of something that's unique about government, is showing these different activities and showing the transfers and showing what really funds what costs are provided and that sort of thing. And so it I guess I didn't have a question. I was just following up on some of
No, I understand that. I mean, some of the things that concern me are things like last year, the Colorado legislature passed a bill that requires the employers, which a lot of citizens don't even realize that means taxpayers, but the employers to increase the contributions to the safety retirement fund by 0.5% per year for the next 8 years or something. That's where an increase of 4% contribution. Cities were asked to estimate for the fiscal note what that would cost them. 2/3 of the cities that were asked couldn't estimate. We can estimate what we're going to contribute next year, an additional 0.5% of our wage base. The long-term cost could not even be estimated because they do not have that information at their individual levels. So to the extent that we can require information at fund levels, we're going to heighten the awareness of the need to be able to provide those numbers when asked. I know you don't, govern budgeting, but to the extent that reporting is available, even on a hindsight basis, you're looking back and seeing, well, what did that cost us last year? That's an additional piece of information that today we don't have.
Roberta.
Good morning, and thank you for coming to provide testimony to us. We really appreciate it. A question I have for you is the fund structure. You keep, indicating your view that you think that accrual accounting should be used in the fund, governmental fund financial statements. Now, we have different types of governmental funds, as you're aware. For example, we have capital project funds and debt service funds, and in addition to general fund and special revenue funds. And I was curious what you think a resulting fund structure would be, or if there would be changes to it, because, for example, capital project funds account for building capital assets. So if the capital assets were accounted for in another fund, would you still have capital project funds? Would there be a role for them? And debt service funds are paying the debt. So if the debt is reported in another fund, do you still need debt service funds? Can you elaborate a little on that for me?
So I would think that you should be able to consolidate those funds to the extent that you have full accrual accounting and you're accounting for your capital assets and you're accounting for the liabilities incurred to build those assets, that they should be able to be consolidated into the fund or the activity where those assets are used, whether that be the general fund or not.
Okay, so you kind of envision a different fund structure that maybe is more based on activity rather than like legal restrictions, things like that. So it'd kind of be a different reason for fund structure.
I think that would be a possibility. Yeah. Yeah, and I would think that would make sense. I mean, I know that there's been discussion over, should depreciation be included? Well, depreciation is an indication of maintenance costs to the extent that we have deferred maintenance or replacement cost. I mean, there's a reason why we depreciate assets in the in the private sector. Why not depreciate them in the public sector as well? So yes, there have been questions about, well, we don't include, the ability to tax in the future on our balance sheet. So why would we include the liabilities on our balance sheet? Don't call it a balance sheet in governmental accounting, I know, but that question is, well, I have an Apple iPhone and I don't think Apple includes on its balance sheet its ability to raise the prices for my cloud service or my replacement of my new phone. It's internally generated goodwill. They have pricing power that's not reflected on their balance sheet. And I see tax revenues as a very similar type of concept.
Okay, thank you.
Brian.
Sharon, my second question is probably a reflection that we're coming at this from all different angles. So with the funds that we have them in the form we now have them, some form of a short-term focus. As you know, we've got reconciliations at the bottom of those fund statements. They should be leading someone to understand, leading the reader to understand that we're going from a short-term focus to a longer-term focus in another part of the report. Why aren't those reconciliations working?
So those reconciliations work for the people who look at them. But as Mrs. Weinberg testified earlier today, when you provide two bases, you're going to select the one that supports your view when you make your argument. And so why have a reconciliation? Why not just have the two funds, the government-wide and the fund level funds? I'm saying the two statements, why not have them on the same basis of accounting? Do away with the need for the reconciliation. And in my letter, I supported, short of putting all the funds on the full accrual basis, the alternative view presented in the exposure draft is a compromise.
So if we did, just another follow-up, if we did what you're proposing, go with a longer term focus in the governmental funds, do you think that's going to change the way government's budget necessarily?
My goal is long-term. I would hope that government budgeting would change. As we saw happen in the European Union with the movement to accrual accounting there. First, it happened at the reporting level, but then it ultimately is working its way into the budgeting level as well. So, but if we don't make a movement in that direction, we will never get there. And GASB, right now, you have an opportunity to make a movement in that direction by requiring reporting at the fund level to be on the accrual basis.
Thank you, ma'am.
Lisa.
Good morning, Sharon. Thanks for joining us. So your letter really focused on the proposals in the exposure draft related to the governmental fund statements. So my question for you is, I know you didn't address it in your letter, but do you have any thoughts or a position on the proposals related to the proprietary fund reporting that were presented there? And if so, what might those be?
No, quite frankly, I don't. I mean, the proprietary funds are already on an accrual basis, so I did not focus so much on the proposals that you have related to those.
Okay, so no thoughts on that additional performance measure, if you will, or the subtotal that would include operating income and non-capital subsidies?
So I have to say that, if the tweaks that you have made in the exposure draft, and I call them tweaks, I don't think it's a new financial reporting model. As I said before, I don't believe this is accrual accounting that you're proposing. It's another modified accrual accounting. You already have a modified accrual accounting at the governmental fund level. You're proposing a different modified accrual accounting. But the individual tweaks, when you go through the exposure draft and look at the subtotals and the description of the subsidies, and as you mentioned, the description of the transfers, there are improvements. You are making improvements. I would say that I don't think these improvements give rise to what you should be calling a new financial reporting model, however.
Thank you very much, Sharon.
Diane.
Welcome, Sharon. It's always good to see a fellow Coloradan. So I wanted to follow up on Brian's comment about the budgeting. And so my concern, we've heard repeatedly that those government budgeters and the councils, the legislators, they point to the statements that make them look the best. So if we went to the full accrual on the fund account or the fund statements, then what's going to stop these budgeters from saying, well, disregard that, that really doesn't count. Look at our budget to actual, and you can see we're in budget, under budget, and that we have a balanced budget. So how do we pull all of that together?
I agree that, reporting at the fund level on the full accrual basis is not going to fix the budgeting problems. And the required supplemental information is going to be very helpful in looking at the budgeting process and whether or not the budget to actual makes sense. And so I'm very supportive of the RSI on the budgeting level. And you remind me of something that our gentleman from Georgia, I think it was Alan, who said that, in Georgia, they take the budget and they don't touch the required pension contributions. But Georgia's a growing state with a growing population, a growing tax base. It's easier to make those decisions when you know your revenue stream is good. But when you have a mature workforce, a mature state or declining state population, and your finances are going the opposite direction, it's a lot harder to make those decisions. And I would say that we have more states that are like Illinois that are losing population, have a workforce, a government workforce that is aging, getting closer to the full retirement age of age 50 for some, where they will be collecting their pensions until age 94 or 99, however long they may live, as in Prince Philip, for example. And those decisions are a lot harder. And that's where we see, like the example Mrs. Weinberg gave of the Chicago Teachers Union. That's where we see the picking and choosing happening.
Thank you.
Jeff.
Sharon, thanks for being with us here today. I couldn't resist asking you one question, because you, in your letter, you do make some comparisons to private sector accounting and governmental accounting, and how governmental accounting promotes this short-term perspective. So I come from a user background in financial statements. I actually worked at a bond rating agency for over 20 years in doing governments. And how do you account for the fact if and we hear a lot from that the accounting sort of driving behavior. How do you account for the fact that within governments, the vast majority of governments in the US, 95% plus, are investment grade. And the vast majority of corporates in the United States are non-investment grade. 95% are below investment grade. So if we're looking at overall financial strength, how can it be the accounting that's driving the financial strength? Can you help explain that?
I think your governments are investment grade because of the power to tax. And yes, Apple can keep increasing the price of the iPhone, and I'll probably still continue to upgrade until at some point I won't. But at some point I won't, and I'll have that choice. Whereas the governments really do have you captive. You have to live somewhere in the United States. And yes, citizens are leaving Illinois and New York and Connecticut, New Jersey, and moving to Florida and Texas. And we see that starting to happen where the price of living in those communities has gotten to the point where it's too high. So let's try to keep the price from other places from getting too high. I would love to move to New York, but I won't even consider it because of how expensive it is to live there with the marginal tax rates that they have.
Right. So I think you're pointing up a key difference, right, between governments and corporations. And so that's why they can potentially make some decisions that they do, because they have that future revenue raising capability that, as you point out, a company may not have.
Right.
Right. Thank you.
Sharon, we've reached the end of our time. Thank you so much for your interest in our project and for taking the time to respond with your letters, as well as to come and dialogue with us today.
Well, let me tell you first who I'm not. I'm not an accountant. I'm not a financial expert. I'm not a budget expert. What I am, though, is a lifelong journalist and good government watchdog. My name is Andy Shaw. I spent 37 years in the news business in Chicago. Television, newspaper, radio. I was a political and governmental reporter for the ABC station in Chicago for 26 years. And after that, I ran a good government watchdog organization called the Better Government Association. In the past 2 years, I've been semi-retired, still on a couple of boards, still writing op-eds, doing some consulting. But I wanted to participate at the request of my friends in a local nonprofit called Truth in Accounting. These are folks who have spent a long time trying to force government to report its financial and budget matters in an accurate and a transparent way. And even though I'm not an expert, I pointed out to them in an op-ed, and I wrote an op-ed to this effect in one of the Chicago newspapers, that over the years, political and governmental reporters like myself were baffled by the reporting of government on their budgets and financial matters. And we never quite understood why the finances of governmental agencies got so messed up unbeknownst to us until freedom of information made a lot of that data much more available in the past decade. And groups like Truth in Accounting pointed out some of the shortcomings in the way governments both prepare their budgets and report their finances. So without being an expert, let me just say very clearly that many Chicago and Illinois-based governmental entities, including the state of Illinois and the city of Chicago, got into huge financial trouble, in part because they were misreporting their financial information. And by that, I mean, without being able to go through it from an accountant's point of view, let me just say that when you don't report out all of your debts and all of your revenues in an accurate, real-time basis, it's very hard for observers, whether they be media or watchdogs, to understand what the real consequences of your financial situation are. As a result, when you don't report your debts or your pension obligations in a real-time basis, it's very easy for those of us who try to watch budgets and understand them to be misled into thinking that the financial house is in order, when in fact it's not. And it's not until there are more accurate disclosures that we find out about enormous pension debts and unfunded liabilities, stacks of unpaid bills, and piles of other debts that haven't been reported out on a real-time basis. So when the budgets and the financial reports don't sync up the revenues and the obligations at the same time, I think that creates a misleading picture for people who try to understand the finances of government. And that's why, very simply, I agree with the folks at Truth in Accounting that you should be asking governments at all levels to do their budgeting and their financial reporting in a real-time, apples to apples and oranges to oranges basis. And by that, I mean that all of your debts should be reported out, even if they're not going to come due for a couple of years. They should be made clear on paper when you talk about your revenues, because just because an obligation, whether it be a borrowing or a bill or a pension obligation, isn't coming due that year, doesn't mean that it's not going to create a load for taxpayers down the road. And so my bottom line is that government should be asked, if not obligated, to let the public know through the media and watchdog organizations what its accurate debt load is at the same time they report their revenues, so that you know that you don't find out a year or two later that there are $10 billion worth of unpaid bills and $150 billion of unfunded pension liability, which is what the state of Illinois more or less has dealt with in the past couple of years. It's not an accident that cities like Chicago and states like Illinois are on a lot of credit watch lists. Their bond ratings are poor and have been, and their obligations are just humongous, in part because the reporting hasn't been accurate. And so I would just say, let's have our financial reporting and our budgeting done in a transparent basis that makes it, that reports out the debts even long-term at the same time you report out the revenues. And I guess that's my layman's way of asking you to do the same sort of things that Truth in Accounting asks you to do. Hopefully that makes sense.
I think we understand. Thank you, Andy. And we appreciate you being here and being interested. And we appreciate your perspectives, and accountability as a big part of, as an objective of financial reporting for governments under our concept. So, you know, citizens and are a big user. organizations like yours, media, reporters, all of it, having that accountability, playing a part in that accountability is important. And so we appreciate all that you do, and we appreciate you being here and sharing your views with us.
And we appreciate your willingness to listen to the public and to take it into account. So thank you for creating opportunities for lay people like myself, as well as the experts.
Sure. I'm going to start with kind of an overview, because you're not an accountant, right? And so I'm going to, like, in the way we see it, I guess, right? And so the current requirements and the requirements that are being proposed kind of have three perspectives being included in a government financial statements. One is government-wide, which is full picture of the entity, full economic resources, all assets, current and long-term, all liabilities, current and long-term, are reported in that government-wide perspective. They are now, and they will continue to be. And then there's a second perspective, which for governmental funds is this short-term perspective. And that's really the one we're talking about. It kind of currently has a short-term perspective, and we're trying to change it, but as proposed, it still is a different version of a short-term perspective. And then the third is the budgetary perspective. And budgetary may or may not be the same as that short-term perspective. Some governments budget using that perspective. Some, maybe most, do something that's at least a little bit different than that, something cash basis or close to cash basis, but it's typically a short-term perspective of some sort. And we can't dictate that. That's not our purview. Governments, by their sovereign abilities, have the ability to establish their budget practices and budget however they see fit. So we can't establish that, but there is reporting in that perspective included in our statements. Okay. And so the truth in accounting and your perspective is that middle part, that short-term perspective, should be really presenting more detailed information. Maybe it's segmented out, that same information that's in the government-wide statements on the same perspective, that it has all the assets, all the liabilities, et cetera. And so my first question, I guess, is if we did that, right? If we went down that path, would we be losing some kind of transparency? Because that short-term perspective is, at least in my view, is meant to provide citizens with some transparency about, hey, this was the revenue that came in to provide government services, primarily through taxes, and this is how we spent it for the year. And so that's that short-term perspective on some kind of consistent, hopefully comparable from government to government manner. We're going to show people, stakeholders, citizens, what came in and what went out. And so if we did away with that, if we said, no, we're going to report those in that long-term, so all that long-term stuff, are we losing some kind of transparency? That's my question.
Well, let me just say this, I think, and I didn't mention this in my statement, I think the real problem is the concept of a balanced budget is what I think has been abused by governments that I have paid attention to. We are told that budget A is balanced because at least within that fiscal year, the amount of money you're expecting to spend on your actual government activities does match what your revenues for the year are. The misleading piece is that your obligations are not just for that year. You may be able to meet the obligations that are due that year, but if you've entered into a 20-year, if you borrowed billions of dollars for infrastructure or whatever to be repaid over 10 years, your obligations are going to be significantly higher in other years as the interest rates accrue. So I guess my point is that I, over the years, and a lot of my colleagues have been misled by the concept of a balanced budget just because it seems to fit a group of numbers for that year. My only request, and again, I'm not in the reporting business anymore, so I don't have to do this, but my request on behalf of my colleagues in the profession would just be that when you report out, when you propose your budget for the year, you should also be telling us what things look like over 5 years or 10 years as a number of other financial factors come into play. Pension obligations, unpaid bills, debt service, a bill that what a lot of governments have done is they've decided to repay their bills over several years. And so it looks really good on paper because it looks like you're paying your bills that year, but you're only paying the bills you've chosen to pay. You're only funding a portion of the pension liability. You're only repaying a portion of your debt service. And as a result, you've told me your budget is balanced, but you have enormous amounts of obligations in out years that you haven't told me about. You're suggesting that when you see the bigger picture and the bigger financial reports, you're going to get all that information. And that may be true. And so maybe the fault was mine and my colleagues for paying less attention to that and more attention to the annual budget proposals. But I do think that when a budget's proposed by a branch of government, that budget proposal also should disclose more information about the longer term obligations and the longer term revenue expectations, just so you know that you may have balanced the budget on paper for that year, but here's where things stand over the coming years, so that in 2 years, when you ask for a big tax increase because you have a huge debt load, people understand, you're not catching people. I think it's healthier for politicians and government officials too, if they make it clear where things stand, so that the public will at least understand why there might be a need for a tax increase or some other revenue enhancement. So that's all I'm saying. I think the individual year budget should be a little more transparent in a long-term basis, so you aren't misled into thinking, yes, you balanced it for this year, but it's like saying you paid off this month's credit card debt, and so everything's fine. But if you look down the road, you owe thousands of additional dollars in credit card debt. That's going to be, you're going to have large interest payments on top of that. So maybe you've met that month's obligation, but your long-term problem is significant. That's all I'm saying. That would be my hope. You're muted.
I was muted. There's a lot I could explore there, but a couple other people put their hand up, so I will let them follow up. How about Brian?
Andy, I'm a fellow Illinoisan, so I know the issues that you're talking about very well, and I also watched your telecast many times over the years. So I thank you for your contribution to journalism. It was a treat watching you. And
even if I misled you,
I don't think so. So this question has come up with others who have essentially held your view. So I'm going to pose it also because I really am wondering about your reaction. As our chairman outlined a minute ago, there are a number of different perspectives in the financial statements, and that government-wide perspective offers some of the things that I think all the things you're really looking for. The issue seems to be that we've got other perspectives in there that people can point to as giving a different view. It would other states and other municipalities outside of Illinois and even within Illinois have been able to understand the differences between those perspectives and treat the numbers appropriately. Can you give us any insights into why doesn't it work in all venues? I mean, obviously there's a political component, but I like to hear you talk about it. Why is it that we're not getting our message through?
Well, I think part of the problem is disclosure, and I will acknowledge that a big part of the problem for me in my earlier reporting years was the fact that we didn't have a strong Freedom of Information Act. We did not have access to the financial data that might have enabled us to paint a clearer picture of the troubles various governmental entities were in. It's only in the last, Illinois' Freedom of Information Act was strengthened considerably 15 years ago. And I would say that in the last 15 years, the financial reporting by the media has been much better because we collectively had access to much better, we had access to much more accurate information. I think a lot of the misleading reporting about budgets in those earlier years was simply because we didn't have the data. We were told the budget was balanced, but we couldn't get the information behind the claim of a balanced budget. We couldn't get accurate enough information. I think, I'm not sure what creates a problem as serious as Illinois'. I mean, I don't want to say that the problem in Illinois and Chicago is based on the fact that we don't have, a proper matching of revenues and expenditures in the budgeting process, because I've seen financial reports too, and I know that they paint a much clearer picture. Maybe the problem is political. Maybe the problem is that there hasn't been enough pressure put on public officials to get their financial houses in order. If you look at Illinois, as I have, for some reason, voters don't pay close attention to this. I mean, it's wonky. Budgets, pension obligations, unpaid bills, debt load. Those are all kinds of, those are things that don't really affect people's day-to-day lives. It doesn't affect you until you're told that you have to have a massive increase in your income tax or your property tax. So I just think that what's happened is there's been very, very sloppy budgeting and fiscal management at a lot of levels of government in Illinois, and the politicians have gotten away with it. I mean, you know as well as I do that as bad as the conditions are, at least in Illinois overall, the usual suspects tend to get reelected every year. That's a different issue. We could talk about gerrymandering and the whole redistricting process as a big problem in maintaining the same people in political offices. But I just don't know. I'm only speaking, this is a hearing on one issue, and I guess as a relative novice in the financial arena, I guess the best I can say is tell us more. When you present your budget, tell us more. Don't expect that we're going to really go through the 100 pages of the annual financial report and pick up all the nuances. Spell it out a little more clearly from the get-go. And I think, we can't control the politics, but we can at least control the accurate flow of information. I don't know if that answers your question, but that's my best shot.
I do appreciate your feedback, and thank you. It's a pleasure having you here.
Well, thanks for having me.
All right, how about Jim?
Good afternoon, Andy. Thank you very much for being here. And as a resident of Missouri who has been to Chicago a couple times, and a couple of times being a vast understatement, I have had the pleasure of reading your reporting at times. And so I certainly think you gave it a best effort. I do want to make a very plain first that reiterate what I think the chair said, and that is that the GASB has no authority to promulgate how a government should budget. Instead, that power is reserved to the states and to the local governments as part of their sovereign powers. So unlike where we do have the power to establish generally accepted accounting principles for external historical financial reporting, given that budget requirements and the ability, how tight those requirements are or aren't, vary from jurisdiction to jurisdiction, certainly across the country, and I think even in particular states. Do you believe that within financial reporting, historical financial reporting, we should be emphasizing the budget, putting a spotlight on it, given that it is prepared in accordance with the particular requirements that jurisdiction establishes for itself, or that a state, for example, establishes for a municipality? Or should we be de-emphasizing that? In other words, does the degree of emphasis contribute to what you see as a problem or not?
I think what you may not have regulatory or budgeting power, but you do have a bully pulpit. You have a great platform for encouraging best practices. And I think all I could encourage you to do is to promulgate rules and set out expectations and hopes and wishes that would that would require local governments and state governments to budget and to budget as accurately and as transparently as possible. In other words, I think that information is our most important tool in this environment. And I think the more accurate information we have about the financial condition of our governmental entities, the easier it is to make decisions about how well people are running them and managing them, and then maybe make smarter electoral decisions at the ballot box. So I guess that may be a long way of saying that your chairman talked about having three buckets here that you talk about. And I'm just saying that when the budget comes out, I think the budget also ought to come out with more emphasis placed on the other buckets, so that reporters and the public will have a clearer sense of the longer term health or illness of a governmental entity than they'll get just from the actual budget itself, which claims to be balanced, but all too often is anything but balanced in an overall sense. That's the best I can suggest, again, as a non-expert.
Thank you.
Alan.
Good afternoon, Andy. I appreciate you being here. I spent the last 12 years as the state controller of Georgia, so I spent a lot of time dealing with both the print and electronic media in Georgia, filling a lot of those open record requests. And so I very much appreciate your need for that, and also the process we had to go through to get that. And so I appreciate, and it's funny, as you're speaking, I'm hearing other people from my home state speaking to me in very similar ways, some of the journalists, so I appreciate that. And it was interesting this morning. I was going through, I'd actually opened up Illinois' report, and I was going through, and real quickly I could find in the report, the 150 million in OPEB pension liability and the 40 million in OPEB liability and the 30-something million dollars in general bond debt that's out there that you're talking about, they don't talk about. And I found it very quickly this morning. With that said, I'm probably obviously on the other end of the spectrum from where you are. If you're not an accountant, I should have been able to find that really quickly because I've been a state controller for the last 12 years, right? So I get that perspective, right? But what it made me realize when you were saying that is, I wonder if, and again, I'm not trying to diverge from what Truth or Accounting is saying at all, but I just wonder if in this current world we're in, are we missing an opportunity, or is GASB missing an opportunity to, for outreach for those type of folks, like in your subset of our user group, right? To help explain that this is how these different three buckets fit together that are in the report, and here's where some of this data is in the report. So you have a better way of saying, well, when they point to this number, I know how to go look for, I know how to find these other numbers over here, and then I can ask the right questions to get to the answers I think you're trying to get to. Because again, I found them very quickly, but again, I'm on the under the spectrum. So I wonder if there's an opportunity for us or potentially to just do some outreach in terms of helping folks understand where they would go to look at those three buckets to find information.
Yeah, I think that's a great question. And by the way, my wife and I spent 2 weeks on Jekyll Island recently. And so we dropped a few dollars in your Georgia coffers.
It's a beautiful place. I hope you like it.
We had a great time. I think you've really touched on something that's really important. And that is, I wish earlier in my reporting career that I'd had a little primer course in, you don't need to go to you don't need an MBA to do this, but I wish there'd been an opportunity to get a little primer in budgeting and accounting so I would have been a little more prepared. I remember early in my journalism career, Northwestern offered a wonderful 6-week course in kind of urban affairs reporting and, housing and all the things related. And I know there was a piece on budgeting, but I just think that it would have made my life a lot easier if I'd been a little more up to speed on the nuances of budgeting and financial reporting. I certainly understand how gerrymandering works, and I understand how elections work and don't work and all that. What you're going through in Georgia is a pretty good story too, by the way. Sorry you lost the All-Star game. What can I say? We won't argue that one. But what I was going to say is, I wish I'd understood accounting and budgeting as well as I understood the politics that I covered, because I think I would have been able to, A, understand the buckets better, and B, report them better. I think nowadays the financial reporters are a lot smarter. They do have access to much more information. But I just think I get back to this basic point, and that is that I think you ought to encourage government to stop claiming balanced budgets when budgets really aren't balanced except by one narrow definition. And that I think that causes as much problem as anything. When you say you're presenting a balanced budget, the taxpayer and the regular citizen assumes that everything is fine. Because again, they're busy with their lives and the budget's balanced, all's well. And then 2 years later, you have to ask for a big tax increase because you hardly were balanced. Your debt load, your pension obligations, your unpaid bills were out of control. So I just wish there was a way to make it easier to report out the accuracy without having to, when the budget's released, sometimes the financial report for that year doesn't come out for like 3 or 4 months. So by the time that comes out, you're way past the budget process. There's got to be a way to make it easier, and I trust you guys can figure it out. I'm only speaking as someone on the outside who found it confusing.
Thanks, sir.
All right, Andy. I had another question all lined up, but I looked at the clock and we've reached our time. So it was really great talking with you. We really do appreciate that you came and shared your perspectives. You've given us insights that we just couldn't get other places, and so thank you for that. Thank you for taking the time to do that, and we certainly will be considering all of this as we move forward. So.
Yeah, and I look forward to your group coming to Chicago or Illinois in person when it's safer and healthier. And maybe down the road at some point, you could do a morning seminar for reporters on this whole topic, because I mean there are hundreds of us out there that could use a little more help in doing the best reporting we can for the in the interest of public awareness and public information. So hopefully we'll see you in our great city at some point.
That all sounds great.